Thank you, Shabano. Thank you very much for the kind words. Assalamu alaikum, everybody. Dr. Shamshad Akhtar, Chairperson Karandaaz, panelists, moderators, ladies and gentlemen. Assalamu alaikum again. I am very, very excited about today. We have been working on these research studies for quite a while now. It's the green agenda that we launched a few months ago, or maybe nearly over a year ago, is taking its shape. So I'm quite excited about the entire day and that we are starting this policy dialogue. I feel great pleasure in welcoming you to this webinar and on this very important day that emerging issues, renewable energy, energy efficiency and green financing in Pakistan will be discussed in that much detail. Pakistan remains among, unfortunately, the group of countries which are most vulnerable to climate change. I would not go into too much statistics, and you will hear lots of them later today. But the ND Game Index, which summarizes a country's vulnerability to climate change and other global challenges in combination with its readiness to improve resilience, ranks Pakistan at 152nd amongst 181 countries. Pakistan is expected to face a greater than average rise in average temperatures across its territory by the 2050s. This could significantly affect its current water resources, exposing an additional 5 million people to the risk of flooding by 2035 to 2024, and affecting yields of many important crops in the country. People who are active in agriculture, if you talk to them, the cropping patterns around the country are already changing. There are some winners, but overall, the real thing which is of worry is that nobody can predict what is going to be the outcome of the crop yields, our staple crop, our cash crops, and nobody is monitoring them that closely. So that's the real worry. As you may know, Karandaaz, which was established in 2014, focuses on improving access to finance for unbanked and underbanked individuals and micro, small, and medium enterprises with the ultimate aim of creating jobs and improving livelihoods. Now, development finance is not a simple area. It demands sophistication, and the offer has to be comprehensive and needs to fully appreciate the demands of its client base. Within development finance, green or climate finance is perhaps one of the most neglected areas in Pakistan. And that's why we have chosen, Karandaaz has chosen it to be a key pillar of our portfolio. And then we are approaching it comprehensively using a variety of instruments: credit, direct investment, challenge fund, and last but not least, the research and policy dialogue. Today's webinar is one such example through which we are launching 2 original studies done on green financing and climate smart housing. Now, I'd like to explain why the area of climate change is so important to Karandaaz and why we feel the need to be active in this landscape. Of course, our efforts need to be complemented in equal measure, if not more, by stakeholders in both public and private sector. There is already recognition of the fact that climate change has grave consequences, in particular for low-income households. This is also the case for smaller businesses. So it's not difficult to imagine that the poor face the brunt of poverty more compared with when the economic conditions are worse compared with the rich. While small businesses and low-income households are not major generators of greenhouse gas emissions, there is evidence that shows climate vulnerability increases financing costs for firms and worsens firms' access to finance. Such problems are particularly pronounced for MSMEs, which have scarce resources to capital markets and often struggle to access formal financial services. Today, we have designed the webinar in a manner that it would enable participants to learn about green financing opportunities in Pakistan, introduce them to some of the key players of renewable energy and energy efficiency in Pakistan, learn what type of green asset investment funds look for, potential of climate smart housing in Pakistan, and the drive to net zero. There's a special session on green buildings too, an area destined to see massive investment activity in years to come. And I'm proud that Karandaaz is one of the early entrants showing market way to this underexploited asset class. It's a matter of time we will see green REITs, real estate investment trusts emerging in Pakistan. Countries in the developed and emerging economies alike are moving towards innovative solutions and technologies in both energy efficiency and renewable energy through creative financing solutions such as bonds, climate adaptation funds, wholesale financing facilities. This financing has gone to a whole host of economic segments such as buildings, water, transport, electric vehicles, land use, and among others. The bond market alone, despite reaching $1 trillion in issuance in 2020, has not reached its potential. Within the bond market, sovereign issuance has reached $171.5 billion, which includes 17 countries and another 14 potentially entering the clubhouse as of 2021. A big Islamic green financing market also exists, with global assets of $2.1 trillion, which are expected to grow at 5% for the next 2 years. The issuance of a green bond, green banking guidelines, SPP's concessional finance facility for renewable energy, and SECP's green bond guidelines are all steps in the right direction and are an appreciation of the vital role needed to be played by the regulators. The market needs innovation though. For instance, first PKR green bond is yet to be issued in Pakistan. I have actually given a task to my team this year that we should be the ones designing and launching it. Let's see. I do not want to make a commitment, but we'll try our best, inshallah, this year. The bad thing is that we are way behind the rest of the world. The good thing is that we don't have to innovate something de novo. The commercial viability and evidence of green technologies in every area has been irrefutably established in advanced markets. Financing templates also exist. We have to open ourselves to change, and I would like Karandaaz to act as an agent of this green change in Pakistan. We are positioning ourselves as intermediary of knowledge and capital between Pakistan and the advanced markets. The management is fully supported by our board. Chair, whom you will hear after me, is herself passionate about greening agenda. And we are questioned by our investment committee quite in detail on the impact and from a green lens on what the investments that we are going to make. Now, in the end, I would move to thanks. I would like to first thank the chair for her participation and constant guidance to Karandaaz and the management team. I would like to thank FCDO, who are our sponsors, and Annabelle, Development Director, who will be speaking about FCDO's vision and delivering closing remarks of the event. My special thanks also to high-profile speakers during the day. And last but not least, KPMG and Real for their excellent work in collaboration with Karandaaz on the 2 research studies that will be launched today. I would also like to mention Meher and Ali Akbar, who have worked to put together this webinar today and also supervise the entire research work during the year. Thank you very much. Over to you, Shabana.
Thank you, Mr. Waqas, for sharing your thoughts. I would now like to welcome Dr. Shamshad Akhtar, Chairperson Karandaaz. Dr. Akhtar is an economist with broad-based development experience and has held a range of senior positions at national and multinational organizations. Dr. Akhtar served as the Finance Minister of Pakistan, holding multiple economic portfolios in the caretaker government and as the Governor of the State Bank of Pakistan. At the international level, she has served as Under Secretary General of the Economic and Social Commission at the Asian Pacific, UNSCAP, as the UN Secretary General's Senior Special Advisor on Economics and Finance. Dr. Akhtar oversaw the development and implementation of the 2030 Sustainable Development, Finance, and Climate Agenda. She served as Vice President, Middle East and North Africa at the World Bank and Director General of the Asian Development Bank, ADB. Dr. Akhtar has a PhD in economics and a postdoctorate degree from the University of Harvard. Presently, she is the chairperson of the boards of Pakistan Stock Exchange, Pakistan Institute of Corporate Governance, the Soy Satran Gas Company Limited, Engro Pakistan, and Karandaaz Pakistan. She is the member of the advisory board of the Sustainable Finance Center, SOAS, in the UK. Dr. Akhtar remains engaged in both global and national policy dialogues and is the global advisor for the Belt and Road Initiative and Policy Sherpa for Boao Asian Forum and the advisor to the Shanghai Forum. Dr. Akhtar, ladies and gentlemen.
Thank you, Shabana. I hope you can all hear me.
Yes, ma'am, we can hear you.
Okay. So a very warm welcome to our financials, particularly Annabelle, who's probably not here as yet, but I'd like to acknowledge that she will be joining us. Wakas, and of course, a number of Karandaaz colleagues. Like to also say a word that I'm really delighted that the energy service providers of renewable and energy efficiency and related areas are participating in this dialogue. We hope to learn and benefit from their practical implementation experience and what they are facing on the ground. Also, I'd like to acknowledge the presence of other distinguished panelists, some of whom I have worked with. So thank you for being there. Colleagues, all of you climate fanatics are aware of the fact that adversities of climate change have and will continue to harm our landscape, economy, and ecosystem. Pakistan is a victim of cross-border greenhouse gas emissions, and domestically, we have not safeguarded our planet effectively, given the demographic stress, the high population density with it, unorganized growth, inappropriate investment choices, and deep entrenched behaviors and social norms that have resulted in inefficient resource allocation and use. And in midst of COVID, we have reversed the progress we had made on poverty eradication, like a number of other countries did, face the same challenge. But to its credit, Pakistan is a signatory of various climate change treaties and international framework, and has adopted a national climate change policy and framework for its implementation and guidelines. And it has organized a framework for refinancing at competitive rates, which has been introduced by the central bank for green financing. At the same time, the Securities Exchange Commission has offered guidance for green bond issuance in Pakistan. And PSX has registered now for acquiring the Sustainable Stock Exchange status. It's just happened a couple of weeks back. And we have also played a role in green sukuk and bonds. And we are hoping that we can help green and sustainable infrastructure financing by raising both equity and debt from the capital market. So I do hope that Karandaaz will play a role by actually raising this equity and debt from the PSX, because that is the most documented sector of the economy and it is the most organized at present. There has been substantial governance reforms of Pakistan Stock Exchange to provide comfort to a range of investors. These initiatives should lend confidence to the official international financing providers, both GCF and MDBs, to take greater exposure of climate intervention, given Pakistan is the fifth most vulnerable frontline state. Ironically, the international assistance is well below, and GCF has cumulatively offered to date less than probably $500 million, if I get my numbers right. Pakistan's climate mitigation and adaptation requirements estimates suggest that climate adaptation alone requires anywhere in the range of 7 to 14 billion annually. So we are totally underserved by the international community. And I'm told that both the World Bank, IMF, and World Bank and Asian Development Bank, and also Asian Infrastructure Bank, are raising the proportion of their financing flows for for climate mitigation and adaptation, and also providing a lot of technical support. We know that IMF has set up also a special facility. It's the SDR, through the SDR allocation for this purpose. And it has built the architecture for climate stress testing and also other things that go with raising green financing. To me, COP26 was promising, despite a lot of disappointment around it. It has indeed tried to raise the NDC ambitions. And while we may not be fully there, but we are getting to the goal of 1.5 degrees centigrade. And several private alliances and institutional investors are committed to finance the transactions that would help countries, corporates, and citizens to realize their goals for net zero emissions, subject to effective strategization and implementation of projects. We have been able to galvanize almost 24 corporates to commit to net zero at the COP26, and the demand for financing from those corporates is likely to be going up. And Karandaaz, like other providers, have to be supportive. We look forward to the stewardship of our government on fast-tracking Pakistan's climate strategy and action on different frontiers. At a broader level, to leverage both international and domestic financial markets, Pakistan needs more coherence, coordination, and collaboration to mainstream and integrate climate strategy in country's growth model. Federal and provincial planning and budgetary frameworks have to be aligned by factoring in environment, technology, and social elements in the production function to enhance preservation, productivity, efficiency, and inclusiveness. This has been done by a number of early starters. In particular, I have had the benefit of working very closely with Korea, and Korea has provided a lot of capacity building at the UNSCAP platform, where I was there for some years, and it has benefited a range of Asia Pacific and even some of the African economies. At the same time, federal and provincial, as well as local governments, have to interface better and reinforce through getting a common enabling policy, legal, and regulatory frameworks, which would go a long way to expediting delivery and keeping transaction costs manageable. So as I see, Karandaaz's work is cut out, not only as a financier, but also to work with the government in a holistic manner to allow for this integrated approach and a coordinated approach, whole of government approach to getting things right, because it doesn't matter where our transaction is located as long as it's harmonized in terms of the frameworks. Karandaaz's research table for today's deliberation offers perspectives on Pakistan's key initiatives. It is a very detailed report. It gives the history, but it also is futuristic. It gives the analytics and it gives recommendations. If pursued effectively, it will have potential to be a game changer in decarbonization of the country, which to me is absolutely the #1 priority in any country if we are to achieve a degree of carbon neutrality. But it is subject to our achieving expeditious resolution of sector issues and challenges. And by that, we know we don't have to go very far. Our power sector has a lot of problems that we need to solve. And we have to fix this by enabling sector and regulatory frameworks, developing public-private partnership to leverage private capital with appropriate risk mitigation and management frameworks. In some of these areas, again, Karandaaz can play a very instrumental role. It's been doing that in the development finance arena now since 2014, as Waqas mentioned. Few promising initiatives at Pakistan level are noteworthy. First, I would be amiss if I did not recognize 2019 alternative and renewable energy policy, which was done as I was in the energy sector myself. Now, if proactively implemented, it will promote low carbon pathways as it targets a change in energy mix, which will be of historical proportion in context of our country, by lifting the share of renewables to 20% by 2025 and 30% by 2030. Complementing this target is raising the share of hydro capacity to 30%, on which work is underway. But we have a tradition to do both mega as well as small hydropower projects in Pakistan. Advancement in this area will help resolve energy crisis and reduce the dependence on imported energy fuels such as oil, coal, and LNG, with Pakistan, we need to recall, has given a statement that it shall not endeavor or go forward with a new coal project. But all this has exposed the economy to dependence, import dependence has exposed the economy to international price shock when the global inflation and oil prices are at all-time high. Climate mitigation anchored on renewables and energy efficiency will of course help ease the balance of payment and fiscal pressures that has put the entire economy at a risk. And the resources that are released by removal of subsidies and some of these stresses will help us create fiscal space and foreign exchange reserve space to fund cleaner pathways. Pakistan, of course, is falling short of its target at present already, as the share of renewable energy in the total energy mix went down to 2.2% in 2021 by 0.2%. So we have significant catching up to do in the next 3 years. Qualitatively, the alternative renewable energy policy has potential as it infuses new energy architecture and dynamics with a shift from cost plus and upfront fixed tariff regime for power projects to competitive bidding for all renewable energy projects, subject to strengthening of policy and regulatory frameworks in some areas and rationalizing the incentives and benefits to attract potential renewable energy investors. Our report points out that one issue is the policy to transfer the risk of intermittence, source of risk, entirely to renewable energy projects, which will be difficult to solve. Providing grants to absorb transaction costs or exposure to certain risks can improve investment viability. So rather than subsidies, there's need to facilitate attractive financing for debt or equity into the capital structure of low carbon projects, and of course, supported by favorable policy environment. The distributed generation and net metering regulations of 2015 states that renewable energy generation has to be through a distribution companies' interconnection points, and we hope that these distribution companies can be uplifted or privatized. Market demands and realities, however, vary. For example, power can be distributed through an off-grid or an on-grid solution, where in the former, it can be broken down by the PPA, rental, or EPC contracts or a captive plant. Even within off-grid solutions, distribution can take place through microgrids or pay-as-you-go solutions. These different methods of distribution have different business cases that need to be guarded by proper policy and regulatory treatment. While alternative renewable energy brings in competitive bidding regime in place of unsolicited procurement regimes, distribution generation units like microgrids that are not availing wheeling or net metering services are undocumented with the regulator and no formal project development approvals are obtained by provincial agencies or NGOs for these areas. So until Pakistan develops a sizable domestic production capacity and a conducive tariff regime for importing renewable energy production, which accounts for 95% of the market demand. Let me touch upon very briefly energy efficiency, which is also a subject matter that our team has dwelled into. And it has offered about 4 billion of investment opportunities as we promote energy efficiency improvements across the industry in a number of industrial sectors like textile, steel, foundry, sugar, and ceramics, and so on and so forth. So we have great potential of savings, but also electric vehicle policy of 2020 offers to 2025 offers us renewed opportunity to have the right enabling framework to be able to have additional energy efficiency and savings through the electric vehicles. Now, to conclude, as Vikas pointed out, and the whole board is behind him, that KRN is planning to increase the proportion and involvement in the green financing, and the green financing with its investment portfolio is likely to rise from 2% in 2021 to about 18% in the short term. But then we hope it can be scaled up. In the renewable energy space, Karandaaz has, of course, already supported 16 megawatts of solar energy ventures launched by 2 leading solar energy contractors. Karandaaz provided working capital for the import of solar equipment. Karandaaz will also be leveraging more climate action through its investment platform, deploying its green strategy and mandate. Some of it has been described in this paper. We are supporting an internationally certified green building on the main Korangi Road, measuring about 9,000 square yards, with a potential to reduce energy utilization by 1,150 TCO2 annual, and emissions will follow. A reduction in emissions will follow. It's the first investment towards building such an asset, which has potential to be rolled into Pakistan's first green real estate investment trust. Karandaaz has also floated a green challenge fund, and it's through a competitive process. It is now supporting efficient water management and efficient plastic waste management projects, providing financial and technical support for commercially viable solutions. Karandaaz is bringing together technical expertise, private players, public sector, and financing different vehicles to deploy green financing options, which will help us raise the game for financing low carbon pathways, including renewable energy, energy efficiency and conservation, and other forms of climate-friendly generation. Demand for financing and technical expertise is phenomenal in our country, and Karandaaz with FCDO and foreign collaborators further, including the private collaborators, would like to complement its FCDO grant funding with any other sources of funding that will help raise the climate or green financing. We, of course, have floated a range of subsidiaries that offer credit enhancement options, both for sustainable infrastructure or green infrastructure, and hopefully for green SMEs. And also we offer SME and microfinance credit through entities like Parvaz and Pakistan Microfinance Company, which has unique strength to offer green finance. So to conclude finally, I, along with my colleagues, are here to learn from industry of the regulatory and operational challenges you face across the deployment of green technology, green financing instrument, and green buildings and any hurdles that we face in reaching the net zero emission standards. So with this, I'd like to conclude, but most of all, I'd like to thank my colleagues of the Karandaaz, but also those who have so competently steered this piece of knowledge platform work. I would be amiss if I didn't recognize Meher and her colleagues who have done fantastic work in trying to strategize this study and bring in all the research material as well as all the practical knowledge that we have gathered across Pakistan. And we look forward to hearing from all our competent and intellectually strong and committed green drivers who are going to be our future partners. Over to you, to Karandaaz, in whichever place you are, whether you are in Lahore or Karachi or you are in Punjab. We are here to listen to you all. Thank you.
Thank you, Dr. Akhtar, for sharing your very insightful remarks. Unfortunately, Senator Shahri Rahman could not join us today due to a meeting being called at the PM House. However, we will be moving to the next section of our webinar. We would like to share a short video with you guys. The short video is about Karandaaz's equity investment in EBR Energy. EBR Energy is the first Karandaaz investment in the distributed solar generation segment of 75 million rupees facility to the company, to facilitate the import of solar equipment to be utilized in a 3.86 megawatt solar project, which is the largest rooftop solar project in Pakistan. The project has the capacity to generate 5.042 megawatt hours of clean energy per year and reduce 3,750 TCO2 emissions annually. Please have a look at the video. Thank you.
According to Climate Risk Index, Pakistan is the 5th most impacted country in terms of climate change. To slow down and reverse this impact, Pakistan needs to invest substantial amount of capital in climate mitigation and climate adaptation strategies.
The target set by the World Bank for Pakistan is to be dependent and reliant on renewable energy up to 30% by the year 2030. EBR Energy is a renewable energy solution provider. We specialize in solar technology. Our mission is to help Pakistan reach its renewable energy targets. Industries are going to clean energy not only for the financial benefits, but also for reducing carbon emissions and for the environment. During the past 4 or 5 years, the costs has reduced internationally. So we are seeing a payback of a solar project anywhere between 3 to 4 years. This was much higher a few years ago. This is very attractive because the source of energy is achieved for 25 years. And if you see that the payback is under 4 years, then the rest of the tenure is all your profits and savings.
Karandaaz is looking to provide equity and credit capital to those companies that are in that business of providing installation of green energy and also other services and finding it hard to raise capital in their space. The objective of Karandaaz doing this is that as a demonstration effect, it'll reflect that not only are these investments or financings not as high risk as perceived by the financial institutions or investors, but also contribute greatly to the objectives of reduction of climate impact. Karandaaz to date has invested or provided financing to 3 pioneering companies. One of them is EBR Energy, then there is Nizam Energy, there is Rion, and then of course there is Albario Engineering.
We are happy to partner with Karandaaz. Karandaaz has been a great support to us. We were able to fulfill and complete one of the largest rooftop solar projects installed in Pakistan, which is Interloop. It is a 3.6 megawatt installation of solar panels supported by 29 Huawei 100 KTL inverters. And it is catering to almost 50% of Interloop's daytime energy requirements. Karandaaz facility, financial facility, played a pivotal role. We were able to use their credit limits to import the panels and bring in the imported material. It helped us a long way. Our mission is in line with Karandaaz's mission to promote and help Pakistan reach its renewable energy targets. And that is why we were able to collaborate and work together for achieving the success of this project. And we hope to work with Karandaaz to establish and install more projects in the future.
I hope everyone enjoyed the video. We will now proceed to the first presentation of the day, which is on green financing, renewable energy, and energy efficiency in Pakistan. Mr. Kashif Malik, partner KPMG Hati Tasir and Co., will be presenting and will take your questions at the end of the presentation. Kindly leave your questions in the question and answer section. Thank you.
Thank you, Shabana. Let me put my presentation. Can you share my? Can you see my screen? Yeah.
Yes, sir, we can.
Thank you, Shabana. Thank you for the introduction, and thank you, Wakasa Karandaaz team, for providing us this opportunity. It's a privilege for KPMG to participate in this event and to work for Karandaaz. So this brief presentation covers the three distinct areas, that is green financing in Pakistan, renewable energy in Pakistan, and energy efficiency in Pakistan. We were engaged by Karandaaz to carry out a thorough research on green financing, renewable energy, and energy efficiency segments in Pakistan. It was an exhaustive scoping study to identify opportunities, challenges, and way forward for Karandaaz. The study was based on literature review, consultation sessions with key stakeholders, and consultation sessions with some experts within our network for regional benchmark. In terms of what green financing is, it's all about augmenting the financial flows to sustainable development priorities, whether it's from public sector or private sector or from not-for-profit sectors, whether it is from core commercial banking, microcredit, insurance, or investment. The global green financing market is growing at an aggressive pace. In the COVID year, the issuance was around $220 billion, which was slightly shorter than 2019 issuance of $266 billion. In 2021, the global market achieved a trillion mark cumulative for green investment. And with the climate agenda, 2030 agenda, emission reduction agenda, the next green financing goal for the global financial system is $1 trillion per annum. As we all know that since the year 2007, we are facing an energy crisis. A number of projects came online during that period, last 15 years. But again, majority of projects were on imported fuel like oil, coal, and LNG. So an import-driven policy is not sustainable for Pakistan. Apart from the load on the foreign exchange reserves, it also exposes to energy price shocks that we are currently facing the worst part. As Dr. Saab earlier mentioned, that the ARE policy 2019 is considered as the most important and key step towards promoting renewable energy in Pakistan. And if implemented in its true sense, this would be a game changer. In 2016, State Bank introduced a refinancing scheme, concessionary refinancing scheme for renewable energy projects. As of June 2021, 53 billion rupees was disbursed out of this financing, financing 717 projects of approximately 1,082 megawatts. State Bank also issued green banking guidelines, non-mandatory guidelines, targeting or encouraging the banks to introduce environmental risk management frameworks. Into 2021, Pakistan issued first green Euro bonds in the name of Indus bonds. These were for Jamid Bhasha and Muhammad Dam. The term was for 10 years. It was a $500 million issue at a price of 7.5%. That issuance was oversubscribed by 6 times, reaching close to 3 billion mark. And the offering process was supported by all top companies like Goldman Sachs, BlackRock, Buble, Fidelity, Ashmore, M&D, and UBS. The co-runners included Doce and Standard Chartered, and HBL was the co-local manager. We understand, based on discussion with various ministries and government officials, that currently government is working on several green financing instruments, including blue bond, nature performance bond, and debt to nature swaps. Because of the concessionary financing from State Bank of Pakistan, which is the primary contributor so far, the primary ecosystem that the commercial banks are not finding it easy to compete with such schemes, because primarily because of the pricing. The central bank spread is around 2%, and the maximum end user rate is 6% fixed. So we understand that the State Bank has created the initial market for RE project financing, and it would be phased out over time. While State Bank has recently, last week, extended this financing scheme for another 2 years till June 2024. SECP issued green bond guidelines in 2021. Any corporate can go for private or public placement in the form of green bond, but so far we have not seen any transaction under these regulations or under this framework. Pakistan engagement with GCF and other multilateral agencies. GCF is a critical element of the historic Paris Agreement. GCF is the largest climate fund. According to GCF, currently it has 4 projects in Pakistan and has allocated financing of $131 million. 2 projects are adaptation projects and 2 are mitigation projects. Last month in May, another project was approved, which is for distributed renewable energy generation, where the implementing partner is GS Bank. So in 2017, Pakistan developed a state strategic framework with GCF which outlines the priorities, the roadmap for the future interventions or future partnership with GCH. As per the strategic framework, Pakistan requires between $7 to $14 billion investments per annum for the next 5 years for the clean environment agenda. The government is also in the process of developing a national adaptation plan for creating further framework to guide the implementing agencies on mainstreaming the medium and long-term climate change efforts. Pakistan government is also engaged with other international partners, which are GCF accredited partners like UNDP, FAO, World Bank, Occupant Fund, UNEP, IUCN, KFW, ADB, and WWF. So now coming to renewable energy in Pakistan, there are a number of studies from World Bank financed projects. The solar segment provides a highest potential of around 2,900 gigawatts in the country. The wind power potential is around 130 gigawatts. For the biomass, the gas is around 2,000 megawatts, and small hydro potential is around 1,500 megawatts. So we have huge potential for renewable resources. So under the ERE 2019 policy, initially the 103 projects were identified for the competitive bidding of 6,482 megawatts. But again, the process is pending for quite some time because of the finalization of IRZs, interconnection ready zones by NBC, and this has been hanging on for quite some time. In terms of distributed generation, solar installations, there has been a lot of development in the market over the last 3-4 years, whether it comes to a residential domestic segment, on-grid, off-grid, commercial segment, industrial segment, and the public sector. We have used various market modeling tools to estimate the demand for various segments. So again, the demand potential is huge for solar installations in Pakistan. Domestic is around 14,000 megawatt, commercial 3,000 megawatt, industrial is around 7,000 megawatt, and agriculture is around 4,600 megawatt. The mini and micro hydro projects are primarily done in KPK and GB provinces in partnership with SRSP, AKRSP, and P2. But again, all these projects are mostly done on community service basis and under the grant model. For this component, the policy guidelines are also not clear. So because of the low tariff and appetite of customers, the commercial viability of this model is still not attractive for investment. The off-grid rural market, again, unelectrified villages has been mostly done on a grant model. There are 31,430 villages in the country which need electricity. Now, coming to the energy efficiency in Pakistan, as per NICA, over $4 billion of investment opportunity exist in the energy efficiency market in Pakistan with a payback of around 5 years. Even you pick up any industry or any sector, there is a potential for energy efficiency or savings. For example, in the textile segment, the saving potential is around over 2,000 megawatts. Steel and foundry segments, we have the worst benchmarks when compared to the region. Sugar industry, there is a potential for further projects of around 138 gigawatts per year. Leather industry, the potential is around 17 gigawatt hours Ceramic industry, again, our efficiency norms are 70% low to the international standards and benchmarks. Dairy processing sector, there is potential of 45% energy savings as per Renewable study. Paper and pulp plants, again, there is 22% margin on energy efficiency. Other industrial segments, if you go to a diversified industries, again, in each and every unit, there is a potential of 22 to 30% just by introducing automated panel systems or zigzag technology in the kilns. Building segment is again a key segment which need attention, but again, the policy frameworks are yet to be developed to respond to the market. So MICA is working independently on some codes. There has been some work on certain codes. Punjab and PICA have already modified and implemented a regulatory framework. Transport sector again is the largest consumer of energy, around 34%, and an EV policy was introduced with changes and hanging around for quite some time. We think that for the EVs, there is still way to go because of the infrastructure requirements and investment requirements. Other segments include the transmission and distribution segment, agriculture segment, household segment. Each segment provides a significant potential for energy savings. But again, in terms of energy efficiency in Pakistan, there is a huge potential. A lot of studies are there which indicate the targeted potential in specific industries. But in terms of the groundwork, there has been a very little progress. So this is the banks are generally reluctant to finance this segment, and from the central bank, there is no specific facility available to target the segment. Thank you, sir.
Thank you, Mr. Kashif. We will now be running a quick poll. Kindly engage on the questions displayed on your screen, and we will share the results shortly. Thank you. Please engage on the poll, and we will share the results shortly. Thank you. Thank you everyone for your participation. Ladies and gentlemen, the current electricity supply, demand and gap in Pakistan is 3,352 megawatts, and 31,430 villages in Pakistan still do not have electricity. Thank you for engaging. We will now be moving on to our first panel discussion of the day. I would like to welcome Mr. Naveed Garaya, Chief Investment Officer, Karandaaz, to moderate the first panel discussion on regulatory and financial constraints in the renewable energy generation, distribution, and efficiency. Mr. Garaya has over 30 years of experience leading investment banking and asset management business in various global banks in MENA, North America, and Pakistan. He has been the Chief Investment Officer of Karandaaz for the last 4 years. Before joining Karandaaz, he was leading a strategic advisory firm in New York. Prior to that, at HSBC USA, Naveed advised global fund management business of HSBC Amana. Mr. Garaya has an MBA from IBA University of Karachi. He also serves on the boards of several investee companies of Karandaaz. Over to you, Mr. Naveed.
Thank you, Shabanu, and thank you to all the panelists and the audience to be here. I'm honored to launch or kick off today's panel discussions with a 360-degree view in this panel of the ecosystem of renewable energy space in Pakistan, with a focus on solar distributed generation. As already mentioned by Dr. Shamshad and the other participants, the need for renewable energy in Pakistan is well established. With over 5%, or rather just 5% of the energy mix coming from renewable energy, and more than 50% coming from thermal sources such as RFO, LNG, and coal, Pakistan is susceptible to economic shocks. Currently, the pressure on forex and high commodity prices is an example of what future can also hold for us if we don't resolve this situation. With that very brief backdrop, the participants today who have joined us, the panelists, represent a major component of the new installations in Pakistan's solar captive projects in the commercial, industrial, and residential space. They understand the constraints that they face and the industry faces in the adoption of solar energy and other renewable energy sources in the country that are desperately needed, and we're looking at them to understand those in today's forum, and also their recommendations on how and what can be done to make these more acceptable or available to the users. With that, I would like to introduce our panelists. The first is Mr. Mushtaba Haider, who is the CEO of Rayon Energy. Mr. Mushtaba has served previously as the head of strategy for Dawood Hercules Corporation Limited, which is Pakistan's largest industrial conglomerate. And before Dawood Hercules, he worked as the head of strategy and transformation of British Telecom in London. At British Telecom, Mr. Mushtaba served in various commercial roles, including as project director in Global Services Division and as head of procurement for UK-wide fiber rollout program. Mushtaba started his career as a software entrepreneur at the ripe young age of 19 and has been part of founding teams in a range of startups in technology, security, and financial services spaces. Mushtaba holds a BS in computer systems engineering and an MBA from Cranfield School of Management. Welcome, Mushtaba. I'd like to also introduce Mr. Osman Saifullah, who is director of Sky Electric. Mr. Osman is a director of Sky Electric, and before that was the CEO of Sky Electric as well. Pakistan's Sky Electric is, of course, Pakistan's fastest growing residential smart home systems solutions company. And Mr. Saifullah, Mr. Osman serves as the vice chairman of the SAIF Group, Diversified International and Industrial and Services Conglomerate. He also serves as the chairman of SAIF Holdings and the group's textile manufacturing business. Mr. Osman is associated with various industry advocacy programs and platforms and is a member of Pakistan's Business Council. He also served as a member of the Policy Board of Securities and Exchange Commission of Pakistan and is advisor to the GIK Institute of Engineering and Sciences. Mr. Usman has a master's degree in engineering, economics, and management from University of Oxford, and he was a Britannia Scholar. He also has an MBA from the Graduate School of Business in Stanford University. Our third panelist is Mr. Umar Malik, who is a clean energy entrepreneur and CEO of Shams Power, which is a renewable energy company, which is involved in developing, financing, building, and operating distributed energy renewable projects on a BOOT basis in Pakistan. Umar and Shams Power team, with support from leading financial institutions globally and locally, are providing clean energy solutions to the commercial and industrial space across Pakistan. And finally, we also have Ms. Zara Tariq, who is Senior Associate at Kabraji and Talabuddin. Zara is a bar at law from Lincoln's Inn and an LM graduate from the School of Oriental and African Studies. Zara began her professional career at Kabraji and Talabuddin in 2010, and during that time has worked on various corporate and commercial matters. Tariq routinely advises on matters relating to Companies Act, banking, finance, mergers and acquisitions, joint ventures, foreign exchange regulations, arbitration, family law, labor issues, tax, and environmental laws. Further, Ms. Tariq possesses the experience in project financing in private power sector, which includes drafting, negotiating, and finalizing various transactions and various transactions. Ms. Zara, welcome to the board, to the particular panel, and we look forward to having you here. So once again, a big thank you to all the panelists who have joined us today. And with that, I'd like to kick off the discussion by speaking with Mr. Mujtaba. In the CNI space, there is a rapid adoption of solar energy projects, largely the captive. And we just saw the EBR presentation as well, in which Interloop has set up a 3 megawatt rooftop solution. Now, that's not the only example. You're actively involved with a number of entities on the EPC side, as well as on the PPA side. To build that ecosystem's understanding, what we'd like to request is that if you can give us a view of what are the demand drivers and which sectors are driving it, and using that as a basis, who are the suppliers and what are the impediments to these suppliers providing or rather holding them back from aggressive growth when there is such attractive spread in the costs. So over to you.
Thank you, Naveed. It's wonderful to be here, in good company with colleagues and friends that I've worked with over the last 6-7 years developing this industry. So I just want to start with two broad comments, Naveed. One, I think we're in the midst of multitude of energy crises, global as well as local. And I think renewable energy has to be seen in that context, right? So I just want to say that renewable energy is not the panacea. If we continue to try and push more renewable into the mix without solving some of the fundamental problems, while we do that and miss this opportunity, then we'll just have more stranded investments with less carbon footprint, right? So I think it's very important to acknowledge that and to make sure that we don't, end up losing this opportunity to solve some of the more fundamental problems with the energy system. With that, I think since we are, as an organization, have been focused on commercial and industrial segment, that's the segment that we've been trying to solve some of the fundamental energy problems they face. I'll just paint a picture in terms of what the size of the market is, what the size of the problem is, and what are the kind of solutions out there. So if you look at Pakistani grid, a very broad classification could be in terms of grid and off-grid. So we know that 30% of the country is still either off-grid or in very bad grid areas where energy is not available. Even in good grid areas, and I can give you examples of populated industrial areas like Potri and Nooriabad, where you have 190 megawatt of, a sanctioned load from the grid, but only 10% of that is being used by the industry and 90% is running on captive power. So if you look at the on-grid industry, NEPRA puts that demand around 450 gigawatt hour annually. And I think, roughly we have to maintain 10 to 12 gigawatt of base load capacity to service that demand. On top of that, our estimation suggests that there's another 4 to 5 gigawatt of industry that's running on captive power. This is where industry is running gas engines primarily. 80% of that captive industry is running on gas engines. Again, a very scarce commodity that we import, and then we burn in very inefficient engines. And the reason industry does that is because they don't trust the grid. The grid has its own issues. And when we go into the detail of what's going on there, these engines are running at very low efficiencies, wasting a lot of this fuel. The industry still has a lot of breakdown, resulting in a lot of work in progress, inventory loss, as well as production loss, a huge economic loss. If you look across the whole spectrum of 4 to 5 gigawatts of captive power. So there's a big problem to solve there. Now, if you look at the distributed, potential of distributed renewable energy, I think the estimate goes anywhere between 4 to 6 gigawatts based on availability of space within, densely populated industrial areas. You're looking at 4 to 6 gigawatts of capacity that could be added on a distributed basis. Previously, we were only adding, let's say, intermittent solar or wind, which was available at a capacity factor of 18% for solar, or roughly, and wind was around 30 to 40%. Wind, is you have to add on a very selective basis. You need very high wind profile to justify the economics of wind. But now with where the economics are going and with the advent of lithium, especially storage, which has been improving in cost, I think we can reach capacity factors of 40%, as high as 40% for renewable power, which means the 6 gigawatts of capacity could go much further. Now, if I translate that into number of units, probably around 20 to 30 gigawatt hours of units of conventional fuel can be displaced, on a distributed basis. And you can see that's still a small proportion of the overall industrial demand, which is around 600 gigawatt hours. So around 5% of that demand can be displaced using distributed renewable power. So if you need to cover the rest, of course, you need to come up with more interesting technology and new methods like wheeling in order to be able to replace a remainder of the industrial demand if we are to get to net zero. So that's a bit of a dissection of how big the commercial industrial pool is, but as you put it, a lot of work is already being done. My company has already added 200 odd megawatts to industrial capacity, energy capacity from renewable sources. I think we can put the estimation at anywhere between 600 to 700 megawatts already added. So there's a long way to go, even at the distributed level, when you look at the potential of what we can do. Now, you asked me about the value chain. So how is the industry structured? So typically you have equipment providers, you have EPC players, you have developers who invest their own money, like Shams, like us, who sell power to industries. And then you have to look at it also from a futuristic perspective, right? So we feel that the future will be digitally driven. So future of energy, we feel, is going to be digitized, decentralized, decarbonized. And you can't ignore the digital element. So there's a huge, emphasis on software, energy management systems, analytics, artificial intelligence. So these are the 4 tiers. Historically, when we started, let's say 8 years ago, 100% of this was imported. We had imported EPC players. We had 100% of the equipment coming from OEMs, and rest of stuff, everything was coming from foreign sources. We're fortunate that over the last 7-8 years, with the work of the pioneers like Omar here and everybody else who's been in the industry, we've worked hard, and right now 50% of the value chain is indigenized. So in terms of technology, hardware, software, I can say that roughly 50% of the stuff we're putting into our plants is coming from indigenous sources. And if this industry develops further, I'm pretty confident that we'll cover the rest of the gap over the next 4 to 5 years, inshallah, as an industry. Now, if you look at in terms of constraints, when it comes to renewable energy, there are two broad questions. You need a lot of money. This is infrastructure investment, right? So infrastructure requires a lot of capital. So where is this money going to come from? That's the biggest constraint. At what terms is this money going to be made available to us? We know that, and we keep hearing about these everyday low tariffs against solar power. You must have heard about 1.5, 1.4 cents being achieved in the Middle East. And they do that by having very long loan tenors and cheap credit. Because the way these investments are structured, 20% comes from equity roughly and 80% comes from debt. So availability of cheap and long tenor debt is very, very important. And availability of financing is very important. And we are like a dollar constrained country. So a lot of that has to come from foreign sources to be able to cover that. And if we are to move away from that, I think we need to further indigenize this industry and produce a lot more of the equipment locally. Second thing is technology. There's a lot of development in terms of technological advancements in renewable energy that's happening, and we need access to that. I mean, Pakistan, in terms of priority order, is much further down for some of the cutting edge OEMs, and it's a constant struggle to get cutting edge technology into Pakistan. We've been quite lucky that over the last few years, we have introduced some of that cutting edge technology, including large scale batteries and hybrid power in Pakistan, but getting access to that technology, indigenizing it, supporting local R&D, that's going to be super important going forward, because in the end, we don't have 100% of the solution right now available with us to be able to go 100% carbon neutral in our energy system. So access to that technology is very important. Finally, I think, and most importantly, I think consistency of policies is incredibly important. I think what the industry is going through, and I'll be perfectly honest and straight with you guys, over the last 4 to 5 months has been terrible. It's been a diabolical situation. Every day you keep hearing about one thing or another being changed, either by one state authority or another, in terms of opening of LCs, settling of LCs, availability of forwards to secure our credit, and cash advance. So there are lots of ad hoc developments happening, imposition of tax on one hand and the removal of tax, that creates unnecessary constraints. So if we are really for renewables and we want to increase the proportion to 30% as per our NDC, nationally determined contributions against the Paris Agreement, then there has to be a consistent policy, irrespective of who's in charge, who's in the government. We need that consistency of policies, I feel. And that's the number one, the biggest constraint that we face today.
Mr. Well, thank you. I think that's a very important point that you raised, that there is 50% indigenization in the current solar ecosystem. And that alone is a big contributor and will be a great support to the current forex pressures. So I think very well articulated, and thank you for that. Moving on to Usman, welcome. Usman, your company, Sky Electric, is one of the leading smart home systems provider in Pakistan. And there's been exponential growth in the business at this point in time. But when we look at residential solarization as the business which you are involved in, there is a clear demarcation in terms of urban and, of course, the electrification of rural, both on-grid and off-grid. Now, when you look at it from that perspective, how do you, again, the same question, quantify or map out the industry landscape, the demand side of it on this particular space? Clearly, there is a lot of need on the off-grid. Are there enough players addressing it? And B, on the urban side, are there too many fragmented players that are trying to address it? So if you could, comment on that and provide your insights.
Thank you, Naveed Saab. Assalamu alaikum. I think on the demand side, in today's Pakistan, I think it's very demand is very much there, and I think we've seen most of the companies in this sector have seen, you described it correctly, exponential growth in the last few years. And we've seen, a lot of new entrants attracted by this growth into this sector. I can only speak as, as a CEO, former CEO of the company. When you enter a new market, you should target a niche of that market. We should not speak in very general terms. We know it's a huge market, but you have to start with a small market or a segment of that market and try to dominate that. And so the reason we started with, the urban segment, I like to give the example, from our office in F7 in Islamabad, in Blue area. When you look outside, all the roofs you see are empty roofs. And F7 is supposedly one of the most affluent sectors of Islamabad, our capital city. So clearly, and with energy prices moving in the way they are, there's a very genuine case for residential rooftop solar. I see this very much like another wireless revolution that happened a quarter of a century ago, which is the cellular revolution. And so we are seeing the same kind of dynamics. It's still fairly early days. The rural segment, again, same issues. Probably the pain point is more acute because your grid in those areas is typically worse. So where your major urban centers, your cities have a better grid than places like our villages and rural areas. So there they need they need a storage element also, which sometimes is not needed in your urban cities. So as Mustafa Saab said, I think all segments of customers, commercial, industrial, residential, they are all they're very much the demand is there. And we look at it as where is the pain most acute, and in our view the pain is most acute in the residential segment. And we are growing fast in Pakistan. We have installations in rural areas, but we are focused on the urban areas because we need to, these are long-lived installations, and we need to provide service also to our customers after they install, which is why we started off with our, initially with 1 city, then 3, then 9, and growing. So demand is very much there. Some of the segments, for example, I would say the industrial segment, they have more resources to address the pain than, let's say, residential. I'm sure Umar Saab will speak to this more, but you also have to see where is financing available. And typically, despite an excellent state bank financing scheme, the overall numbers, for residential cases are still quite small. So that's an area where we'd like to see, the banks nudged to lending for solar. But the demand, I think, is very much there. This is an industry, I think, that needs no subsidy from the government. The fact that, you are competing with an outdated, inefficient grid, rising energy tariffs gives, I think, all companies the opportunity that they need to seize. Clearly, it's very, consistency of policy is very important. But I think more than that, even, is the need for a very light touch regulatory policy. Because you see, when you have a sector that's growing so fast, you need the regulator, ADB and NEPRA to be very nimble and very flexible, very responsive, and very light touch. Another example I'm fond of giving is if Sky Electric was in the business of installing diesel generators in people's homes, I probably wouldn't need an installer license. But because I install solar systems, I need an installer license, and I need to renew it every so often. So so stay out of the way is really if we had a wish, it would be for the government really to stay out of the way have as light touch as possible, and to recognize, very importantly, I agree with Mustafa Saab that renewables is not the only solution, but the government really has to believe that it's a large part of the solution and not just a peripheral one. Talk about renewables, it makes us all feel good, but distributed power generation, in today's Pakistan really has, because keep in mind the grid, the way we generate electricity, the way we distribute it, the way we consume it, is essentially a 200-year-old concept. And, starting in the late 1800s. And so for a country like Pakistan, distributed generation makes perfect sense. So we're very positive about prospects for Pakistan.
Thank you, Usman. Clearly, there is that demand, and also the way you articulated from a commercial and corporate perspective, it is important to find a niche and then excel in that. But taking a step back and looking at the industry, one of the areas that seems to be untouched is, or rather less touched, is the rural off-grid space. And over there have been experiments with pay-as-you-go systems, and of course, an attempt to do that, but that's been the domain of DFI intervention to this date. Do you see that as a commercial opportunity and going into that area yourself or any other player? And what would it take for that to take off?
You see, for us, rural market is as attractive and as important as the urban market. One thing I should have added is distributed power generation also needs distributed storage. And that's been a missing element. So I think over time, as our policies evolve, they should make battery storage more attractive. A lot of the world's leading utility companies, are moving towards policies that encourage distributed storage. And distributed storage actually improves the resiliency of your grid. And in rural areas, as I said, distributed storage is very much part of the solution. Now, Sky Electric is a product company. We own the product design. So we already have a solution for the solution that we use, that we sell to our urban customers, works perfectly well for the rural customers as well. But the challenge there becomes that because you need more backup because of a poorer grid, the cost, it becomes more expensive. So I think the secret to unlock this is there's no technology issue. The capability is very much there. It's basically a financing issue, because those customers typically will not be able to finance. They cannot buy on cash, and you need either people like Karandaaz or others to step in and provide that financing. It's very easy to meter technologically to have a system where you pay as you go. Microgrids, the technology is very much there. But we ourselves, we do not have the balance sheet to be providing customers, installments. And so we need a financing partner. And, people like Shams Power and others are working, but the focus, as far as I know, is not on the rural area. And so in our view, the missing link, because there is that storage element which increases the initial capital cost, the missing link is the financing.
Thank you, Usman. I'll move to Umar. Umar, there is a common theme that is coming up, and we'll sum it at the end. But one of them is the funding in both the residential and C&I space. Now, Shams says recently, your company has recently closed a substantial number of projects, around 30 megawatts, I think, in the last year, and is in the process of installing, with a lot more in the pipeline. So what has been the secret sauce at your end, to obtain that financing and unlock it? Is there something that is a lesson for others, or are you also facing the same constraint in this particular growth phase?
Ji, Assalamu alaikum. Thank you, Naveed bhai, for having me over today. So we've been in this business for about 5+ years in this distributed energy part of the segment. And access to finance has clearly been the biggest challenge. We have spoken about this numerous times before, just you and me generally, but accessing finance for any power project requires debt, primarily. Equity, you can still organize from sponsors or other interested investors, but debt is the critical component. And that is what has been historically more challenging to raise in Pakistan because of the way Pakistani banks consider risks, the way they consider project finance. IPPs traditionally have come with sovereign guarantees. So the mindset of Pakistani banks for any power purchase agreement has been a guarantee that kind of is an all-encompassing safety net. In the absence of that, debt has been traditionally difficult. So just to give you some comparison, when we started out, companies, my friends who started similar companies in India started out at the same time. We, alhamdulillah, have about 30 megawatts right now. Those guys are close to 700. So accessing capital is the challenge. The currency deval in Pakistan makes private equity investments harder to attract in Pakistan. And similarly, any equity finance project that lacks the ability to get refinancing later on in terms of debt makes the IRR unattractive. Power projects can never be done with 100% equity. So that's been the challenge. The reason that we have been able to break free of that is that about a year and a half ago, we were able to get support from international financial partners who provided us with a security structure that enabled us to borrow. So we've been able to borrow now from commercial banks, and we continue to do that in a much better fashion now. So initially, our projects were all 100% equity finance, but now it is a healthy mix of debt and equity.
Okay. So I think using that as an example of support from international financial institutions were able to provide the guarantees and state bank financing, where it almost seems like once the state bank refinancing facility in a couple of years from now, we don't know how much is available in terms of capacity for the next year, year and a half, 2 years. If that goes away, does that make this entire revolution, if I can call that, or setting up suddenly come to a halt? Or you see other funding sources stepping in from either DFIs or maybe private sector, private sector being the preference, of course.
That's an interesting question, and I can give you two perspectives on it. Essentially, this concessional debt which is available right now for companies to borrow and set up these projects themselves. So Rion, which is clearly the market leader when it comes to setting up solar projects, they've mashallah done 400-500 megawatts. This is primarily EPC contracting where clients can borrow from the state bank and set it up themselves. We compete with them by attracting them towards an off-balance sheet solution. So if the state bank facility goes away, it goes away for everyone, and then solar has to kind of become viable on commercial financing. And interestingly, Naveed, like today, solar is financially viable even with commercial debt. The challenge for companies like mine is not whether there is state bank financing or there is commercial debt. It is if there is debt. We cannot be viable on only equity. We need debt to remain viable. As long as it's a level playing field, whether the state bank facility is there or not, it's the same. But in today's market environment where furnace oil, diesel pricing, grid pricing is close to 40 rupees, you need to encourage solar with these kinds of subsidized financing so that we can reduce our overall energy cost as a country, now whether that's commercial, industrial, or residential.
Okay, thank you for that. I think you're absolutely right. This is an area that is common to all the participants. Zara, moving to yourself, now continuing with the theme, the investors.
If you don't mind, I just want to, maybe if you don't mind, I want to come in quickly and just add that at commercial debt today, just adding to what Umar Malik was saying earlier, we can add in batteries, we can add in solar, add commercial debt. It will still be cheaper than furnace oil. It'll still be cheaper than diesel and LNG. So just to add that context.
Thank you. No, you're absolutely right. It's a relevant comment. And I think continuing with these two comments, Zara, I have two questions. I'll lay them out for you. And I know sensitive that we are running against time. First one is from a regulatory standpoint. All the participants have, the panelists have spoken about inconsistency and changes in that. So from a legal perspective, you look at it from a number of aspects, like your view on what are the changes in the pipeline or there which are beneficial to the sector and can help them get more traction in the ESCO segment. Second, if there are policy gaps, what they are, and in the legal framework, when Umar and Mustafa talk about and Usman as well talks about the various contracts with the underlying entities, are there any PPA contracts and other documentation space where there is innovation going on that will help give international investors comfort to fund it, or even local investors comfort to fund against PPA contracts alone and no collateral?
Thank you for all of that, and thank you to all the panelists. It was interesting to hear all of their perspectives. So I think the first question that you had asked were regarding the changes in law and how it impacts the ESCO segment. So I think all of the panelists mentioned that there is a significant issue or gap pertaining to debt financing within the sector. I think one of the challenges that the renewable energy sector has is, of course, getting local commercial debt for these large infrastructure projects. So in that respect, the SBP refinancing scheme that everyone mentioned earlier has been a great tool that has assisted all of these, power sector projects to actually come to fruition, with many local banks, lending pursuant to the scheme, including local Islamic banking, which has also availed the scheme. Without this, we have typically just been, dealing with DFIs and multilaterals that are financing the debt primarily for renewable energy projects, including IFC, the World Bank, and ADB, etc. So certainly, SBP schemes such as this do add a lot of value, and the trouble is that the scheme has just recently been the time period for the scheme has recently been increased by another 2 years. But the trouble is that would that scheme continue on beyond that period of time? That's one question that really comes up. And a lot of the local banks that are looking to invest are concerned whether the refinance scheme will continue, whether SBP in fact has the capacity to refinance these particular projects. So changes like that, this instability in the market regarding these schemes and whether these will actually continue on, I think is a big issue, a big gap. And I think one of the ways that you can deal with that is certainly by having these schemes be in place for long periods of time. So, instead of short-term increases in the time period for these schemes, it would be good to have these schemes implemented for a longer period so that there is some certainty in the market. In addition to that, there is, of course, the actual duties and taxes, the fiscal incentives that the RE policy provides. So right now, those fiscal incentives are very much in place. But the question then becomes, if, for instance, the government changes, would those fiscal incentives, would those import duty waivers continue? And if they don't continue, the problem with that would be essentially that your plant and machinery that is required for the setting up of these projects would increase in value substantially. Because we don't have any indigenous, production of these technologies and the plant and machinery necessary, it is critical for the viability of the project that the import duties and taxes remain in place. Another, issue that one foresees is with respect to the tariff itself. So under the 2019 policy, the tariff has been stipulated that it is going to be a rupee-denominated tariff. Keeping in mind that the rupee is, devaluing at a very at a rate that is, unprecedented. The fact that the tariff is rupee denominated would give a cause for concern to foreign investors, those who, particularly DFIs and multilaterals that are the major source of the debt component for these projects. Having these tariffs denominated in rupees would be, give them a lot of pause and perhaps, it's not very, definitely doesn't help. So in addition to that, one of the changes that we are seeing in the industry going forward is the introduction of a bilateral market. The upside of the bilateral market, of course, is that the tariff and the cost of production or the cost of selling the electricity will significantly decrease. But at the same time, it does create, some gaps vis-a-vis the PPAs and EPAs, the long-term PPAs and EPAs that have previously been put in place. There is a question mark that once the bilateral market comes into play, which is proposed to come into play sometime in 2023, is it the case that the legacy contracts will continue to be sacrosanct, or is it the case that the legacy contracts will no longer be will continue to be sacrosanct, or will the legacy contracts no longer be permissible? And if that is the case, then that would obviously give investors a lot of pause. So,
right. Thank you, Zara. I think that does highlight some of the areas where the common theme that comes out at this stage or is appearing is a need or desire on the business side to look at consistency in the regulatory and legal space, and also greater sources of funding, because even if commercial funding is utilized, then there is a need, or there is a commercial viability for the sector operators to provide both EPC and PPA solutions. Now, if I could just turn to the Q&A section, there are some questions here, and the theme of the 2 or 3 questions is that linked to somewhat of indigenization, which Mustafa, you also mentioned, and like to give a minute each to each of the participants to share their views. Now, what is required? Is there an option or opportunity for solar panel manufacturers, inverter manufacturers? Is the capacity there, and what would it need from local investors to do that? And would you, as EPC, PPA, and residential service providers, look at adopting local technology in solar panels specifically? And continuing with that, the same question, that there are supply chain shocks. So are the supply chain shocks sufficient enough of a wake-up call to do that? and how is that affecting the business? So if I could please start with Mustafa, and if you could take the question.
Yeah, thanks, Naveed. I think it's a very pertinent question, something we have pondered over, for a long time. I think number one is driven by market demand and developments in the market, right? So distributed market alone, for example, will not create sufficient demand for industry to put in a huge amount of capital to set up indigenous manufacturing. I think that's number one. So the market needs to be on a consistent footing, on a growth footing. We need to have consistent policies that encourage a certain amount of renewable energy to be added into the grid and on distributed level. And those policies have to survive, change of government. I think that's number one. Number two, I think it's a very energy intensive and capital intensive exercise. I can tell you that a lot of groups are already looking at putting up local manufacturing, but in a country which is always energy constrained, for example, solar PV manufacturing requires a lot of energy. So where is that energy going to come from in a cheap form, in a base load? I think that's also very important. So the investment required is significant, and it's also driven by the fact that you now have to match up to the scale of Chinese manufacturers. I mean, that's a huge competitive threat on your border, right? That the scale they're manufacturing at right now and the economic cost points as a result they're achieving, for us to achieve that, we have to, achieve a certain scale in manufacturing, which will require both capital and energy. So I guess those are, two of the key constraints that we face. But I'm fairly confident if there was a consistent sort of, a growth in demand driven by consistency of policies, you will see manufacturing very soon over the next 3 to 4 years.
Usman, if you would like to add anything to this.
I think in general, the same questions that any manufacturer, we ask, one of the most urgent questions that Pakistan needs to ask is, why isn't there more manufacturing in this country? So those same, manufacturing of anything, and the same kind of challenges, it doesn't help that your rupee is, the way the currency is moving, because you start from day zero with a depreciating asset in that case. But and you have to look at the global supply. You have to look at global capacity in the market in which you want to put up domestic manufacturing. So and those are typically huge global markets, and in many cases they have excess capacities. But another way to look at it, and this is our experience, is that while our parent company is a US company, a lot of the value added work is actually today is in the software development, machine learning, AI, in the firmware, the hardware, and all that work has been done in Pakistan. So we have a 50 plus member engineering team, and in some ways the manufacturing is the less value added work, and that's done outside Pakistan. So there's a lot of potential for those kind of activities in the country. In general, I think manufacturing, we haven't got our act together as far as the country is concerned. And so I'm not too hopeful about the prospects for manufacturing here. And where we have seen manufacturing, we have also seen that, unfortunately, in terms of balancing the interests of the different stakeholders, the consumer, the manufacturer, the government, we haven't always got the mix right. So that's another issue that we will probably continue to face.
Thank you, Usman. Umar, just a slight twist to the question, and briefly, which is that the customers that you have, CNI.
I'd already rehearsed my answer for the last question, so now I'll have to rethink this one.
Please go ahead. I think that's
fine. Go ahead. I'm just joking. I'll just chime in a little bit on that, but apna puchne sawal.
नहीं मुझे बस ये I wanted to ask, is it also driven by the desires or the expectations of the customers as to what kind of equipment is needed, and is a certain standardization required for that?
That's a very good twist to the question. Just building on Usman Saab and Mustafa had said, I think their two companies have done what was needed to be done in terms of building a local solution, taking the best components that come in. So when it comes to panels, the global capacities that you need to produce at to reach the economies of scale, we will not be able to do. Like, Alhamdulillah, last year in Pakistan, we had 2,500 megawatts that got imported. The year before that was 1,400 megawatts. So there is a growth trajectory, but it is still not at that point where you can say, let's set up a panel manufacturing or panel assembly facility. So what Sky Electric did very successfully was packaged under a brand, panels, inverters, and batteries, and said Sky will stand behind that. That was needed in Pakistan for people to believe that solar works. So they did what was needed in terms of indigenizing the overall turnkey solution, while at the same time taking the components from the best sources. Reon did the same thing in the EPC space. Abhi, I think that the section of the market where indigenization can play a role in terms of companies like who want to do local assembly is the rural, let's say, second-tier city market, which is not that sensitive to the Bloomberg Tier 1 nomenclature, which banks, for instance, will mandate in other cases. There is some room for indigenization. But the good thing that I want to point out is that panels and inverters, you can do very sharp negotiation with the suppliers. The real weak link used to be the balance of plant, the structure, and the cables. And there we have, alhamdulillah, brought prices down to where they are now competitive, almost competitive, not as low as India or Thailand, but they have come down significantly. And that's because of the engineering and the design capabilities that companies in this space have been able to bring, and to then basically not let the supply chain define pricing. We've gone out and built vendors. I mean, when we started out 5 years ago, there were maybe 2 structure suppliers. And, Reon and Sky Electric have been like, and the Citibank of the solar industry. They've trained vendors who've then left and become, started out on their own. So probably there are about, 20, 30 vendors now who can produce at, I wouldn't say like the same pricing as India, but close enough for us to be competitive.
Right. Umar, thank you. I think I'll conclude by saying that, hearing all the participants, these are classic signs of a industry that is at a nascent stage, but all the participants and all the panelists are basically saying that the trajectory of growth is going to be incredible. The various ecosystem partners, which includes the regulators, they need to have consistency understood. The financiers, the traditional funding sources need to have more faith in the system, and maybe it'll come as the industry reaches scale. And alternate funding sources from innovative areas of balance sheet and others also need to be looked at. So, and of course, the legal framework is something that is being developed as more and more PPA-based and EPC structures are being set up. Organizations like Karandaaz are trying our best to step in and create those innovative financial institutions for the benefit of the industry to create a demonstration effect, and we will continue to do that. And with that, I thank all the panelists, and thank you to all the participants who asked questions. And back over to you, Shabana.
Thank you.
Thank you.
Thank you, Naveed, and to all our panelists for the insightful discussion. Mr. Ashraf Rana will now moderate a panel discussing the role of emerging technologies in accelerating the impact of renewable energy and energy efficiency. As one of the founding partners and a director at Bridge Factor, Mr. Rana has played an instrumental role in leading the firm's power practice, with almost 70% of the wind projects, 450 megawatts of solar projects, and multiple hybrid projects in Pakistan to his credit. He was the team lead for the IFC-funded Super 6 wind projects, achieving financial close in November 2019. In addition to his transaction advisory work, Mr. Rana also provides regular policy input to various power sector stakeholders and remains actively involved in a number of DFI-funded initiatives for the power sector. Ladies and gentlemen, please welcome Mr. Rana.
Assalamu alaikum. Ladies and gentlemen, as Sherwano explained, my name is Ashraf Rana. She, elaborated quite in detail my credentials. The topic of discussion today with my panel, which I have, is beyond solar. It's a difficult discussion to have. I think I have a very, very distinguished group of panelists. Some of them I work with, and have a high regard in, and some other I look forward to working with. I've got with me on my panel is Stephen Harrison, who is Managing Director of SBHD, sorry, SBH4, which is a German company. His focus is on decarbonization and greenhouse gas emission control. He is a hydrogen and CCSU, which is carbon capture utilization storage specialist. He's a team lead on an ADB study, which is a pre-feasibility study on hydrogen and CCUS in Pakistan, which is a very, one of the first initiatives of such kind in Pakistan. He's had 27 years of experience with BOC gases and Linde. He's a member of publications, a very experienced gentleman. Also with me on this panel is Mr. Amir Hussain, who is the CEO of Tesla Industries. Tesla Industries, from all Pakistan, we all know, is a light engineering company which has been innovating from very beginning, since '92 when it came into being. And we all have seen brands and his initiatives on doing innovative work on the engineering side, which we've lacked in Pakistan quite a bit. So we'll have an interesting discussion with them. We've got with us Mr. Oliver Knight, who's a senior energy specialist. He's a sustainable energy specialist. I've had the pleasure of working with him on the solar project. His insight into Pakistan is incredible. I'm just not reading it now because I know him. So his view on Pakistan is incredible. His experience globally is very good. He is leading the show for World Bank on the energy side in Pakistan. There are a number of initiatives that World Bank is doing. I personally believe that World Bank is one of the key stakeholders in Pakistan because they have been the guiding force in the power sector. Though we are in, from power sector perspective, in shambles, but there have been efforts by World Bank, by USAID, by DFID, all these people to be able to rectify the problems, and their guidance has been immense, and we'll hear from him his perspective on the new energy. Then we've got a very interesting participant with us, with Ms. Varda Malik. She's a deputy team lead on the Seed Adam Smith Institute program, which is basically helping KP government in its different initiatives, including energy and power. She will bring in the perspective in how to deal with government, because in my experience, which is over 20 years working directly or indirectly with the government, because I work with private sector, but indirectly when you work on power sector, it's the government which is always on the other side. She's managed to actually make things move. The biggest problem, as was discussed in the previous panel discussion as well, is with the government, their policies and the implementation of those policies. We always have good policies, but they're never implemented because there are people within who think differently, and they, knowingly or unknowingly, subvert the whole situation. But Varda's experience in this perspective is very interesting because she's been instrumental in making things work in KP. I've worked with her on this assignment, and I've seen how bureaucracy has been moving with Varda because of their strategy. They're not only doing policy, but they're doing implementation of the policy, and very interestingly, how they're convincing the bureaucracy to work with them. The topic of today's discussion is beyond solar. Though I believe that renewable is the way forward, I also understand that we've got chronic issues with our power sector. Renewable is way forward. Beyond renewable is what we should be thinking. My analysis of my work over the last 20 years in Pakistan has been that we've always been like 10 to 15 years behind what the world has been doing. When the world was going into coal in 1990s or 1980s, we were working on liquid fuel, RFO. Then the world moved to LNG. We were on oil. When the world moved to renewables in like 2000, in late 2000, by 2010, we were working on gas at that time. So by mid of 2015, when we were looking at coal and LNG again, there's a huge thrust on renewables. So the dilemma that we see our power sector in right now with the shock, with the price shocks coming in, that's thanks to the policies of the previous government, when the previous governments have barred renewables. I like to state this, that the renewable in Pakistan has been done commercially. So when we talk about carbon emissions and the perspective of the climate change, that's not been the main driving force for renewable in Pakistan. Yes, when in the beginning, when we did the wind and solar projects, there was a lot of support from the government because they were always thought to be very small. So renewable in Pakistan is confronted with the thermal industry. So third, there's a huge ingress of thermal industry all across the economy. There are vested interests, there are business interests, so all need to be protected, while renewable is seen as a vigilante coming in and destroying everything, which is not true, but in some way they do take it like that. So renewables have in Pakistan progressed based on commercial basis. So the economy, if it is cheap, it's going to come in. If it's not going to come in. We have seen baseload issues coming in. World Bank did a study to be able to demonstrate that our grid is strong enough to take in a lot of renewables, which dispelled this myth that renewable is going to destroy the grid. So we have a lot of things going on, but I believe that this topic is very apt for the current affairs because we've always been behind. So we need to talk about future, how to convert, because we're in a clear situation, but in 10 years time, when these PPAs run out, we will have the flexibility of defining our future, and we need to discuss about the future now, which is why, be it the intermittency of the renewables can be done away with putting in storage. Storage is at very economic, it's at its lowest now. So making it viable for the grid and for sustainability as well as viability. Hydrogen, we have with us Stefan, who's worked on hydrogen. I've been very personally interested in how hydrogen works, what are its numbers, what are the capacities, what are the costs. So we're going to hear from him. I think these are the two defining futures. We've got other technologies as well, biomass, we've got wave technology, we've got bagasse. So we've got many other technologies, but they've not been economical. They've not been viable for the grid. That's the reason you haven't seen an imprint, and we've worked on it quite a lot. And I don't expect a substantial change in technology happening in those to be able to make them viable. But renewables, wind and solar combined with storage, I think that's the way forward. Plus hydrogen. Hydrogen is expected to be 24% of the total energy usage of the world by 2050. So we'll see how that works, and Stefan will elaborate on that, and then maybe Varda is also doing an initiative on that. She can explain on that. So we got I've already introduced Stefan Harrison. Stefan, my question to you would be that you've been involved with this Asian Development Bank study, which is a pre-feasibility study for hydrogen in Karachi. How do you feel? Would it be a game changer for the energy mix of Pakistan? Over to you, Stefan.
Thank you. I think the project that you're referring to in Karachi, a 400 megawatt project, is actually not related to the ADB study that I was involved in. I think it's a privately developed initiative. So the question, I think, would be whether or not a 400 megawatt renewable plus hydrogen project would be a game changer in Pakistan. From a scale perspective, we'd have to give the answer, no, it wouldn't. When we look at renewable power generation in Pakistan, we look in the north in the Tarbela Dam, 4 gigawatts of renewable power. We look further east at the other big dam. We look at the run-of-the-river schemes. We look at the total hydro production in Pakistan, and we're well north of, let's say, 6 or 7 gigawatts during the peak season. So to say 400 megawatts of renewable to hydrogen in the southwest part of the country is a game changer from a scale perspective, we'd say no. On the other hand, we have to look beyond scale. We have to look to innovation. We have to look to opening new doors. And from those perspectives, a 400 megawatt renewable power to hydrogen project of hydropower on the Tarbela Dam, clearly that's small. But when we say a 400 megawatt renewable power to hydrogen project by any standards in today's world, that is a large, significant project and a fantastic door opener, a really significant first for Pakistan. And let's not forget hydro. The graphic behind you, sir, is indeed a wind turbine and a hydro dam. Hydropower internationally is much more than 50% to go in order to catch up with hydro. And if we look again at Pakistan, the big dams in the north and the run of the river schemes that are coming down the Indus River, hydro is a massive potential in Pakistan. Picking up another point that you made with regard to energy storage, hydrogen and energy storage in Pakistan is also a magic winning combination that has yet to be exploited. In the northern central part of the country, just south of Islamabad, we have the plateau where there are indeed salt formations under the ground. And for many years, salt has been mined out of these salt formations. These same salt formations can be used for underground storage of natural gas or underground storage of hydrogen. So if we consider the potential for wind, solar, hydro, renewable power generation, plus
Stefan, I think your connection is not great because you keep on cutting up.
You may want to suggest that Stephen turns off his video. Maybe that will improve the quality.
Thank you. So I've turned off my video. Would you like me to start from the beginning or should I carry on from where I was?
I think, we could hear you in the beginning. So, maybe rewind for 1 minute.
Right. So what I was coming on to say is the combination of hydrogen and energy storage, because I completely agree with you, as more and more renewables come into the mix, more intermittent wind, more intermittent solar, more seasonal hydro, the combination of renewables plus long-term gigawatt scale energy storage will be a magic winning combination. And here again, Pakistan has the right potential, the right conditions to do that, by converting the renewable electrical power to hydrogen and then using underground hydrogen storage in man-made salt caverns in the northern part of the country. Pakistan would have the ability for seasonal energy storage, not just to manage day-night peaks of solar, not just to manage the weekly peaks of wind, but to manage the seasonal, the annual peaks of electricity demand, and also to manage the annual peaks of hydropower generation. So this is a very, very unique geological attribute that Pakistan can benefit from. So when I look at the potential to go beyond solar in Pakistan, to use the wind, to use the hydro, to use the underground hydrogen storage in salt formations, I really do believe that there is a magical winning mix in Pakistan that can help you through the energy transition.
Okay, thank you, Stephen. One question that comes to my mind always, because I've been a student of new energies, and what's the cost of a kilowatt hour produced from hydrogen? I know it's can't be done precisely, but what are we looking at globally? The numbers.
Well, I don't think to look globally is necessarily relevant. What is relevant is to ask what's going to happen in Pakistan. And whether or not Pakistan is producing renewable electrical power locally from solar and wind and hydro and converting that to hydrogen, or whether Pakistan chooses to import hydrogen or hydrogen derivatives such as ammonia from neighboring countries in the Middle East, where it can be produced and shipped relatively economically. So whether or not Pakistan chooses to produce clean energy vectors locally or import them is really a techno-economic decision. But when we ask, what potential does Pakistan have to be a local producer of hydrogen, green hydrogen from wind and solar, the potential is enormous. We have the most fantastic wind resources in the south of the country, close to Karachi, especially if we begin to look offshore. We have, within the Balochistan Desert, we have the most incredibly good conditions for solar. So if we integrate the wind and the solar together, then we really have an extremely continuous, or almost continuous renewable energy profile. Plus you layer on top of that the massive hydro resources. So what Pakistan has at its disposal is a wonderful mix of hydro, wind and solar potential. And if these three are harnessed together, plus in combination, as I've said before, with the underground hydrogen storage in purpose-built salt caverns, then Pakistan would really be able to carve a road to energy independence, energy autonomy, and reduce its reliance on imported products such as LNG or refined products, and really declare, as I say, energy independence, energy autonomy, and really transform the economy. And I think the opportunities here is really what people should be looking at. I understand that the established interests in thermal power generation are clear, and changes don't happen overnight. But when people can begin to see the opportunity, the business opportunity, and also from a political perspective, the opportunity of energy independence and energy security that a renewables-based future, including hydrogen, will present for Pakistan, then I think people will be able to embrace the future.
Okay, Stefan, we come across a lot of government functionaries who are actually the policymakers, and we need them to be convinced to be able to do anything. They've recently been convinced by on wind and solar, more solar than wind, but we need them to be convinced to be able to put this in, because we have a massive grid system that needs to be fed. Hydrogen, we believe that wind, solar, hydro is a tremendous resource in Pakistan. Combining all of them together gives us a very good solution, and energy security and independence as well. How does hydrogen play in? I understand that hydrogen is a form of storage of energy, and salt mines can be used for that. But at the cost of we've got advanced technologies like solar, like batteries, which are becoming pretty economical. They can be used for the same function. So you mean to say that batteries plus hydrogen can give you the storage that you need for seasonality?
Well, let's look at that. Two questions you've asked me there. Firstly, what can hydrogen do for us? And secondly, are batteries and hydrogen interchangeable? Let's take the second question first. Batteries and hydrogen are absolutely not interchangeable in no way whatsoever. Batteries are ideal for short-term energy storage, for discharge over, let's say, a 12 or an 8-hour period. So to combine solar with battery is ideal. We have the sun shining during the day and the battery is charged up and it discharges overnight. So the combination of solar and battery is ideal. If, on the other hand, we go hydropower, where we have massive rainfall peaks and snowmelt peaks, let's say in July, August, and then in March, we've got no water flowing through the dams and we have a massive deficit. So for hydro, we need seasonal energy storage over a 6-month or a 12-month duration in order to manage the peaks and troughs. And there's no battery in the world that can do that cost effectively. And that's exactly where hydrogen plays a role. And that's exactly why we need gigawatt scale underground hydrogen storage to balance those seasonal energy peaks. There are many different energy storage technologies. Batteries are an incredibly good solution for short-term. Conversion to hydrogen, storage of hydrogen, release of hydrogen is an extremely good solution for a seasonal basis. That's what needs to be said on the energy storage issue. Secondly, what else can hydrogen do for us apart from being an energy storage medium? Well, it can help us to reuse and leverage established infrastructure that exists in Pakistan. So there's an incredibly complex and sophisticated gas distribution pipeline network in Pakistan. Many countries would be envious of the fantastic grid that stretches from Karachi in the south, where the LNG is imported, all the way up to Peshawar in the northwest. A fantastic gas distribution grid. Now, in the future, as natural gas over time, over the next decades, begins to fade away, all of these underground pipes that exist today, it would be fantastic if we can reuse, if we continue to use that very, very valuable infrastructure that exists. and we can reuse that as distribution of hydrogen in the future. So instead of spending millions and millions and millions of dollars on a new electricity distribution grid or on a new energy storage distribution grid, we can reuse the infrastructure that is today and thereby minimize the costs of the energy transition. So hydrogen can effectively substitute LNG or natural gas in the gas distribution grid and enable the continued use and the economically continued use of existing infrastructure to help an affordable energy transition. Because again, affordability here is just as important as the environmental impact and environmental considerations. These things need to be affordable for nations and for people, as well as good for the environment. So, Mr. Rana, I think you're on mute.
Sorry. So moving on from Stefan, we've got Mr. Amir Hussain, who is CEO of Tesla Industries. And Tesla Industries, as we all know, in Pakistan has been an innovator of technology. They started in '92, started on innovating on CNG equipment, then went on to work on safety devices, industrial users. So we've got Amir Hussain with us. My question to her is that, given that Tesla is at the forefront of manufacturing and exporting equipment, which innovative solution of technology do you see as a potential game changer for Pakistan?
Thank you, Rana, for giving me the opportunity. It's true that the only solution to Pakistan's dire needs for energy is going to be an energy mix. So we can't really rely on one source. As Stefan rightly said, there is huge potential for hydro in the north, but then our current dilemma is the transmission lines. I mean, just to put a few numbers to the team, that Pakistan can have an installed capacity of 36 to 40 gigawatts of different sort of power plants installed all over the country. The demand at the moment is around 28, 29, whereas the transmission line capacity is limited to 21. So that's the bottleneck. Again, we have almost all sort of power plants: coal, natural gas, LNG, furnace oil, RO, hydro as well. So we need to source all these fuels to get them going, one. Two, we have long-term agreements with them. So the circular debts keeps adding up with the capacity payment. So irrespective of our use of 28, we still have to make capacity payments for 12 gigawatt every year. That's for the summer. For the winter, we have really strange demand of 10 to 11 gigawatt. So that means 30 gigawatt capacity payments are to be put aside every year. So one, we have to make use of this installed capacity, and that requires either addition of transmission line, which isn't easy because the investor knows that the use of these transmission line capacity will be barely 4 to 5 months in winter, whereas the summer doesn't really need any more additional transmission. One of the solutions to that is allowing maybe electric vehicles, some kind of incentivized policy, maybe no tax for those areas, subsidized tariffs, or if not subsidized, maybe zero profit added tariffs, which will use or consume those power plants generation. And this will also reduce the import bill. I know there is a group that says that to run those power plants, you still need to import fuel. But I mean, you have to make a choice between not using the plant and paying them for nothing, and to use the plants and paying them to use that power to reduce your import bill. And that will also add to the carbon emission reduction, which I have the numbers for. Punjab only is 43% just from the transport. So if we are aiming towards net zero carbon, then we have to have both renewable power plants as well as contributed to that from the EVs. We have, I mean, as far as my company is concerned, we have invested in a huge network of charging stations countrywide. I mean, we have spread in almost half of the country now. You can travel to more than 750 miles in Pakistan on our charging network, but that's again, that has to be in a grid area. So we are supplementing that with these solar charging stations. Again, storage will be a big issue in that, and as rightly Stephen said, that you can have small to medium-sized storage capacities from the batteries because of the cost involved. But if you want to do large storages for maybe a week's time, then you have to have new technology. And then there is an option to select which technology you want to move forward with. There are very high-end sophisticated technologies, but then they're costly, they are new. You have to have sources from one or two countries or companies only. And then there are some really standard cheap solutions like pumping what is generally termed as hydro storage, which means you pump the water up and then use it at night to generate power with the water turbine. The turbine typical efficiency is 80 to 90%, whereas the pumping efficiencies are easily up to 80% now. So around cycle efficiency of 65 to 70% can be easily achieved, which means for 1 megawatt installed, producing 5 megawatt hour a day, you can generate 3.5 megawatt at night. It's not high-end technology. It's been used for years and years and years. It's simple. It's around the block. You can do it tomorrow to any capacity you want. And that's what we have started working upon. The real game changer will be a combination of solar with this maybe hydro storage if it becomes available, and then supplementing with the electric vehicles, which means reducing your import bill as well as your carbon emissions. So that's what, as a company, as Tesla, as future innovative company, we are working on. If you allow me, I would like to answer one of the questions asked in the first session was, why not local manufacturing? Why not too much?
Yeah, Amit Saab, that was exactly going to be my next question, that we lack heavy industry in Pakistan. So when you go to Eastern countries, they're based on heavy industry. So I wanted to ask you that, what could be the motivation or the catalyst for the local industry to start getting into, panel manufacturing, inverter manufacturing, turbine manufacturing, tower manufacturing. So what could be the initiative?
I won't say we are a huge manufacturer, but we are one of the largest manufacturers for panels, PV panels since 2013, and then inverters as well as will be very soon embarking into the storage manufacturing as well. But having said that, the biggest hurdle is, it's a business, it has to be a business proposition. You have to make money, there's no question about it. But then there's something added to that as well, which means you want to do it for your nation, for your country. It's very easy to sound patriotic, but it's really difficult to practice patriotism. If you look at take up any tariff spread, and you will see the finished product is duty-free, whereas the raw materials, the components are all taxed. So which means somebody is tailoring these purposely, with definite intention, not to develop local industry. I give you the proofs. Solar panel as of now is tax-free, 10%. It's just announced by the Prime Minister. It has been tax-free since the start. And solar panel raw materials are all taxed to the level that the glass and two more components, raw materials, are not only taxed, but has been penalized with a regulatory duty of 8%. So if you don't make us at least at par with the import ones, I mean, the economy of scale is nowhere near China. So we can never be cheaper than China. There's no question about it. But it's not a matter of competing China. It's a matter of developing technology indigenously to develop industry here, to develop the know-how here. So that's the basic line. Similarly, inverters themselves have only 10%, 17% tax, whereas the components, may it be capacitor, may it be chip, may it be an IC, may it be transformer, they are all 30% taxed. So I can't compete. Right? On top of that, adding misery, insult to the injury rather, most recently they have added inverters into a negative list, which means you can import panels tax-free, but you cannot import inverters. So all inverter shipments are stuck at the port. So that's the current state of affairs. We are not only manufacturer of inverters, we also export inverters to South Africa, Chad, Indonesia, these countries. Panels we've been exporting to Sweden, Germany. We do export some to Middle East, but it's not competitive, so we can't really grow.
That's a very interesting perspective, and I'd like to talk more about it, but given the time constraint that we have, I have to move on. But it's a very, very interesting thing that what you said was, there seems to be some indigenous within the government lobby which tries to destabilize the local manufacturing, and which is very, it's done very covertly. Like, as you said, it's not really, giving exemption to, from output tax is a great initiative. But when input is there, then you're actually absorbing the cost, and you're getting incompetitive with respect to the imports.
Just open up any tariff page, you'll see the same thing.
Absolutely, and we all want to promote renewables, and I think we've got our colleague Oliver with us, who's got deep insights into the government as well, and he's got a deep approach as well. Maybe he needs to have a look at this anomaly and try to sort that out. So moving on to Oliver, who's worked for 20 years, 10 years with World Bank. Prior to that, government experience with the UK government. I've personally worked with him and really like the way he thinks, the way he works, and his dedication towards renewable. I've actually seen it on myself, the way he's trying to move things in Pakistan. And World Bank, and Oliver is sitting in one position which really can matter. He's got access to others. So let's hear his perspective on how things are. Let's start by Oliver. Let's start first by you giving us a general theme of how things are happening in renewables, and then we'll move on to the World Bank Future Lending Program.
Sure. Well, thanks for the warm words, and happy to be here and on this discussion. I made a few notes, so I'll kind of go through those, and I think it touches on quite a few of the points brought up, but also on a few others as well. So just reflecting on the title for this panel, it has also energy efficiency in the title. And so I thought I'd start with that because I think it's really critical. It's a critical and often neglected area. Energy efficiency, people say this all the time. I'm actually not an energy efficiency person, at least I haven't worked on it significantly, but we're definitely getting more involved in that. We've been working closely with NICA, and we're hoping that we will also end up financing some work on energy efficiency in Pakistan because it's such a neglected area, and really there hasn't been real attention on this for many years. So just a few things to stay on that, because I think it touches on, I noticed quite a few of the comments asking about domestic manufacture. It just came up just now as well. And I think on energy efficiency, there's huge potential to build local markets, both in terms of the delivery of energy efficiency, but also the manufacture of some of the technologies and solutions required. We're very interested in this super ESCO model. ESCO is Energy Service Company. This is something that's been very successful in India. We've actually financed a lot of work through EESL, which is the Indian publicly owned company, which is a super ESCO. And we're interested in whether that could be made to work here in Pakistan. There's a lot of potential through that for domestic manufacture and also for technology transfer. I'll give you two examples. One would be fans. There's obviously everyone probably aware that the fan industry in Pakistan, pretty much all the fans that people buy here are domestically manufactured. We've already been working with those manufacturers on DC fans and trying to encourage them to go into more efficient DC fans. And there's potential there for export as well, because there are so many other countries where well-made, cheap fans would be, and efficient fans would be in demand. The other area is water heaters. It's a particular pet topic of mine, because when I came and started living here, I immediately realized how inefficient the water heater in my own home was. And it seemed that those were very common in pretty much any middle-class home, these gas water heaters. I found out that they're 20% efficient, which is pretty shocking. And so one thing we're interested in is whether that whole market could be transferred to electricity, and in particular to heat pumps as well, to get more, squeeze more out of that. So I'll stop there on energy efficiency, but I think it's really important before one starts to look at generation to be using what you already have efficiently. And also it really helps manage peak load on the electricity grid and on the gas grid as well, because a lot of what I'm talking about here is actually contributing to the high peaks in the evening in particular. And that just requires you to utilize your more expensive plant. And also, if we're moving to a renewables-based system, it requires you to build a lot more storage than you might otherwise need. So the second point I wanted to make, and that's something I've been thinking about this morning, is that we really need to be careful how we interpret least cost in Pakistan. It's, everybody, and we've definitely been promoting the idea that there needs to be least cost generation plan. But I think one also needs to be careful one doesn't become too narrow in one's thinking of what that means. I'm thinking potentially of writing a blog on this. So just to make a few points on this, there is a real value in diversity. And we're seeing that right now, of course. If you're highly invested in a couple of generation sources and external events or things happen, then you're going to have serious problems. So there's a value in diversity. So that may mean bringing in sources of generation that have a higher PPA cost, but they bring other benefits. It would not be sensible to build your entire market. Sorry, my light turns off. To build your entire market on the assumption that you want only the lowest cost source of generation, which right now would probably be solar PV. And therefore you just double down on build everything from now on is solar PV. That doesn't make sense, right? I think instinctively it doesn't make sense, but I think it needs to start to be factored into planning decisions and essentially into IG set. And so we need to start looking beyond just PV and wind at a whole bunch of other generation solutions. And I would add to the list, I'm a proponent of CSP, concentrated solar power. It actually has the potential to be, Pakistan's one of the few countries where it's actually viable from a resource point of view in Balochistan. And the great thing about CSP is you can design it to run 24/7, just like a coal plant. Secondly, geothermal, I think that's been mentioned. No one's really explored what the potential is in Pakistan, but geothermal, again, it's going to be the cheapest source of generation, but it can provide things that solar and wind can't provide. Thirdly, pump storage. Obviously, that's not a source of generation, but it is a form of storage. And Pakistan having mountains will definitely have sites where that could be viable. And again, that may need to be explored. And then finally, sources, bio-based sources such as biomethane, biomass. Biomass has probably with the sugar at least has been exhausted, but there may be other opportunities, biomethane in particular, looking at large collections of animals, and also looking at residential wastes. So I think, you know, there may be other technologies that come along, but we do need to take a broader view on technology. Green hydrogen has been discussed a lot already in this panel, and we're very interested in green hydrogen and battery storage as well. And as I think the first speaker pointed out, they are different and complementary, and they need to be, again, considered with their relative merits. Green hydrogen is going to be critical if you want to do deep decarbonization of industry, for potentially certain forms of transport, etc. So, and then also the seasonal storage angle. I'm not an expert on that, but certainly the bank is supporting green hydrogen and battery storage projects in other countries. And we probably need to start looking at what that means in Pakistan. And we actually have an industrial decarbonization study ongoing. So that's starting to come out of that. But this is an area where I think collectively we need to explore. The fourth point I'll make is coming back, I guess, to solar and wind, and of course they are critical, particularly in the short to medium term. We really need to start looking at developing the resources in Balochistan. So Sindh has been mentioned. Sindh is obviously where there's a lot of potential for both solar and wind. But Balochistan, you can't get to the kind of scale up of solar and wind without considering also Balochistan. And that's going to need to be considered in a different way, right? Because that's only going to work if it's done as a kind of series of mega projects and seen on par with the largest hydropower projects in the country. So that's how it needs to be treated if it's going to happen. It therefore would, it needs to attract the requisite public attention to do that. Obviously the financing and also the security provision that would be needed to go into some of those areas. We did a study over a year ago looking at where the solar and wind in this country would likely go over the next 10 years. And Balochistan comes out as a critical medium-term option if you want to meet those medium-term targets for 2030. And that means developing a kind of hybrid solar wind park in Balochistan. It likely means doing high voltage DC line into the center of the country. And we're about to kick off a new study just looking at Balochistan to try and figure out what that would look like and how one might do it in a way where you're also connecting up mining sites, industrial sites, Gwadar maybe, and looking to develop Balochistan not just as a resource base for the rest of the country, but also for Balochistan's sake as well. And I think if one's looking to do big renewables developments in Balochistan, one has to also consider the local benefits that and really focus on generating those real local benefits so that there's community acceptance and enthusiasm for those developments rather than seeing them coming from outside. So just two small things I wanted to add at the end here. A very quick side note. We purposely use the term variable renewable energy, and we do that for a reason. I always cringe a little bit when I hear the word intermittent. It's essentially misleading. If you look up a definition of intermittency, it kind of implies a sudden loss of electricity, of a sudden loss of capacity. And that's actually not how solar and wind plants operate, particularly when you've got lots of them spread across a country. Yes, a cloud might pass over one particular solar plant, but it's not passing over all of the solar plants in Pakistan, or very unlikely. And the same with wind. So renewables are not intermittent in the way that people often think they are. And we really need to kind of readjust our thinking and our language around that, because it's really critical as to how people see them. You don't need to have batteries sitting on the side of renewables plants to pick up just because they're about to go off. If anything is intermittent, it's often thermal plants because they have unexpected outages and you lose a gigawatt. You can lose a gigawatt instantaneously. You never lose a gigawatt instantaneously with solar and wind. So I just want to make that side note because I think it's really critical, the language we use. And this is why you'll see all our reports on renewable energy. And when we're talking about solar and wind, we call them variable. The final point I wanted to make is that we're carrying out some work right now looking at different scenarios for the energy transition in Pakistan, which essentially looks at how one would have different scenarios for accelerated adoption of green technologies and decarbonization, essentially. But we're coming at that very much from a perspective that this makes economic sense as well for Pakistan. You're not doing it for climate change reasons. You're doing it because it makes economic sense for the country. We will be holding a webinar to present some of the interim results on that. So I just wanted to give that little announcement. I will put the link in the chat and very keen to have people's input on that study as well. Let me stop there. Thank you.
Thank you, Oliver. Interesting that you mentioned this thing about intermittent and variable, because I come across this all the time. People, there have been studies done by funded by USAID first and then by World Bank, both on VER, and they kind of established after years of study that our grid is capable of taking so much energy, and which wind and solar is done separately. But ironically, the Ministry of Power, where all the power centers, is still saying it's intermittent. The plan that they have right now is looking at the policy, the alternate energy policy, which we all have come to a conclusion on. They will take initiative to change that as well. And the main theme behind it is intermittency, which is not really true. And I don't know what one can do to be able to establish this with the government. Every time the new government comes in, they start from scratch that it is intermittent. It's not variable. So all the work that's been done for 3 years goes down the drain. You start again from the game. Ironical. So coming to that, Varda works as the deputy team lead for SEED. She's been very, very instrumental in creating change in KP, which is a smaller province in Pakistan, but has, in my view, in the last 10 years, they've done incredible work in few sectors. Initially on the health and education sector, they did a lot of work. Then nowadays, what I see is that they're doing a lot of work on energy, and that initiative is led by Varda's team. I'd like to introduce Varda over here in the discussion. And my question is, based on your experience working with KP government, public sector, what has the provincial government done to promote RE and its vision to promote energy efficiency aside from the low-hanging fruit of solar? Varda, over to you.
Thank you, Ashraf. And first of all, thank you for the generous introduction early on the when you were introducing the panel. And it's been a great pleasure listening to the other members of the panel. Thanks to Karandaaz for organizing this very interesting webinar. I'll start with take this opportunity to introduce my program also. So alongside Karandaaz, Adam Smith International is the implementing partner for the FCDO funded Sustainable Energy and Economic Development Program. It's very specific to KP. We work very closely with the government of Khyber Pakhtunkhwa, and the program is aimed to deliver on two major counts. The objectives are increase in public and private investments and improving the efficiency of public investments as well. Also, this is a 2-year-old program now. We started off in March 2020. Since the inception, we have focused on energy sector as cost-effective, adequate, reliable supply of power is the cornerstone of any major economic activity. We realized it early on, started focusing on the energy sector. Khyber Pakhtunkhwa province has immense hydro potential power. Most of the hydro power projects in Pakistan are located in Khyber Pakhtunkhwa, and the province has an estimated power potential. It's quoted the generating capacity of nearly 30,000 megawatt, which is over half of the hydro potential in the country. We need to exploit this in a systemic, planned, and transparent manner. The hydro potential in the province can ensure long-term energy security in a very sustainable manner. So the program that I represent here supports the provincial government on a multi-pronged strategy. One, we are supporting the government to raise investments through public-private partnerships. And secondly, we are also supporting the provincial government in completing and operationalizing under construction and near completion public sector HPPs. Our TA to the government is on multiple fronts. I would touch upon a few here as most relevant to the topic at hand. For the first time ever, we have been able to arrange commercial financing for Pakhtunkhwa Energy Development Organization, PEDO. It's a public sector organization. For the first time, they have accessed commercial financing to ensure its long-term sustainability. These includes 3 transactions worth $120 million, 1 bridge financing and 2 project financing facilities. We've just signed a term sheet worth $40 million in corporate finance facility for PEDO. The consortium was Habib Bank and Bank of Khyber. So we're also excited that local banks have come in, and we're not, the energy sector and the debt provision is not heavily reliant, will inshallah going forward on the DFIs alone. In terms of what we had to do to enable all of this was also to work on the current policy framework. The Hurdle Development Fund and PEDO Act had to be changed for it to be, because these were not designed for the public sector organizations to access commercial financing. So a lot of policy support has been given to government of Khyber Pakhtunkhwa. Now, beyond hydro financing that I just mentioned, and in line with the CTBCM principles, Khyber Pakhtunkhwa has also initiated wheeling of electricity to move away from a single buy model and opening up the market. The first phase of wheeling was completed a couple of years ago successfully. Cheaper electricity is being directly supplied to 5 industrial BPCs, bulk power consumers, through 18 megawatt Behur hydropower. The second phase that SEED is supporting the government of KP will be wheeling 150 megawatts in 4 projects to various BPCs. The process has been halted because this is a sub judice matter now. Inshallah, this will be resolved shortly. Very excited about this wheeling option. The government of Khyber Pakhtunkhwa is looking towards exploring avenues to best use its hydro potential, and the primary goal is to reduce greenhouse gases. And there are just a few strategies available for the smaller province. The first is to extend renewable energy production, but renewables are only available for a few thousand hours a year. I'm not going to say intermittent because Oliver and you made a case. But as a bulk energy carrier, hydrogen can close this temporal gap. Balancing natural variation in renewable energy supply as well as storing it seasonally, as also the point was made by Stephen as well. There are around more than 350 hydrogen projects, and Stephen can correct me, this is what I read, are currently in the development around the world seeking to decarbonize economic sectors, such as heavy transportation, industry, and aviation. Government of Khyber Pakhtunkhwa has recently signed an MOU, followed by issuance of a letter of intent earlier this month, with Kuwait Investment Authority subsidiary Enertech Holding to set up 2 hydrogen production facilities in the province. This is going to be the first of its kind run of the river, 2 projects, 84 megawatt in Swat and 69 megawatt in Chitral. So not very large, but nevertheless very significant. Also, a nitrate capture plant will set up to produce ammonia. That's also very exciting for the fertilizer industry. We expect this development to be a game changer for KP, with a vision to couple green hydrogen with hydropower to create a net zero future. Most hydrogen is currently produced from fossil fuels. Yet most green hydrogen projects under development around the world are powered by solar or wind. As the leading source of renewable energy in Khyber Pakhtunkhwa is hydropower, it's well suited to producing green hydrogen and play a transformative role to address very heavy reliance on ever depleting gas reserves, rising RLNG prices, challenge of imported gas availability, and of course the evacuation issues because of the terrain in the province. I'll just take a few seconds. Going forward, I think we will need to realize the potential of hydro with policy and regulatory frameworks that must be updated to facilitate deployment of hydrogen services and infrastructure at the scale, and also to stimulate demand for green hydrogen and reduce technology costs for electrolyzers, because cost has repeatedly come up as an issue for green hydrogen production. Hydrogen production and related technologies are currently not reflected in our policy framework. the government of Khyber Pakhtunkhwa did struggle to issue a letter of intent for setting up hydrogen plants in KP, as we could not find a policy under which this could be done. So this is something that needs to be taken care of. The government need to recognize and support the role of hydropower capacity alongside other renewables for green hydrogen production. A balanced portfolio just leads to a more secure and sustainable energy mix, as also mentioned by Stephen and Oliver. Hydro power potential cannot be, it's in the larger scheme of things, it's not renewable energy only, but micro and mini hydros are. But nevertheless, this is a huge potential that needs to be tapped into. And also, we have a large pool of existing hydro assets that are already in place, and building on assets already in place will be a critical aspect of green hydrogen development. As the technology improves and costs come down for green hydrogen, hydropower hydrogen can be a single most important accelerator for the energy transaction. We have many other initiatives on climate change that I may just touch upon here. I think we're also supporting the government of Khyber Pakhtunkhwa to mainstream environment and climate aspects as concepts among public sector institutions. Also improving level of integration of climate change aspects in the government planning. And also one thing that we need to really focus on and emphasize is the mandatory energy audits of large energy consuming sectors. This can provide stimulus to many public sector projects. This is beyond solar, so I won't go into detail, but we've also signed an MOU on large-scale solarization of SEZs in Khyber Pakhtunkhwa with Infraco Asia. And also there is a project on sustainable urban development, a project near Khanpur, in Khanpur near the Khanpur Lake, as an economically self-sustaining, climate resilient and eco-friendly city with temperature monitoring, efficient electricity usage, clean energy and renewable resources. And yeah, the last thing I would want to mention here is that we're also supporting the government of Khyber Pakhtunkhwa, and the government is very excited about exploring the voluntary carbon markets. Overall, this is not pertinent to this panel, but this is nevertheless that, is going to be also a big thing in going forward, because the overall trend in issuances and retirements of verified emission reductions in the last few years, there's been an upward trend. Coming back to hydrogen, it's a game changer. Nevertheless, despite the excitement, I will say that we will still need to wait and see and hope that the proposed green hydrogen pilot projects that government of KP is trying to set up result in providing a proof of concept, inshallah, and hope it will be a milestone for the government, not just to unlock hydro potential in the province, but also attract a lot of private sector investments. I'll stop here. Thank you.
Thank you, Varda. I think we've actually gone over time from our allotted time. I'd like to ask many more questions from the guests I have. I have so many questions that I'm sure our audience would be interested in as well. But given the time constraint, we'll have to move on. One thing that I'd say is that in Pakistan, we've always been firefighting. So I think it's been designed like that we always keep on fighting. We never we're firefighting on our previous issues, like electricity shortage, expensive electricity, circular debt. So we never plan on future. I think the government should initiate a group in which one can be alienated from the current problems and look forward, the way we just spoke about. They can look forward and see how the economy and the power sector needs to go towards, while the previous sector, the previous problem can be tackled by some other part. Thank you very much. I really, really appreciate the participants, and look forward to seeing you again. Thank you very much.
Thank you, Ashraf.
Thank you, Mr. Rana, and to all our panelists for the great discussion. I would now like to invite Mr. Sadul Islam, Director Investment, British International Investment, formerly known as CDC, to moderate the discussion on the potential for climate finance, instruments and interventions. Mr. Saad joined British International Investment in 2016 and is an investment director in the equity team within the infrastructure and climate group. He has over 15 years of experience in investing power and infrastructure. Prior to joining BII, he worked for AG Capital as an investment executive focused on investing in renewable energy projects in Europe. Saad started his career at Citigroup,
will not be able to connect.
Okay, apologies. We have a change. Mr. Naveed will be moderating this session. So I would like to request Mr. Naveed to please take over. Thank you.
Thank you, Shabanu. I am sitting in for Mr. Saad, and Saadul Islam, he was unable to join for unforeseen reasons. So I'll be grateful to accept me as the moderator for this session. Thank you for that, Shabanu. I think this particular session is extremely important. And what is happening is that in the last session and a half, we have seen that the primary constraint that the players in renewable energy have pointed out, specifically in the non-IPP space, is that lack of financing in the local market. And that particular financing constraint is not only in the traditional funding sources in banking and otherwise investment banking, but also total lack in the non-traditional space as well, such as off-balance sheet structures. Now, we're very fortunate that today's panelists have joining us from more than one country, and we are grateful to them for joining in. Globally, there are several models, and these models have been successful in raising capital and attracting those non-traditional investors and lenders who are investing for two reasons. One, for ESG reasons, like mutual funds and others, and secondly, because they see it as a theme or a focus for themselves. And there are a number of instruments which are your green bonds, there are green funds, there are traditional investors coming in, and then of course there are things like green real estate investment trusts and many others that our participants will talk about. In addition to that, there are also financing and insurance instruments, some of which have started reaching this country. So I'll say that what is happening in Pakistan, just for the benefit of some of the participants, there are traditional banking instruments. And when I say that, I mean commercial banks who lend to captive and IPPs. The traditional banking instruments are collateral heavy. So as a result, they work well for wind and for other thermal-based projects that have assets under them, but they don't work well for some of the renewables like solar. Now the bond market is developing with Securities and Exchange Commission bringing out the green guidelines for green sukuk and green bonds in 2021. There is a state bank refinancing facility, which is providing subsidized facility for a couple of years, but it will be gradually phased out. So there has to be an alternate. And also there is a nascent guarantee structures available. And prime example is one of our affiliated companies, our associated companies, which is Infrazamin, that provides long-term credit guarantee for infrastructure projects, and they can step in as well. On the international front in Pakistan, FCDO, our parent organization, has ICF, International Climate Fund funding, as well as SEED, Sustainable Energy for Economic Development funding, looking at generating or facilitating new alternate energy investments and bringing up energy efficiency. USAID has projects, ADB has projects, the GCF fund is operational, and many others. So this is the framework or the landscape right now. The local players, which are growing but still inadequate in terms of overall capacity, and the international players who are helping the guarantee institutions and also multilaterals. We all know that globally, the next benchmark for these funds is about $1 trillion. So as it approaches that, it means that there is a tremendous demand, and they have approached the market to raise this capital for such projects. We here in Pakistan, looking at the landscape, would certainly like to learn and study those particular models, and a lot of work going on, so that can be brought in. With that particular introduction, there's only one topic for this particular forum. We'll have small questions, but the topic is, how do we attract funding for these projects, which are necessary for the country, but the traditional sources have dried out or are not as active. So how can we do that? And based on your, the panelists' experience, if you can share information for the greater participants in this particular forum. With that, allow me to introduce the various participants. The panelists here are Mr. Mauro Soares. He's the Chief Operating Officer and co-founder of GreenMap. He's an economist and MSc in business from Stanford University. Mr. Mauro has an extensive professional career in the energy sector in the areas of renewable generation, power generation, conventional and non-conventional oil and gas upstream, and LNG. In 2016, after a long career in Tech-Petrol, where he served in different management roles, Mr. Soares served as National Director of Renewable Energy at the Ministry of Energy and Mining, Argentina. He has a leadership role in design and implementation of Argentina's impactful and very successful renewable energy procurement program, known as Renova. The design and negotiation of the World Bank guarantee for Renovar and the design of the regulations for promotion of the CNI renewable electricity market as well. In 2018, Mr. Soares founded EOS Energia, a consulting firm that specializes in renewable energy and electricity markets while based in Buenos Aires. In 2019, he co-founded Conecto Energia, Argentina's first digital marketplace for renewable and conventional energy. He teaches at a postgraduate renewable energy programs at UCES and UTN universities in Buenos Aires, and has also been chairman of the Wind Committee and a member of the board of directors of the Argentina Renewable Energy Chamber. Mr. Soares is a member of the BMW Foundation of Herbert Quant's Responsible Leaders Network. Mr. Soares, very glad to have you. We're honored. Our second participant is Ms. Rabia Bukhari, who is a specialist in USAID Energy Office in Pakistan. Ms. Bukhari has over 16 years of professional experience working with development and private sector organizations. Ms. Bukhari joined USAID in 2010 as program management specialist in the energy sector. Currently, Ms. Bukhari is working as the private financial sector engagement lead for USAID sector for access to finance portfolios and projects to provide technical administration and oversight to Pakistan's private sector energy project implementations by PFAN, the Private Financing Advisory Network, and Credit Guarantee Project as well, which is being implemented through the commercial banks. She has previously managed infrastructure rehabilitation and efficiency improvement programs for the energy sector. And prior to USAID, she has worked for the international NGO Save the Children. Ms. Bukhari holds a master's degree in administration with majors in project management. Our next participant is Mr. Cedric Irma. Mr. Cedric is with the ASEAN Climate Bond Initiative, beg your pardon. Cedric is based in Singapore, where he supports the development of the ASEAN region for the Climate Bond Initiative, working with various stakeholders to see green bond markets take shape in Southeast Asia. He has more than 20 years of experience in the fund management industry, with more than 10 years in top-ranking investment banking firms such as JP Morgan, Citi, and Credit Suisse. Cedric has managed fixed income portfolios and analyzed corporate bonds for most of his career prior to working for Climate Bonds Initiative. Most recently, he was working with as the head of emerging markets corporate credit research at an independent credit research company, managing teams of analysts and acting as a principal of small investment teams. We are also honored to have Mr. Saad Zaman, who's chairman of Burj Capital. Mr. Saad Zaman is the founder and CEO of Burj Capital, a firm based in Dubai and operating out of DIFC. Burj is an investment firm with primary interest in clean energy business across many emerging markets. Burj has partnered with the US and European development financial institutions in promoting renewable energy business, coupling it with SDG goals in core markets. Mr. Saad has more than 25 years of experience in the financial sector, and prior to Burj, he held leadership positions in organizations like Citibank, the Islamic Bank, UAE, and ANZ. Over the years, Saad has served on various boards of leading businesses in the region. In addition to that, we have Mr. Noor Ahmed. He is director at the State Bank of Pakistan. Mr. Noor has over 27 years of central banking experience. Currently, he is looking after the National Financial Inclusion Strategy, banking on equality policy, gender mainstreaming policy, microfinance banking, and agriculture trade policy at the central bank. He's serving on a number of policy and technical advisory committees related to financial inclusion, gender policy, banking policy, and digital banking as well. He has been involved in designing and implementing policies and instruments for risk sharing, institutional strengthening, and innovations to catalyze market development and financial innovations in the space of financial inclusion. Prior to his current assignment, he has worked in the research and policy clusters of the bank. It's a very diverse forum with participants also joining from overseas, and we have a regulatory and DFI presence and private sector presence. So I'm really looking forward to the discussion. And with that, if I may invite our first panelist to talk about the bond initiative. So Mr. Cedric, climate financing is scaling new heights. It's reaching $1 trillion nearly in issuance. And we'd like to see what is the experience of ASEAN Climate Bond Initiative in the ASEAN markets through which Pakistan can benefit in terms of designing the instruments or the products that you have also done in experience in Indonesia, Fiji, and Egypt. And any comments in that context is something we'll take on board. And of course, for the audience, it will be very helpful to see what are the parallels or similarities in that equation. Naturally, just to mention again, we have a couple of green bonds that were issued, but they were GREs, government-related entities, sovereign-backed. So therefore, we have some experience with SECP regulations coming in as well, but the private sector has not yet approached or tapped the bond initiative or the capital markets. With that, I'll invite you to please say a few words.
Thank you very much. It's a pleasure to be part of this discussion. So indeed, the global green bond market has grown tremendously since the early days when in 2014 the green bond principles were issued by ICMA. And in the subsequent years, we have seen an acceleration of new regulations allowing the market to take shape. For example, the EU is in the process of publishing an EU taxonomy that will give a lot of guidance to all the stakeholders in the European Union to issue such transactions. Similarly, the Climate Bonds Initiative has a global taxonomy that is available to any issuer around the world who would like to get a certification against a green bond offering. In the ASEAN region where I am based, there is also a taxonomy that is being developed for the region in order to clearly identify what type of project would be considered as green. Why are we having that? It is because it is a major driver of the market when regulators publish guidance on what type of projects are considered green. The risk being for investors that issuers are coming to market with projects that are not considered sufficiently compliant with the green objectives of limiting global warming. The term of greenwashing is commonly used to describe the risk of projects being offered to investors that are not really achieving these objectives. And that's a very present risk in investors' minds in terms of deploying capital with criteria that are extra financial. So that's a very important driver of the market. It is the quality of the regulation that is in place, the definition of the green criteria, and the compliance of the issuers with this criteria. Now, what we are seeing, obviously, is a very strong growth in markets where there is an active bond market already in place. So typically, the EU, the US market, China, Japan, Australia, there is an active market being developed because there's a natural refinancing of existing bonds. And when issuers come to market again, they choose to give a label to their bond offering. In developing economies like we have in the ASEAN region, and as it is the case in Pakistan, it's a little bit more challenging because there's not an active natural flow of bonds that would help create this market. Nevertheless, we see in the ASEAN region quite a diversity of instruments that are used by different entities, governments, government-backed entities, as well as financial and non-financial corporates to issue bonds that are either green or even social sustainability and sustainability linked. So there is clearly a demand, but the volumes, I must say, are lagging a little bit behind those markets where there's an active market already in place. There are some additional hurdles to come to market with a labeled bond. You need a second party opinion, you need a green bond framework, etc. That adds a little bit of complexity, but we can easily overcome that. The market is now well organized so that there are instruments to support issuers as well as provide them examples of what has been done. So it's relatively straightforward now. The guidance is relatively clear. The main difficulty is to have projects that are really bankable, that investors will be comfortable investing in. And then we go back to the same problem of, developing economies have a number of difficulties in terms of the currency risk, the legal framework, the convertibility risk, the ownership, the reporting, the disclosure, the proof of ownership, and so on. So these difficulties are real. They are preventing investors from accessing those markets because themselves have under very strict guidelines to select investment opportunities that are, for example, investment grade or not below a certain credit rating. So that's a real challenge. In order to develop this market, what is very instrumental is the support of international development agencies like IFC, ADB, AIIB, and so on. These institutions play a key role in the development of this market because they have a special status in each of those countries. They are considered as a special lender, and they have a very strong credit rating, so they can raise capital at very competitive cost of debt. Therefore, they can on-lend to those projects at also attractive cost of financing for the project sponsors. So they play an active role in selecting projects that would comply with this criteria for green, social, or sustainability issuance. Now, the challenge is that very often they themselves try to select the best projects. And we are in a field where there's a lot of disruption. There's a lot of new businesses emerging for renewable energy or fintech and so on. So these are untested business models. And very often those companies are not as strong. They cannot justify of a strong historical track record. So naturally they are of lesser quality. And these institutions sometimes are finding it difficult to justify lending over long periods of time, like 10, 15 years, when sometimes it's necessary to build infrastructure because of this lack of track record. And my feeling is that what is missing a little bit is a system of guaranteeing those projects that are really necessary to change the way our economies work, but are based on disrupted models, and therefore there's not a lot of track record to go by. And I had an example recently where I approached one of these institutions with a very interesting solar project, And the response from that development financial institutions said that the project did not have a sufficient credit rating to invest. And I thought, well, this is actually your role, to provide this kind of support to projects that don't have that strong credit rating, to help this market to take shape. And I was taken a little bit by surprise by this answer, but that's kind of the reality of what we have currently. It's a market where there's still a lot of reserve against extending capital for projects that are untested or on technologies that are new, where
Right.
we are uncertain whether the business case is there.
Right. No, clearly, I think you're absolutely right that having the concept and the pool of liquidity is one thing. The second is that who is providing the liquidity and what are their investment and credit requirements? Because if corporates cannot raise capital on their own, then green will probably target a little bit of different, perhaps, investor base, but still the challenge of raising it remains. And using that as a lead-in to the next question, Mr. Saad, if I could ask you to share your experiences based on the fact that you have not only been on the investment banking side and looked at these projects from that perspective globally, but also are now engaged on the other side of the table as the borrower and seeking investment. So therefore, you have a very unique perspective of operating in Pakistan and the region. And it would be great if you could perhaps share your thoughts on what is the direction in which the funding sources, local or international, how should they be targeted by the local projects that are looking to raise capital?
Sure, thank you. I trust everybody can hear me.
Yeah.
That's one of the bigger challenges that I have seen when we look at Pakistan. So Pakistan has its specific challenges when it comes to the renewable energy industry. So the sector is divided between what you call IPPs, which is effectively selling electricity to the Central Power Purchase Authority of the government. And then there's another segment which we call the distributed generation. Now, when you look at distributed generation, and I want to put it all in the context of Pakistan because we are specifically looking at this market right now. One of the bigger challenges that I've seen, and I take a view as more of a financier and a developer of an ecosystem that can work for the players which are effectively offering the services. And I could hear in the first panel from some of our colleagues in the industry, and I think the biggest impediment was financing, probably raised at that particular point in time as well. And then obviously the off-taker. So the idea is, how do you come up with a system which can actually work? Then you have central bank on one side, which is trying to facilitate promotion of renewable energy by providing that facility, which is the subsidized facility that is available for promotion of renewable energy. However, there is a bit of a challenge because ultimately state bank is only providing liquidity and a subsidized interest rate. You're back at the end of the day to the commercial banks to do their own due diligence, to be able to assess the ultimate borrower and be able to allow them to go. So what I see a bit of a lopsided usage of this facility, whereby you have large textile manufacturers, you have large companies who have the capacity or the balance sheet that they could have easily borrowed even without the central bank facility to be able to do the projects on their own balance sheet, that what we call the captive solar or renewable. But the real challenge, the way I see it, is actually towards companies which are challenged on their balance sheet. What makes more sense for those businesses to do? Either invest in their own businesses or effectively then use their own balance sheet to actually promote renewable energy within their companies as well. So these are some of the things that we have been observing. We have done a utility scale project in Pakistan. I think we were one of the first ones to do the 50 megawatt wind farm here on the utility scale. We are currently executing a cement plant solarization. We have done for hospitality sector solarization as well. But the whole idea is that it's not just about solarizing a particular facility. It's about making sure that you create the enabling platform. So what you have is a lot of diverse players who are actually trying to seek these financing. Somebody seeking it on a balance sheet, and therefore you don't have the size and scale. So we may want to come and say that yes, Rion may have done 500, Shams may have done 200, but we don't see them, in a platform which then you can actually take to some international investors to be able to say that this is what you could actually look at financing and creating more liquidity to fund new growth. So one of the key issues that when we saw, and that's one of the reasons why we approached SCCP, we said that what we need to do is we need to create a conduit to actually facilitate financing these projects. So starting off, obviously, is that when you look at the lending side, you've got to make sure that you have adequate equity to support the balance sheet and be able to leverage and have the size and scale that is required to be able to get there. So we're quite happy to say that we're the first ones probably who are doing the first green Mudarba. We have been authorized by the SCCP to launch the first green Mudarba, which is going to be an equivalent fund to be listed on the stock exchange. And I think Chairman of Karandaaz, I appreciate Dr. Shamshad's effort in actually promoting and supporting our efforts in actually trying to get to a point whereby we could bring it into the capital markets and create a platform which could be a conduit for foreign investors to look at and see if there is a particular fund which is rated, which has, it has the size and scale which will allow you to be able to attract that investment. So as you may have seen historically in Pakistan, the utility scale projects are able to attract foreign capital. We have done it. I mean, US DFC, which is now DFC, formerly OPIC, funded our entire debt for the first wind farm. So when we go and talk to them, whether it's FMO or IFU or any other fund for no fund, the question is the size and scale. So when you go and talk about distributed generation and you say, I'm going to 1 megawatt or half a megawatt, how do you finance it? The legal expense of doing a transaction will probably exceed the total cost of the project, right? So that's what we're trying to do. Our objective is that we want to do a ₹1 billion fund. That fund will effectively then, at the holdco level, be able to leverage it and then invest in the projects. And our objective is to sort of ultimately be a technology agnostic. So we don't do EPC. So a lot of the players that we are talking to on this platform over there are the EPC contractors who are trying to shift to PPAs. Our objective is to bring it all together. We want to be the conduit of financing. So our idea is it's not just Birch, we should be looking towards the fund or the Mudarba to be able to fund them. Whether it's Rion, whether it's Shams, whether there are multiple other players who, if they have credible projects, our team is going to obviously vet them, understand exactly how they have actually done their EPCs, whether they have ticked all the boxes from that perspective. We can open up that avenue for bringing in equity as well as debt from the fund platform perspective. So you're absolutely right. And I think these are some of the biggest challenges that we looked at. And our idea was to create that size and scale, have a capital markets and sort of a dedicated business, because anybody who looks at a business internationally would want to see what the business is. Now, if you couple EPC with PPA, with financing, you don't get the transparency of actually seeing what business you're actually financing. So that's what we're trying to do away with by coming up with the idea of this fund. And then ultimately, as you rightly said, that you could do sukuks, you could do, different kind of bonds, capital market issues to be able to raise debt as well. And our objective is also to work with the central bank. Now, when you look at the limits that are going to be extended for 2 years, the central bank will have to focus on making sure that it gets the subsidy that they're trying to bring gets to the end user who actually needs it most, not necessarily to clog it up with bigger IPPs, because if you do one big IPP, you eat away most of that liquidity that may be available. So you've got to be much more sensible in terms of diversifying that pool and trying to push it down to the ultimate users who may need it. There may be the CNI people, there may be the consumer people. That's another challenge. So the other challenge, and I think one of the panelists earlier on from Sky Electric was talking about that they don't see enough financing in the retail sector. Again, that's a key issue. We need to crack that nut, and we are having active dialogues with K Electric and others to see how we can actually come up with a product program. I mean, I think more like a banker probably when I'm trying to address this is we need to come up with a product program approach. This is like a consumer finance business. You've got to structure it in a way that you make it bankable. And that's the kind of bridge I think we're trying to play in this industry. And we appreciate what we have seen from Karandaaz and Zaman when I've been having that discussion. I see a lot of effort, and I think we can help from the private sector to come and play and bridge some of that role if we can.
Right. Now, I agree with you, Mr. Saad. I think it is the domestic market that needs to step up and build a capital market or enablement for the capital to be raised. So there is a local investor base that buys these products. And they should be not only impactful, but return should also be there. And also, as you said, on the issuer side, the super ESCO or the utility scale projects need to be there that can issue these capital market instruments. And then there is, of course, the fund approach. So thank you for that. I think it's very insightful and does carry on from the earlier discussion. So now, if I can, invite now moving on to the development finance area, Ms. Bukhari, if you can share with us the PFAN program, there must be a rationale for you to structure that program, not only from your structuring and other advisory services, but also from the guarantee projects that you're now working on with the capital available with commercial banks and others. So if you could also weigh in on this as to how your efforts in developing this market will lead into development of this availability of capital, really. So there is a blended finance and there is a demonstration effect that the private sector follows in with. So if you could say a few words about your efforts and how you see this happening based on your efforts.
Thank you very much, Mr. Naveed. First of all, I'm glad to be part of the panel, and thank you for the kind introductions at the start of the panel as well. I definitely completely agree with what Saad has pointed out in terms of the local financing, the not having enough financing products for the consumers at the retail level as well. And the lack of financing overall has been raised as a challenge in all the discussions since I've been hearing since morning. I see the lack of investment is all because of that our local investors, the financial institutions, they do not understand, they are low familiar with the technologies, the business models. And in terms of the risk, they are more risk averse in terms of not having enough, space in their portfolios to go beyond the traditional lending they have been doing in the energy sector specifically. So how we have to actually change that investment culture in terms of the risk averse nature of the banking institutions and encourage them to have better assessment processes built in terms of risk assessment they conduct on these different projects that comes to them for the financing. What we are doing is that in terms of USAID support, our interventions, when we initially started in 2014 between 2015, we realized that especially the SME sector is one of those sectors which in any emerging economies plays an important role in terms of job creation. They are engines of growth. So they are often neglected and the borrowers do not really lend to them. And they need the financing they need in terms of growth of their business ideas is also one of the major challenges. So we came up with our credit guarantee program with our Development Finance Corporation, formerly OPEC, which Saad also pointed out. Where USAID and DFC is providing these credit guarantees through local commercial banks, was mainly to serve these underserved market of the SMEs basically, because the investment was not really flowing into the clean energy space for the SME sector, especially. And on the similar lines, I mean, we have to look at the demand and supply, both sides of the equation. On the demand side, if you have advisory services available, you have risk mitigation tools available like credit guarantees, advisory services. On the supply side, you also have to build the capacity of not only these small SMEs who lack financial and commercial know-how in terms of developing bankable projects. Their profitability, their creditworthiness has been a big challenge where investors were not comfortable lending them. So with that lens, after our credit guarantee program, we also actually realized that there is a need for a pure financial advisory services for SMEs, targeted on SMEs and entrepreneurs, just because this sector often do not afford those advisory services. They need help in terms of structuring their business models better, improving their business plans, financial plans better, and then there has to be a matchmaking services between the investors and these developers at those small, medium scale size. So the PFAN program, which you're referring to, the Private Financing Advisory Network, basically is a global network of clean energy and climate energy financing experts, basically. They build a model around in any country where they operate. They hire local subject matter experts who has the technical knowledge of the country, different technologies, and also they have the good investment background. So what they are doing is that they originate the deals. They talk to these different private developers. They come up with those, they create the pipeline of the projects. They support them through the start of the business development support. They provide investment facilitation support once their projects ideas has developed in a way that they are enough capable or bankable where they can introduce them with investors. They stay through that stage until they achieve their financial closure. They conduct financial investors forums, they connect them with investors, they stay on the table for the deal locking and ensure that the banks also, or the local investors, or be the international investors, they have some other investors on board as well, besides local investors, where they connect them with equity investors, impact investors, and other investor forum as well on the regional level as well, because the PFAN model is operating in a way that they are working in other emerging economies and regional levels as well. So that is why it was equally important to have that kind of support available, which looks at demand and supply, both sides of the equation. So I think in terms of still raising more financing and addressing the issue of not having enough investment in the country for the renewable energy projects, we still need to continue in terms of providing the risk guarantees in terms of coverage of the risk for the financial institutions for some time, as State Bank also is providing that refinancing scheme that served very well in terms of coupled with these guarantee institutions, our guarantee, Infozamin guarantee, where people were able to actually get the financing. Definitely, even in besides even that refinancing scheme one day has to go away, and the market has to evolve and accept that they have to carry on still these projects, because even on commercial rate, these projects make sense if they are bankable. So it's all about increasing the profitability and creditworthiness of these companies who goes to the investors. If that is increased, it can help facilitate investment easily.
Certainly. And I think you raise a good point that in addition to the private sector players and DFIs like yourselves, there is the regulator who has also enabled. And if I could bring in Mr. Noor in this discussion, based on what you've heard, there is clearly in the earlier sessions and now as well, a lot of interest in learning about the the experiences of State Bank's refinancing scheme, your own analysis of how it's been taken up, and how, if at all, it will be modified in the future, because that has been a very strong lifeline to the players in the renewable energy space to attract it. And we are thinking more from also with large corporates, sure, but also SMEs and of course the agri sector, all of the above. So with that preamble, if you could share your thoughts on the role that State Bank can play and what has been the experience in future.
Thank you, Naveed Saab, and thank you, Karandaaz, for holding this important discussion. I must appreciate and acknowledge that, because I think not only we are a climate challenged country, but we need climate smart financing and green financing, because we need to reduce emissions, greenhouse gases. But at the same time, we also need very strong economic fundamentals, and I think we are industrially underdeveloped country, and energy being one of the primary use for the industrial use, and as well as commercial use and household use. So I think we need to have very strong foundations for green financing going forward. I'm going to share what is actually State Bank doing. We have been actively involved in this area since early 2000s. So we introduced the green financing facility, but we also adopted green banking sort of guidelines, which are not binding like regulations, but these guidelines have been introduced to actually transform banks onto green banking products, services, and practices. And I'm going to come back to that, but before that, I'll address the direct question that you've made on the SPP refinance facility. So SPP refinance facility is basically for, of course, green financing of renewable energy products for solar, wind, hydro, biogas, biofuels, even geothermal as fuel. The target segments are households, as I said, owners of commercial buildings, agriculture, SMEs, renewable energy investment entities. So it's quite broad-based. And I'm sharing, the technologies or the types of fuels, and as well as the activities, because just to, showcase that what has been the State Bank's particular or primary objective in this case. With this facility, we wanted to sort of broadband and introduce green financial products to all these segments, so they become early adopters. And the early adoption was incentivized through, of course, banks have to fund and review and approve each of the projects by their own credit assessments, but we actually fix the terms of these facilities. So the end user rate is right now 6%. We provide the refinance, and bank take the credit risk against a 3% premium that they have to add on to that product. Now, coming back to what has been the uptake and experience so far. So as per the latest numbers, so we see there has been a good uptake in this facility. There have been over 1,500 projects financed under the facility with a value of around 80+ billion rupees, with a total capacity addition of power generation of around 1,500 megawatt. So overall, it has been sort of, it has laid out a good foundation for the type of products that we are talking about in this panel, as Pertinent mentioned, that going forward where the industry should be heading. So historically, we have been playing this kind of role in various segments, whether you name it microfinance, SME finance, and also green financing. And this facility has been, again, you have rightly said, it has been given a new lifeline of another 2 years. It was supposed to expire in 22. So this has sort of laid out the foundation, to sum it up in a way, for various actors in this space, whether donors, funders, capital market, players, to now further build, and including banks, to further build on that foundation, to scale up these projects beyond the 2 billion, that is the cap, per party in this case, so they can scale it up, of course. They can bring in innovative structures, they can bring in risk sharing facilities, they can bring in insurance products to further upscale it. Similarly, so if we look at going forward, in terms of State Bank focus on this area, so we are not stopping here. We are going to go with an open mind, and that I say that because SPP efforts do not end here with the refinance, which has been given, of course, a 2-year extension at the moment. But we will be using our market power and position, as a regulator and as an influencer and catalyst to bring in more products in this space from the financial sector. Similarly, services and also practices. For that, I will end my comment with a specific request from the market. And since we have a lot of donors and funders and multilateral agencies in this discussion and in the attendance, so I would like to make an explicit, request and reach out to them that we definitely need the implementation tools for the industry. So we have green banking guidelines. Banks have actually adopted the green financing facility that State Bank is providing, but they need to graduate beyond that. So internally, they need assessments, they need to have implementation tools for that. And also we need to have awareness and capacity building, both of the end users and also the market players. So I think significant investment needs to be there. Having said that, we have recently added PBA to the discussion. So Pakistan Banks Association has been added, and since I look after agriculture, and agriculture being one of the most climate challenged areas, so we have specifically asked from the PBA to adopt some sort of a charter at industry level to bring in and introduce climate smart agriculture financing. By that, we are specifically asking for, of course, products that introduce climate smart technologies, but at the same time, we are asking them to come up with mitigants for the residual risk and also on the capacity building. So there will be more action from that at the PBA level as well, but we have our options open. We can use the regulatory weight as well. So we're looking at those options and other central banks in various jurisdictions, that what sort of regulatory tools they're using. So we'll be increasingly working in those areas as well as we move forward. Thank you, Naveen.
Thank you, Mr. Nur Ahmed. I think you've answered the next question also that I was going to ask. So it's a very comprehensive response and I appreciate it. And the market participants have also listened hard to your advice. The final question that I have on my list, last but not the least, is to Mr. Suarez, which is that Green Map and your own experience, you have collaborated or collaborate with the regulators as well in designing programs, and through your past experience, the purchase, renewable energy purchase contract systems. In addition to that, the Renewable product, which is the insurance product, which is now, I believe, or is about to be live. So you've been looking at the Pakistan market also recently. So with your vantage point and taking into account all the discussion that's happened, are there any views that you would like to share in how we can, the country can leverage of the experience of Green Map?
Well, sure. Well, thank you, Navid, for the your kind introduction and for the invitation to Karandaaz and everybody. It's very exciting for me to hear to all of this. I'm sort of a newcomer to Pakistan's energy reality and plans, and I'm very glad to hear all the discussion, very high level, and also very in-depth insights from all the participants. I think based on our experience with renewables, it's very necessary to differentiate between the utility scale space and the distributed and maybe what we can call commercial and industrial procurement, right? They're different animals, to say something. With the kind of power market design that Pakistan has, there are possibilities to do all of that, right? It's not that that you need to create. You need to streamline some of the processes, I think. But based on international experience, what I hear is very encouraging. What I see is that there's a need to work on the bankability, right, of the long-term long-term contracts that are awarded, and that's basically because of the context of the power market. It is important to really assess in depth what the risks are, and that's what we did in Argentina, and what we're doing in other countries, right? And basically, I see a lot of parallel issues comparing the power market in Argentina at the time we worked for the government in implementing a procurement program with the situation that Pakistan has at this moment and that Argentina continues to have, which is relying on maybe too heavily on imports, having to subsidize some of the consumers because electricity is too expensive for some. So that creates a lot of stress on the system and creates some risks for the long-term investment and lenders. And that has to be addressed somehow, right? The way we did that was by implementing certain guarantees and also by designing some instruments within the design of the procurement and the PPA, which I think that exceeds a bit this discussion, right? It's going much more into details, but around the issues of bankability is really important to address liquidity and liquidity of payment. I mean, the security of payment of the energy, not short term, but also long term, and events of termination that have to be somehow covered by sovereign guarantee, right? That is applicable to almost every market where there's centralized procurement, like it is the case of Pakistan and most other countries where even those competitive markets, even those countries that have competitive power markets need to have some centralized procurement, and then those PPAs are paid by distribution utilities or government entities, single off-takers in some cases, and there are risks implied in that. So working around that and working around the guarantees in a way that minimizes the fiscal burden to the country is a way that we worked in Argentina by bringing in the MDBs and bringing in the World Bank to guarantee long-term and sort of upgrade the program in order to crowd in more private investment, right? Maybe the advantage of having a more developed local market and having local denominated PPAs, currency in rupees, is an advantage to the macro of the program. It's sometimes a disadvantage to attract foreign lenders, right? But there are many things that can be done around that. In our experience, the way that that creates the most sustainable market is to really lower those risks in the best possible way by allocating them accordingly and providing the well-structured guarantee schemes at the program level. That's what we're doing at GreenMap with different markets we offer to collaborate here as well. In the case of Argentina, what we mobilized was tremendous in terms of the impact, because it was a market that was totally closed to foreign and local lending for renewables under long-term PPAs, because PPA was not bankable. We worked a lot around the bankability of that PPA and the provision of certain guarantees in the scheme and the yield of that scheme, so that it could not be changed along the road by the successive governments, right, that come out over a PPA term. You usually have 4, 5, 6 different administrations, or potentially have 4, 5, 6 administrations that might politically interfere, right, with those contracts. So yielding that is kind of the key to this. In Argentina, we were successful at doing that. We mobilized more than 5 gigawatts of investment in new power generation that was built and is currently providing almost 20% of the country's electricity, going from 2%. The numbers are curiously very similar. Argentina is 30% hydro, 8% or 10% nuclear, same as Pakistan, about 40 gigawatts in size. So we mobilized a lot of investment with this kind of measures, and GreenMap now is helping other governments with that. So it's very encouraging, and the commercial and industrial market is something you should really go for. And there are many tools that can be implemented there that we can also talk extents. I see we have a short time. It's been great to at least have a chance to introduce ourselves and our work, and happy to continue here with the discussion on the side.
Thank you, Mr. Soares. I do appreciate it's a very powerful forum that we had with so many important players. And I'm very grateful for everybody contributing, and we went slightly over time. So Shawan, apologies for that. I think the message is very clear that there are common denominators here. In order to access markets, they have to be local markets probably, but also to international markets, access them. Projects have to be bankable. There must be conduits in the local market to attract them. The issuers should be structuring their products in a way that they can be accepted. The green mudarabas being set up, the green REITs being set up. There are guarantee schemes being set up through both support of the DFIs, but also entities like Infrazamin that are doing a great job. And finally, of course, this is something that through this forum, all the people who are participants who were not on the panel but would like to reach out to you, I would encourage that at least there's a dialogue that starts with both the local and international participants. I thank you for your time, and of course, it's a pleasure to have you here. Thank you. Shabana, back to you.
Thank you, Naveed, and to all our panelists for this interesting discussion and their time. The report on green financing, renewable energy and energy efficiency is now available on the Karandaaz website. We will now break off for lunch and namaz. We will resume at 2 p.m. with the presentation on the second research study titled Climate Smart Low Income Housing in Pakistan. You can either remain logged in or use the same link to reconnect. Thank you. Welcome back, ladies and gentlemen. Now, Mr. Akbar Ali Malik will be presenting findings from Karandaaz Pakistan's study on climate-smart low-income housing. Mr. Akbar is one of the co-founders of Impetus Advisory and will be speaking on behalf of Renewable and Impetus Advisory Group. Renewable is an innovator and investor with 30+ years of organizational heritage and expertise in sustainable development, working with public and private sectors across Asia and Africa. Renewable has a proven track record of pioneering and addressing barriers to scale in a global context, and is an experienced investor in the climate-smart affordable housing sector within Pakistan. To date, Renewable has delivered over 1,000 EDGE certifiable homes across Khyber Pakhtunkhwa, Punjab, and Sindh. The Impetus Advisory Group is a management consulting firm founded in 2019 in Islamabad by leading transformation specialists with extensive experience within Pakistan's public and private affairs. Impetus' expertise in data analytics, strategy development, and institutional optimization has facilitated the successful mapping of the affordable housing sector in Pakistan, and more recently, Pakistan's climate-smart housing landscape carried out in tandem with Renewable. Kindly leave your questions in the question and answer section. Mr. Akbar will address your questions after the presentation. Over to you, Mr. Akbar.
Thank you so much, Sharbano, for that introduction. I hope everyone can see my screen.
Yes, we can see it.
Wonderful. Let me give you a little bit of context. This was a study commissioned by Karandaaz on climate-smart, low-income housing in Pakistan. The purpose behind this was to ascertain what the current state of the sector is, who are the key players, and what are potential challenges and opportunities within this space in Pakistan. And that is what the presentation will address. Like Shabano said, we'll be happy to field the questions at the end. So let me begin, Ji. So there are three things that I would like to go over this presentation. First, an overview of the landscape, then some research findings, and then finally our recommendations. The overall message is that the sector is still nascent and there isn't a lot of sectoral activity, I think especially in the affordable housing space, but then particularly on climate smart low-income housing. As we're all aware, Pakistan has already begun to face the adverse effects of climate change. Now, this is true across multiple dimensions. We are ranked 8th from the top 10 countries most vulnerable to climate change impacts. Just in 2015, we had 50,000 people being hospitalized due to heat stroke. We've just witnessed this summer record-breaking weather in Balochistan and the heat wave all over Pakistan. Since 1960, we've increased the average temperatures by between 0.6 degrees to 1 degree Celsius. And by year 2050, 150 days in a calendar year will be days where the temperature is higher than 35 degrees Celsius. So this presents a pretty grim picture when thinking about how climate change and how climate change will in particular impact the country. And the impact of this will be disproportionately felt by urban and lower income populations. Some key figures to keep in mind: 17.5% of the urban population lives below the poverty line. 10% of otherwise durable houses, so not climate smart housing, but durable houses, they lack access to sanitation and electricity. 8.52% of the B40, which is the lower two income quintiles, those households lack access to clean drinking water, and 40% of the urban population in the country lives in slums or informal settlements. Now, this scenario presents a clear opportunity. Right? So the case for why green investment needs to happen in the affordable housing space, the stats that I mentioned earlier, and the need for, and the gap that is there in the supply of affordable housing, make a case for why we need to invest not just in affordable housing, but low cost, climate smart housing. Right? So We have used the number of 10 million affordable houses. That's the target, that's the need in the market. Now, if we were to use the fully climate compliant and green methods to construct these houses, we will be avoiding 200 million tons of carbon dioxide emissions for 10 million homes, right? So this number is then proportional to the numbers of homes we can construct. This itself presents a huge sort of incentive for all players in this sector, be it public or private, to really utilize climate smart approach in construction of these affordable housing schemes. Now, if we were to not go fully compliant, and by fully compliant, I mean there are three dimensions by which low cost affordable housing is how we think about low cost affordable housing, which is climate smart. Is that we maximize energy efficiency, we minimize water consumption, and we minimize embodied carbon within the construction process. If we were to go fully compliant on these three dimensions, we would achieve the saving of 200 million tons of carbon dioxide. But if we only do the level 1 edge, which is an IFC standard for green buildings, we would still be saving 160 million tons of carbon dioxide. And I mentioned level 1 edge here because there are players in the market right now that are compliant at this time. So the proof of concept is already there. If, however, we do not go the way of climate smart innovations while constructing the 10 million houses that we need, then unfortunately we wouldn't be able to make any dent in the carbon emissions or reduce the carbon footprint. So the case for why this is important and why this needs to happen sooner than later is both to extend the opportunity to the lower income segments of an affordable house, but also the larger climate change problem that is being faced by the country at this moment. Now, what have we found as part of our research? So part of what so the process through which we developed the research paper and the study was that we met with stakeholders from 6 key industries on the way. So we met with developers, we met with public sector policy makers, we met with NGOs and advocacy groups, we met with organizations engaged in housing finance. We met with architects who have worked on climate smart housing. And then we were also reached out to regulators like NICA and spoke with them about what the current state is, so that we could have a very clear picture of what is it that is happening in the sector at the moment. The methods that we used were the standard semi-structured interviews, we did surveys, we did focus group discussions. There was an entire initial phase of desk research and key informant interviews. Now, on the public sector side, the climate action efforts do not actively encourage the development of either green or climate smart housing. There are barriers to entry. The green developers are subject to delays like all other developers. The sector's growth is slow as a result. There is a lengthy process for registering land and obtaining NOCs. There is a need for one-window operations, which are absent at the moment. So there is the first bucket of challenges is to do with barriers to entry. The second bucket of challenges is to do with knowledge gaps. So there are just no formal data collection mechanisms in place to understand, but in particular because of residential development, how much are we adding in terms of carbon dioxide emissions, or how much is the carbon footprint. The current policies also overlook climate mitigation potential of housing. Right, so the diagram that I showed you earlier, that we have a potential saving of 200 million tons of carbon dioxide, that does not feature into the policy right now. And then there isn't institutional knowledge or expertise within the public sector that will help them create green building standards. Creating standards is one thing, then enforcement of these standards is another. Now, there is also no climate action industry limits, right? So we don't have limits on the industry that is involved in the construction to say, we want to curb the use of resource-intensive materials or techniques. We also do not have any financial incentives, for example, tax breaks for low-carbon products. So from the supply side of housing inputs, there also isn't an incentive to shift to climate-smart products or low-carbon products. what we did find was that there are the special housing finance companies, and there's a couple. They have led to some increases in mortgage uptake for lower and middle income. Trellis is an important player in this. They're a recent organization. They're a recent organization that were founded in 2020 with the goal of providing affordable housing to Pakistani. They have to date disbursed over PKR 1 billion. Similarly, we have the example of Ghar Ho, which is an NBFI, which is focused on increasing mortgage uptake. In our report, we go into detail of the financial mechanisms that are currently present, and going forward, how can we develop financial instruments or that will allow pathways of entry for not just public sector but also private players in this space. The evidence of demand, however, reveals climate smart is not typically a feature that can be marketed. And by that we mean that it is not that there is demand in the market right now or the awareness in the market right now from the buyers to say, I want to switch to a climate smart solution. The notion or the impact of climate change, we all feel it, but the understanding that this is being caused by climate change and why is it being caused and what can we do as individuals and collectives to prevent this, that understanding is currently not there. So we're still using standard concrete, clay, bricks, and steel, and they form the bulk of residential construction that currently takes place. Preference from the people that we spoke to and through surveys, we found that preference is still, at least on the buyer side, on the demand side, is for what is familiar. So, concrete buildings, steel structures, bricks are still predominantly the choice of the buyers. The business case, like we mentioned, for climate smart housing exists as lower income groups are price sensitive. So if we shift to less expensive inputs, we can make the business case for climate smart housing to the lower income groups. Change resistance attitudes can be avoided if the home does not drastically differ in appearance. So when we spoke to people on what is important to ensure that there is enough uptake of this, then one thing that came forth again and again was that these houses should not look different from what the houses of current construction techniques look like. New technologies are also so for example, if we talk about energy efficiency, while solar systems in cost have gone down considerably over the last few years, they're still a little bit out of reach for lower income groups, but that changes every year. Solar financing is available for higher income individuals and businesses from several banks, but none of this financing is available to the informally employed. So that is another sort of challenge, that potential opportunity for us to consider if we're looking to increase the energy efficiency of residential buildings. Similarly, the net metering that has been in the country post 2015-16 is only applicable to three-phase national grid connections, and thus are not a financial incentive for households that only possess a single phase connection, which is the low income group. However, favorable policies have made a dent in the housing finance space, but housing supply still remains restricted. So MPMG, the Mera Pakistan Mera Ghar scheme, has been a considerable success, whereby there was a regulated structure of providing finance to those who are looking for either looking to buy a place of their own. That scheme has been a success. However, the housing supply is still restricted. The Naya Pakistan Housing Development Authority, as we all know, pledged 5 million home over the course of 5 years. But that number is only their success has only been to around 13% of the total number. And a majority of those houses come from two entities. One is a Hoover and the other is a Workers' Welfare Foundation. There is unfair burden on private sector. What we have found out is that currently all climate smart housing activity has been done by the private sector. There is no government, low carbon or climate resilient housing project. As a result, the burden of housing shortage squarely just remains with private sector organizations. On supply, excuse me. On supply, what we found that land is still treated as a commodity, green finance is hard to access, and customers are price sensitive. And we've detailed what each of these mean for the market. So lower risk, high reward for developers is to avoid constructing homes. Right? Developers are perversely incentivized to continue selling undeveloped plots in societies. There are very few developers out there which will give you a turnkey solution. So, one way to go about this would be to say, we want to incentivize developers to create houses that are a turnkey solution, and we'll only be building climate smart houses. But that certainly is not the case. There are only a few affordable housing developers that are there, and we'll get into who they are later on in the presentation. Green finance is hard to access. There is actually very few indigenous pathways that are available for developers to obtain green financing. We already are aware of the economic situation the country is in. A lot of climate smart innovations will have to be imported, and that cost of import is obviously passed to the customer. And developers then end up facing difficulty in keeping these costs low. And the customers that we're trying to target, they're very price sensitive. Like I said, that there's only a few players in this space right now, and each developer engaged described customers as more price than climate sensitive. So it's not that they're shifting to these houses because they think this is a climate smart solution. They're shifting to these houses because they think it is price-wise the better decision to make. And what we realize is that that we need additional unique selling points to attract lower income individuals. So the three players that exist in the market, we found that who are engaged in the space. The first of them is the Insar Management Company, then is EPL based out of Lahore, and then Modular Tech, which is a Karachi-based developer. AMC has level 1 edge certified housing projects in Lahore for construction. Their passive design techniques have helped them achieve 34% energy savings, 42% water savings, and 35% less embodied energy materials. This qualifies them for level 1 edge certification by the IRS. And EPL, which is based out of Lahore, is also trying to enter climate smart housing space in Pakistan. They're already focused on providing housing for the low income groups. They have incorporated the fly ash brick technique in their housing project called Ocean Homes, and have now also developed their own production facility, which they're also priced at the right point so that it could be used in the future projects. Modular Tech is a developer and supplier of sustainable materials. Their homes, which are prefabricated, possess up to 90% energy savings. Their low-income homes are also equipped with solar systems, and the cost is included in a mortgage model that Modular Tech has developed. The great thing about these houses is that they have a very quick assembly time and do not require skilled labor to put together the house. Now, in summary, what we feel is, a lack of awareness has led to low demand, and therefore a lack of incentive is also led to low sector activity. So both need to happen. We need to both work on the demand side and the supply side here. So, like I said earlier, awareness of climate change, its impact, and the threat of warming climate possesses to human health outcomes. That awareness is low. The role of what residential construction can play in limiting the impact of climate change and creating a resilient sector to impact of climate change. That role is relatively unknown. Except those in disaster-prone areas, lower income groups are price sensitive. They're not climate sensitive. So, people who've seen disasters come about, floods in recent history, are very aware of that these floods have been caused by a phenomenon of climate change, but that awareness is certainly not there in the more settled or southern urban areas. Lack of incentives we talked about. So climate smart housing innovations are costly and imported. Treatment of land as a commodity is a very huge problem in itself, but also adversely affects how this space operates. The bylaws and the time-consuming approvals and general lack of an enabling environment creates further disincentives for players to enter this particular sector. So now what do we do, and where do we go from there? So part of what we are saying is that there are 4 things that we need to focus on. So and they're based on the challenges that we've identified early The first is that we need to reduce barriers to entry for developers. We need to incentivize and promote indigenous production of climate smart housing. We need to create and encourage a market-driven demand for climate smart and affordable housing. And then those developers who are engaged in this, we need to work out mechanisms through which we can facilitate these through green investments. In our report, we've detailed how each of these recommendations could be operationalized through a viable financing mechanism. And through Karandaaz, we hope that that will be spread to not just the attendees today, but to the wider audience, so we could at least start debating the way forward on this sector. And with that, I will close and open the session now for questions and answers. Let me see what I have in the chat.
We have some time to take questions. So if any of the panelists or any of the participants have any questions, please do share them in the Q&A box. Akbar, can you keep an eye on the Q&A box and see if there are any questions, that you would like to take?
Yeah, there are some questions. Let me take those. And I see a few questions here. So so one question is, which are the 3 developers that deliver to lower income groups? So I mentioned the 3 developers: AMC, APL, and Modular Stack. Their product is exactly designed for lower income groups, and they're also now exploring climate smart solutions to providing housing solutions for low income groups. Because again, as a private developer, their incentives from the public sector are limited, but they're very well aware, and during our conversations, they express that there is globally an awareness. So for them to become a potential organization or an entity in which foreign investment could come in, or investment from like larger global climate smart housing funds, they are pivoting towards now not just affordable housing, but climate smart affordable housing. There's another question which says, which is the impact you foresee the reduction closure of the NEA policy might have on housing supply in the short term? So, like I said, the one thing that happened as a result of the NEA Pakistan housing scheme was there was a regulatory framework put in place for commercial banks to start financing. And like I said, they had received applications over PKR 357 billion to process. However, again, the challenge there has been that there are few developers who have been able to complete the target that they've laid out. So of the target that they've laid out to start was about 5 million homes, of which only 13% have been constructed to date. And that will continue to be a challenge, because if you really sort of think about the incentives for developers, they are not building houses to sell at a lower price point to afford to those who can't afford them. They're creating these societies and unutilized land. So a lot of these developers are just selling land. They're not selling constructed homes. So that is one barrier, and the other barrier is that there is residual value of holding onto land and then selling it at a high rate, and that's how the real estate market has been working for some time now. So their impact in the short term, I think, will have to do a lot more with financing, but to those who can afford it. On the affordable housing space, unfortunately, they have not really been able to make a dent either on the affordable housing space or the climate smart affordable housing space. So they could have potentially added that to their agenda, and one sort of recommendation to the policymakers is exactly this in the report, that it's not just about making housing affordable, but also making climate smart housing affordable, because then you can actually tackle two problems. I hope that answers these questions. So Jia, I see a hand up.
Hi, 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 Akbar. Just a quick question that how you validate or verify, or who validates or verifies your climate smart home. So let's say if you claim that it's 90%, and if you say that it's carbon neutral, how you validate that, how you market it?
So the currently the level 1 EDGE certification that one of the players, Jam Management Company, has, that has been validated by the IFC, because that's an IFC standard. Similarly for module tech, modulus tech, that financing has actually sorry, on the edge level EDGE certification, that is actually done by the IFC, and they have their own auditors that come in and visit the facility and then give a certificate to the particular entity who has been constructing level 1 EDGE homes. So AMC has that certification. Similarly, those organizations like Modulus Tech, they also have level 1 EDGE, but will now be moving to level 2 of the same EDGE classification. For that, also similar process of IFC auditors will be followed. IFC comes, they send their auditors, they look at your constructed home and then give you a certification that your homes are now level 2 EDGE certified.
Just a quick follow-up. So you believe that the EDGE will be the overarching certification body for all the affordable housing, like 10 million housing units which are required in Pakistan? So they will be like, also you're expecting all the developers to develop as per EDGE standards and then get them verified, certified by them? Like, is that how we think that the market transformation will happen in coming years in Pakistan?
Sure. Alina, do you want to take this question? You have your hand up.
Yes, thank you, Akbar. Hi, Akrab. Nice to speak to you again. So just to reiterate, with our paper, we weren't exactly passing recommendations over one system over another of green building codes. Of course, EDGE has been developed specifically with developing countries in mind, and so it's a bit of an easier toolkit to use, and or that's at least what our developers who have engaged in climate smart housing so far in Pakistan, how they've sort of reiterated it to us. We've also, of course, conducted this study in tandem with REAL, and REAL so far has looked into the sort of differences that exist between different building codes and tools like EDGE, as well as SEED and the American version of it as well. And what we have, it's not necessarily something that we are recommending or we are saying ourselves. We're not passing a value judgment on which system is better or which system is worse. Obviously, each system of building codes has its own pros and cons for each environment or situation that we use it in. And it's just that the 3 developers that we've spoken to thus far, plus a few stakeholders and some people who are also at REAL, who've kind of confirmed that preference seems to be for EDGE so far. So yeah,
okay.
I hope that answers it.
Yeah, thank you.
Worries. There are also a couple questions in the Q&A section that, but if we still have some time, I'll just quickly sort of elaborate on. So one question which is quite interesting, which is asking why the focus is on developers rather than individuals who've historically built their own houses. So because we did look into low-income housing, so if you think of other countries with the advent of social housing, people who are from lower income backgrounds or hail from the B40, or just are lower income in some way, housing is an extortionate cost for many people, even if you're not from a lower income background. So the responsibility in a welfare state should be on the government or on other organizations to provide for housing. So the focus wasn't necessarily in this paper on developers, but it was on the construction of housing and who is able to kind of construct that housing. So the focus was less so on individuals, because if we're thinking of low-income housing, we're not assuming that that cost is something that a low-income person can bear immediately for themselves. The focus is on on what problems were within the landscape. So one being restricted supply, the other being that developers, of course, aren't incentivized. And so each stakeholder within this landscape, including the individual, was looked at. The sort of challenges each one faces was also looked at. But one of the major challenges for lower income individuals being that we didn't assume that they would necessarily be able to just build their own houses is why we are looking into the supply and supply side factors that exist. And we also have a comment from Laura on the commoditization of land. So how can developers be incentivized to develop CSH, or challenge, or how can we challenge this way of doing things? So this was a question that we did pose to each of the developers that we spoke to, that when we have such a prolific problem in Pakistan with the treatment of land as a commodity, with land prices rising exponentially, as you know, each day kind of goes past, as well as with inflation at the moment, with the prices of everything else rising at the same time. We did ask developers why build houses at all, let alone affordable houses or climate smart houses. And the answer that we got back is that, of course, the shortfall of homes that we see in Pakistan is clear evidence of the need for affordable housing. Demand is there. And the market definitely does exist. The kind of challenge that we really face is not just the commoditization of land in that way, but how do we make housing construction attractive to developers, or how do we, it is attractive, but how do we kind of have them settle for the slimmer margins that they would face making affordable homes versus the sort of much wider margins that they would face or they would have, you know, making large sort of mansions. So that is a challenge. And so far the developers that we've met have all had that sort of, you know, noble urge in themselves to want to develop the landscape and contribute to increasing the supply of affordable homes. I'm not sure how we would convince a developer that had zero interest in anything other than profit, to be very honest. So I think that's something for future research for sure. Yeah, thank you.
Thank you, Mr. Akbar and Ms. Khatri, for the presentation and answering all of the questions. We will now be moving forward to our second poll of the webinar. This will be displayed on your screen shortly and the results will be shared. Thank you.
Thank you, everyone. It's a pleasure speaking at the webinar. Thank you for having us.
The question is, what is the nationwide housing shortage in Pakistan? The options are 8 million, 10 million, 12 million. Thank you for your participation. The nationwide housing shortage in Pakistan is 10 million homes. Our fourth panel discussion of the day, focusing on energy efficient green buildings in Pakistan, residential and commercial, will be moderated by Mr. Hassan Ali. Mr. Ali is an investment professional with more than 18 years of experience in buy-side M&A, business valuation, financial modeling, and due diligence across sectors. Prior to joining Karandaaz, Mr. Ali was working as an associate director with the Abraj Group. He has also led the corporate finance team of BMA Capital Management Limited as a senior vice president. Over to you, Mr. Hassan.
Thank you, Shaban. So I would like to welcome everybody to this session on the energy efficient green buildings in Pakistan. Green buildings in Pakistan, as we've seen through the day, is a nascent concept. And as per an estimate, there are 7 million square feet certified green space in Pakistan. Annual energy consumption in Pakistan is 46% is in the domestic sector and about 28% is in the industrial sector, mainly for heating, ventilation, and air conditioning purposes. We believe energy pricing and consumption is one of the key drivers for green buildings over the next several years. We would like to welcome our panelists today to contribute their experienced views to this interesting discussion. I'd like to introduce Mr. Rahim Iqbal. He's CEO of IHV. Rahim is a technology entrepreneur for the past 25 years and a pioneer in green and IoT-enabled buildings. He has designed and enabled over 100 properties in Pakistan. He led the Hive Tower project, which is a LEED Gold certified building in Islamabad with first vertical garden of Pakistan. I'd also like to introduce Mr. Akrab Ali. He's the CEO of Pakistan Green Building Council and a founding member of the Pakistan Green Building Council. He's also CEO of Sideworks and an architect by profession. Mr. Akrab is the lead accredited professional from US Green Building Council and one of the founding members of Civil Society Coalition for Climate Change in Pakistan, and also a member of the Technical Committee for Energy Conservation Building Codes for Pakistan. I would also like to introduce Ms. Emma Ahmed. She's a director at Altair International UK. She's a senior leader and experienced expert in affordable housing and sustainable energy urban development. She has worked with the European Commission, the Asian Development Bank, the World Bank, FCDO on large-scale projects across Asia and Africa, overseeing a large portfolio of affordable housing investments. And finally, I'd like to introduce Mr. Sajjad Mughal. He's the founding member of Pakistan Green Building Council and a seasoned businessman with extensive and diverse experience of over 30 years. He's currently leading energy efficiency financing expert for the World Bank in Pakistan. He has also served as a senior advisor at USAID Pakistan Mission and in leadership position at Policy and Planning Division and SME Development Authority for the Government of Pakistan. Welcome to the panelists. To start off with a basic question, what is a green building? And maybe Mr. Sajjad can help us define what a green building is. I think Mr. Sajjad has not joined the meeting, so Akrab can take this one because as a professional architect, as a certified lead professional, and also the CEO of Green Building Council.
Thank you, Hassan, and all the panelists. And so, Hassan, I think for Pakistan, the definition is no different than any other country. I think we have to, so if I have to, define it in a layman terms, we have to reduce our dependency on the electrical and mechanical systems which we use in our homes. And we have to make homes which are self-sustainable in terms of materiality, insulation, the things which were been used in the past. If you remember, in the old times, people used to make homes with thicker walls, higher ceilings, a lot of mud on rooftop. The purpose was not to do anything else to make it more structurally stable, but to make it more thermally comfortable. And for our region, it is something which is very, very important. But in old times, we had bigger plots. So we have those opportunities where you can have thicker walls and higher ceilings and all of those. But with the current scenario of developments and master planning, where you have a very limited space in your plot, where you cannot afford to provide, a 13.5 or a 16-inch wall, now we use technology to make homes passive and sustainable. So I think that's the easiest way to explain that what the green buildings are.
Thank you very much. I think Dr. Sardar Mausam has also joined us. Dr. Sardar is the Managing Director of NICA. He holds a PhD in public policy and specializes in the area of energy and environmental policy. He served as advisor with public sector academia and international development partners in energy sector reform, and has led the MIT Climate Collab on the energy water nexus. So I would like to welcome Dr. Sardar to the forum. I think Dr. Sardar will be joining us shortly.
Hassan, both gentlemen are, I'm just interjecting here, sorry, both gentlemen are running late. So I would suggest, you carry on your conversation with the 3 participants who are here, and we will intimate you when the 2 remaining panelists come in.
Thank you very much. So to continue our discussion, and one of the questions that Arqab you asked in the previous session, what are the guiding frameworks? I mean, we have LEED, we have EDGE, we have the British standard, BREEAM, and I'm sure there are local standards also driving this. So if one is looking to reduce the carbon footprint of a building, what standard does one actually follow? And I understand Pakistan Green Building Council has also developed a sustainability in energy and environmental development tool. How does that have a positive impact in this scenario?
So, Hassan, so there are a lot of guidelines available. There are international, which you have mentioned. There are local as well. We have Energy Conservation Building Codes Pakistan, which was developed by ENERCON now, which is now converted into NICA. And the Energy Conservation Building Code was published by Pakistan Engineering Council back in 2013. There were some legislative issues in the document because the document was only implementable on projects which had electrical load of 100 kilowatts and above, which means that by definition, we have excluded all the housing sector from that guideline. Now the guidelines are, the Energy Conservation Building Codes are now in a redevelopment phase with a new baseline where it can be more applicable on the building housing sector. The other international compliance requirements like EDGE, SEED, LEED, or BREEAM, they are all international rating systems, and we see in my experience, they have market niche. So there are like certain individuals or organizations which are more focused on those guidelines because they give them benefit in terms of branding, marketing in an international market, or they provide them support in securing financing from development organizations. But if you talk about market transformation and what statistics we have seen in the last presentation, where we are intended to save 200 metric tons of carbon emissions through affordable housing only, and we are just focusing on the new sector right now, we are not talking about the existing building stack we have and how to improve that. I think it will be a challenge to penetrate into that market because this market will remain a niche for many purposes, which I just mentioned. The other thing that we also talked about in the last presentation was the implementation challenge. The validation of what we are doing is very, very important. The challenge always remains there in Pakistan. The implementation is an issue. And we must know that, we have a lot of documents, we have very good guidelines, we have procedures, we have developed by engineers and architects in Pakistan. But who is going to be responsible to implement those guidelines on ground? That's an issue. So who is the responsible body? We do not have a centralized responsible body. That's one thing. The other thing is that there are many ways to implement it. So let's say you have a regulation. That part is there. I think that is pretty much covered. The second is the capability of the local market, the professional sector, which is the architects and engineers. Do you have enough architects and engineers who can design those kind of buildings? Because you need to have certain skills of developing an energy model to quantify the saving. So let's say just saying that I have provided a insulation in the wall and insulation on the rooftop doesn't quantify any building to say that, oh, it is a 90% energy efficient building. Reason being that when you change the orientation of the building, so let's say if your house is south facing, it requires different strategy to become 90% efficient. But let's say if your house is a north facing house, it again requires a different strategy. So lot of it depends on the circumstances of your project or a building or development in itself. So the second is the capability issue. First is the legislation part, second is the capability issue, then becomes the part of the regulator or the local municipality. That if architects are able to produce those drawings and if engineers are able to make all the calculations at the government level, who is going to vet that? Who is going to verify that? Where they have to submit those documents? Is it a CDA's responsibility, LDA responsibility, and what capability they have to verify or check those documents before they can provide an NOC to the end user or the house owner that, okay, your building comply to all the energy standards, international or local, whatever, and now you can start constructing your building, and then our inspector will come and see that if you have provided the specified insulation which was required in the north wall or the south wall or the west wall. So there are like a lot of steps, and like each step has different requirements. So the challenge always remains that how you connect the legislation to the implementation on ground, because unless you don't have an on-ground implementation of all these good things which we talk about, we cannot have carbon neutrality, we cannot save 200 metric tons of carbon footprint, and we cannot save energy either. So there are areas which different areas are now into process of so the working is happening on different levels. We have to see that how it follows through. You guys are working. There are many. There's like a lot of work happening in silos. So we work in like you as a Karandaaz is working on it. World Bank is working on it. USAID and IFC is working on it. I think there has to be a collective platform and focus to really have some kind of a national impact for this.
Just to add one more thing, Akram, which is we done a project together just to support your discussion. There are two more things which is like supporting, which is one is the education and the awareness, right, for the developers. That's also very, very important. And the most important thing I would say is that if we go with the tax incentives to those peoples who are actually taking initiatives of green building, that is the most important thing. It's a key indicator for any federal government, because it's not the federal issue, it's a provincial issue, right? That to regulate the entire industry. But when you have the LEED certification, BREEAM certifications, and you are actually taking care of from silver to gold, gold to platinum, then only you can have the tax incentive for those developers. Probably this will also help our industry to grow into the green systems. Thank you. Thank you. Just to add.
Thank you, Rahim. Then I was just going to come back to you after Akram's discussion, because you've gone through this process recently. You developed the Hive Tower in Islamabad. So what kind of challenges and issues did you face when you were developing that project, and how did you address them?
Frankly speaking, we develop not only the green building, but IoT enabled building, right? So it is a next generation building. We are talking about to monitor every single parameters. So green buildings like, the LEED, BREEAM, so everyone has their own guidelines, but over and above, now the green is actually added by the technology also. And having the technology together with the LEED buildings is another advantage to the entire ecosystem, right? So right now, the challenges which we have faced in the last project, I would say it is difficult for us to identify the right resources to implement the project. That was the biggest challenge because Akram was the consultant of the project, so he knows, right? It was a very difficult for us to identify the contractors, get them understand. The site supervision was also very important. So these were bigger challenges. But the good part about so far within our ecosystem is our consultants are enough and mature that they actually identified that who are the the contractors available in the market who understand this language. So what I said earlier in Akram's discussion, that education to the developer is also very, very, very important.
Thank you, Rahim. And I think that we'll like more feedback from Emma on this, because as Emma, as you work on the climate smart affordable housing in various jurisdictions. So how are you seeing the transition to net zero, and how is the implementation of ESG being taken into account with all these different regulatory or standards which are being applied?
Thank you, Hassan. It's a great privilege to be here, and thanks, Akrab and Rahim, for your comments. I completely agree with them. I think when it comes to affordable housing, it's a slightly different. There's slightly more complexities in the system. So when you're talking about the low-income segment in Pakistan, you're talking about around 72 to 80% of the population that is working in the informal sector. And for them, the idea of an environmental sort of impact isn't something that they're necessarily conscious of. So that sort of education and understanding of the impact of climate change on their daily lives can be quite an important aspect. But in respect to your question around what I've seen elsewhere, I think my main two comments are that we need a two-pronged approach to dealing with affordable housing. And that's talking about mid to low income segment housing, generally speaking. And the two-pronged approach really has to deal with the current stock that we already have, and what do we do to make it more resilient, reducing its ongoing carbon footprint by bringing its energy use down to zero, because that stock it's inconceivable that we could rebuild it in any way. So we have to think about what are the financing mechanisms and what are the incentives to drive customers that already have those housing to incorporate sort of retrofitting and things that will reduce their carbon footprint. And the second is, how do we address the development of new buildings to ensure that we are not contributing further to the increase of carbon emissions? So in my experience, I've seen a number of different developments across Asia, South Asia, Middle East, etc. And there are great examples of green and eco-smart cities in places like Masdar City. Singapore is building like a 42,000 eco-smart city. And these are great examples of taking the environmental climate change extremely seriously and incorporating very high and stringent regulations from the outset. But it's about also thinking about what is relevant for Pakistan and what is achievable for Pakistan. And and I think there's many improvements that can be made in Pakistan by thinking about things like compressed earth bricks, thinking about fly ash bricks, about modular technology that's incorporating insulation into it, increasing the quality, thinking about passive design, that type of thing. And these are the types of sort of products that we've seen across, say, Philippines, Nepal, many African countries like Uganda, Kenya. But to the extent that they are scaled is questionable, and also to the extent that they're scaled against the problem that we're facing, which is just huge numbers of housing deficit, and what that will contribute in carbon footprint is I guess a question that we need to think about. But I would think that in Pakistan, bringing in policies that that look at things like how to reduce the incorporation of burnt bricks, how to improve customer mindset and education towards climate change, how to improve regulation and the sort of, how do you say, incorporation of that, how the auditing of that into the process is really important. Those would be my comments. And perhaps that things like IFC EDGE certification will give you a stepping stone, because LEED and BREEAM are sort of, I think in many cases idealistic, and perhaps where you have a significant amount of funding are possible to achieve, but where you've got huge numbers of people urbanizing into cities, and most of them being in the low income segments, we have to think about what are the incremental changes that we can make. And there is definitely evidence now to show that we can reduce carbon footprint on a normal low income home by 30 to 40%. And that will be a massive reduction of carbon if we look at the numbers of people that we could impact by just doing simple things like painting your roofs white, incorporating green spaces into the areas that we have informal in master planning and low income housing, doing things like incorporating taps that have a reduced flow on them, for example. These are very simple things that can be incorporated without too much cost and can see significant improvements for the Pakistani population.
Thank you, Emma, for that.
Yeah, just Hassan, just one thing I just wanted to mention here to Emma, right? So in the last project, what we have done to reduce the carbon footprint, we actually built the largest vertical garden, right, in the building, right? And we planted about it's 30,000 plants. So the height was the vertical garden was 80 feet, right? So what we have done, right, we curtail, and probably we will be returned back to the nature is about in the next 3 years, the carbon footprint, whatever we used during the construction time. So that these things also, are taking place, and that is also which we can actually claim for the carbon numbers also.
Thank you, Rahim, for that. We have Dr. Sardar Muazzam, who's joined us. Thank you, Dr. Sardar. Dr. Sardar, as we know, is a PhD in public policy and is an expert in energy and environmental policy, and he has led the MIT Climate Collab on the energy and water nexus. Dr. Sardar, there was a question earlier which we've come here, so I'll pose to you. So what are the incentives that are in the pipeline or being offered to the private sector to have the energy efficiency and a green building mindset?
Thank you very much, Hassan, for introduction. I think what we are currently looking in terms of, especially at a national landscape, that how we are looking at the green buildings and the kind of capacities we have. And then I think then this question comes in, that what incentives are available. I think generally, if you understand, means from more of our perspective, I think there is always this challenge of a split benefits. because and challenge with especially energy efficiency in the building sector is that the developers or whoever, if I am building a house, and why I should look for energy efficiency if I have to rent it out. Similarly, the big developers who are trying to build these buildings, what is the incentive for them? I think this is actually raising this question mark, like how we can sort of internalize all this discussion into this whole policy framework and the regulations which we are trying to make. So I think this then goes back to especially steps towards institutionalizing the green buildings and how we can do it in Pakistan. So I think if you look into the ECBCs, that energy conservation building codes, we had one, the previous one in 2013, but I think they still needs revision. We have already been working extensively with Pakistan Engineering Council and from quite some time waiting for the committees to constitute and get it done. But I think this is one of the very important question mark that when we will be able to take it to the next level. I think one of the challenges which we always face is that how we can institutionalize these things first and then go forward for their implementation. Recently, I think a couple of months or maybe a year ago, we organized a session with the CDA and all these developers, and we were looking into the options like how we can reissue this SRO to ensure that the green buildings or energy conservation in the buildings should be ensured. I think a special kind of challenge which we face with all the discussions, right from the architect, he has no idea, most of them, for example, that how to sort of design energy efficient buildings, right? There are architects who knows that, but I think a big number is unaware, for example. Step two, like who approves these maps or whatever they design? That goes to the development authorities, maybe CDA, LDA, KDA, all of them. Now, looking into them, how exactly they will understand what is energy efficient and what is not. And I think then it goes to the developer itself, like what exactly his interpretation of this building being energy efficient, right? And then there are the building envelopes and all these things which we are talking about. And lastly, I think the question is, are these appliances available? For example, once you have these materials and then the appliances, are these available? I think these are a set of questions which I think we haven't yet been able to frame very well in the country's context. All what we are trying to do, at the top, like what incentives we are talking about, when once we don't have that framework available on the ground, what kind of mechanisms we are trying to build into the systems when we don't have overall, things in place. So I think for us, it's very important at this stage that we should, and what we are trying to do as of right now as well, like build this framework, put these things in place. And I think then definitely that comes into the next step, that what kind of policy framework is needed. Either it's a carrot and stick, or we are just going to incentivize, or this is a private sector part, how they will play their role. So I think then this second thing comes into this whole context. But I think overall, again, the question is like, for a lot of people, when we talk at national, at international level, and especially in provincial level, the question is, what is green building, in fact? Is it the green building just we are talking about energy efficiency? Is it also along with the natural resource, for example, the water resources we're trying to deal with? So these are some things which we are sort of building up, and I think at different forums we are highlighting. And I think we are already currently, government is in process for the solarization of building that should also come along with the energy efficiency audit. So along with that, these things are being worked out very well. And lastly, I think the policy draft of energy efficiency and conservation 2022 has specifically provides this kind of policy directions and interventions that these policy interventions on the building sector, what they should be. And I think we have been already working with different donor agencies on this, the same context, that how we are going to build it up and how we can see these options further. So I think it's something, I think we are late as a nation. I think we should have done it maybe 10, 15, 20 years ago, and our systems should be in place. And then I think we would have been in a much better position. But somehow it's late, but I think still things are going in the right direction, and we will be able to get it through that side. Thank you very much.
Thank you, sir. Definitely we are moving in a positive direction. And as you mentioned, we collectively should move in a faster pace to bring us in line with everything else. You raised a very interesting question about developer incentives and why would they be passionate or what kind of return they will seek to develop such a project if they only want to rent out a building. So I think this question directly goes to Rahim, because Karandaaz and IHB have partnered together to build a green building in Karachi, and then with the international standards. I think Rahim will demonstrate what is the passion behind the project and what kind of carbon footprint we are looking to improve, and what kind of savings we are looking to achieve, and how they will benefit the tenants who will come into that building.
Yeah, just to give you a brief about the project which we are going to start in Karachi. It is a project, not only the green, it's a technological building, because most of the tech companies will gonna use this facility. Apart from this, in terms of carbon footprint reductions, we are coming up again with another landmark for Karachi, as we done it in Islamabad for the vertical garden. And here again, we are actually counter the carbon with the 30,000 another vertical garden plant, complete plantations. And parallel, in fact, the most important thing is the daylight saving. Unfortunately, as a nation, still we are not being able to understand the daylight saving and how we can do it. That's the million-dollar questions that everyone is trying to understand, and the world is already ahead. And first time in Islamabad's building, we work with one of the international company, and they help us to reduce the overall daylight saving. You will be surprised that we are approximately saving somewhere close to a 70% only in the energy bills, right? So this is where the developer, so the biggest, as Sardar Saab said, it's an education issue, right? Education to the developers is the most critical part. And parallel to our provincial authorities like LDA, KDA, SBCA, so their education is also very important. So taking your question in this frame, so we are trying to not only to reduce although we are going into the rental business, of course, renting out the entire property, but the most important, if I'm renting out my property is 100 rupees mark to market price. And if I'm asking 130 rupees and I'm telling them that I will reduce your overall energy cost up till 66%. So probably they'll be saving energy efficient building is about 50 rupees. So how about it? I'm actually making 30% higher price than the market price. And the customer is actually getting 50 rupees and paying almost a 20% lesser market price. But the biggest problem with the developer is the capital cost. They really don't want to put it in the initial phase. And this is where the most, I was listening last presentation. So someone mentioned that the developers are only interested in the profits. It's not about only profits. This planet is ours, right? So we have to work. We have to work for our generations. This is where we have to contribute to the entire ecosystem. So I think these are the best practices. If developer adopt, probably they'll be making more money and their ROI will be much, much, much better. And that only be possible if the regulatory bodies start educating these all developers?
Definitely, Rahim, one of the key points that you made is that we are all living in this world and this country. So we have to look beyond just the financial incentive and look at the next generation and how we are going to improve lives for them. So thank you very much for that comment. Sajjad Mughal has also joined us. He's the founding member of the Pakistan Green Building Council. He's an accomplished businessman with diverse experience of over 30 years. And he's currently leading the energy efficiency financing expert for World Bank. He served as senior advisor at the USAID Pakistan mission, and he's also been in leadership position at Policy and Planning Division and SME Development Authority, Government of Pakistan. Welcome, Sajjad.
Thank you so much, Hassan.
I have a question for you. I mean, as we are developing in these and as your work in the Pakistan Green Building Council, are you looking at a future where there will be a minimum baseline requirement in the building code, which will ensure that certain energy efficiency are a requirement within the design of the project right at the inception?
Hassan, I think there are two pressure points, and I will also leave a part of the answer to Akram because he is living that core thing and playing with the rags and the minimum standards day in, day out. But on the very onset, I am optimistic by design and by my nature. And remember that we all tend to forget development is a long and a painful process. So living and practicing development for 2 decades myself, changes are always incremental. And it starts with, floating an idea, advocating behind it, and then building a narrative around it. So what Sardar Muazzam Saab, in fact, has identified that while we have developed a narrative, we haven't really customized it to the relevant audience. And we have already identified 4 or 5 critical stakeholders in this whole equation. One is the regulators who are who are authorizing these maps and the standards. These are the development authorities or different municipalities. And then there are scores of different professionals that are required, civil engineers to architectures to the suppliers of materials, and then the actual labor force and the workforce, which needs to in fact put all these things together to create a green building in itself. And I'm sure Rahim will also support me in this, that there are challenges at every stage of it, from a design to a client, advocacy, and then creating a numbers or a commercial value around it, regardless of its, human value or the social value, or even a country value. So be it, because we are a part of a larger global culture and a global system. And change in environment is, regardless of the borders or the nationalities, hitting us all in a varying degree. First of all, we need to understand there is no life without living a green life. So this is not a choice anymore that we can choose one over the other. The second thing is there are 2 stages from a financial and the commercial perspective. The first part is a startup capital, when the large in a building structure requires a large mobilization of initial investments, and see that how it is. And we were doing a number crunching about a week back, and Akram was also present in that conversation. And we realized that the largest contributor of carbon emission, which continues for the life of the building, is the energy. And if you look at the energy, the incremental cost of complying and hitting the energy or bringing the energy within the ambit of the green boundaries, it is only a 1.5% to 2% if it is a retrofit, and if it is even from a get-go, if the cost of the land is also included, So I don't see the initial capital cost is an issue. The issue is the behavior, the approach, the narrative. So the bigger challenge is not the money. Money follows wherever there is a commercial value and a commercial proposition. We all don't buy cheap cars. We all don't buy cheap air conditioners. We all don't buy cheap microwave ovens. The moment we value or start, even we don't buy a cheap milk, which is packaged. We are ready to pay a price twice as high just because we have lashed on the value proposition. So I think our narrative is not customized to the right audience. So as we are saying that we are using local materials, we also need to use the local language and vernacular message, which in fact sinks into the right audience, honestly speaking. Money is the last problem in this equation. That is, I'm telling you from my own experience as a banker, as an investment structuring advisor, and I have done a scores of the transactions and the projects. People are willing to throw away money, just show them the value. And the value comes from the narrative, and value comes from the commercial value and the messaging around it. I hope I answered your question.
Yes, definitely. It's an important point that you made, that we have to focus on the value and not just the cost of doing it. And the value is what is going to drive this for the future. To close out this conversation, I had a question, because we've been talking about green building, but what about green houses? And is there any interest that people are seeing in the eco-friendly design? And I think Akram, as an architect, can better answer this question on how the clients are approaching it.
So it depends on where you're talking about this thing. So there is lot more awareness in cities. So if we talk about housing units in Islamabad, Lahore, Karachi, Rawalpindi, maybe Peshawar, Quetta, the main city centers, the exposure is higher towards the climate change, the climate resilience. The message is more, you can say, communicated in these communities in larger cities. When we move to smaller cities, the only connection we see is that, let's say, if someone is living in Lahore and they have some background from a village close by to Lahore, they will invest into green home back there in their community, maybe in a village or a small town closer to the bigger city. So the message issue, one, is huge. That's not communicated to the right audience, because that's why the main market transformation is not happening. I feel that's the issue. The second is like you said, the demand for green homes as a buzzword. Yes, it's been sold a lot by many people, but again, it can create a bad name for the green homes as well. Just like, if you remember, when the solar came into Pakistani market 5-10 years back, the solar companies sold those cheap quality refurbished equipment to many households. And as soon as people spend money, they were thinking of that, from next month onwards, we will not be having any electricity bill. But what happened was that a lot of those homes which got those solars are now rubbish. We don't know what to do with that e-waste, because that's another headache which we have to cater for in coming days. So when you market green homes, there has to be some regulation behind it. Otherwise, there are a lot of people in the market which will sell it. They will earn premium on it, but unfortunately, the end user will not benefit for that. And it can create a bad name in the market, and then it's another process of rebranding, remarketing the whole thing, and spending another 10 years to make people understand that, oh, there is nothing wrong with the green home. Someone just sold you the wrong thing, and you have to do it the right way now. So to make it right now, the message has to be clear. The regulator part has to be covered. The financial incentive part has to be covered. I think we missed one part, which was related to green banking guidelines, which was developed by State Bank of Pakistan to facilitate green housing or green buildings in Pakistan. The solarization of a house, maybe a retrofit or a new building. And now I think they're expanding that to maybe energy efficient air conditioning systems or glass. So maybe the tax incentive is not there, but low interest rate financing is already there in the market. So it's not that there is nothing there. There is something. Then you have IFC financing. They have if your facility is going for EDGE certification, there are mechanisms where they can provide low interest but you have to be in that affordable housing category to get that access that kind of financing. There are many ways to go around it.
Okay, thank you very much, and thank you very much all the panelists. I'd just like to conclude here, as we are 5 minutes over time now. So the conclusion I think from this discussion is that climate change is a universal thing, and we in Pakistan have to adapt to it like everybody else. And the three key ideas which need to be worked on and to be fast-tracked is the policy, the capacity building, and then the regulatory capacity or the building codes development. And as an output of it, that we have to look at a green building in terms of its life cycle, not only the cost of construction on day one, but the benefit that you will achieve over the life of that investment or of that house is going to be significant. Thank you, panelists, for your participation.
Thank you, Mr.
Thank you,
Ali.
everybody. Thank you. Thank you.
Thank
Bye-bye.
you, Hassan. Thank you so much.
Thank you.
Thank you, everybody.
Back to Shabana.
Thank you, Mr. Ali, and to all our panelists for your time. We have now come to the last panel discussion of the day. I would like to welcome Mr. Ali Akbar Khangro, Senior Manager, Knowledge Management at Karandaaz, to moderate this session, discussing the benefits of coming to net zero, modalities and challenges. Mr. Ali Akbar has been involved in various research studies and data gathering exercises in the domain of financial inclusion for SMEs and individuals in Pakistan. Prior to Karandaaz, he was associated with Pakistan Microfinance Network as Head of Research and Ministry of Finance, Government of British Columbia as a tax policy analyst. His areas of interest include public finance and public-private partnerships. Over to you, Ali.
Thank you, Shabano. I'm honored and privileged to be moderating the last panel, which, although is the last panel, deals with a very important issue of getting to net zero and tackling the relevant technical and financial challenges. So it sort of brings the whole day's discussion to a very appropriate end. Net zero, as we understand, refers to the target of reducing greenhouse gas emissions that cause global warming to zero by balancing out the release into the atmosphere from sources with the amount removed and stored by carbon sinks. So where is Pakistan with regards to net zero, and where is the industry? In Pakistan, we have about 22 big players in the textile sector, which include Artistic Millionaires, Crescent Bohman, Gul Ahmed, Interloop, Liberty, Mahmood Group, Sapphire Fishing Mills, Surti Enterprises, Tetra Pak, and all other big names. And they've sort of joined the global race to zero campaign. The campaign aims to rally leadership, business, cities, regions on a global scale to achieve net zero carbon emissions by 2050. So it's an all-inclusive target and goal that we are working towards, where we are not only part of the local, but also the international and global community. So through this panel discussion, we'll learn about the benefits of going to net zero. Why are we going there? And the type of commitments that we will require to get there. Participants in this panel will discuss both private and public sector initiatives, such as Net Zero Pakistan and the EV policy that we have yet to hear about in today's discussion. The role of technologies that the role of key technologies that will play a key role in achieving the net zero goal will also be highlighted, hopefully. I will now start by introducing the very diverse and rich panel that we've managed to bring together. We have with us Mariam Sarem. She's a CEO of Insta Energy, a first of its kind women-led business. She's a founder and CEO. It's a solar company, Insta Energy in Pakistan. It's a player in the market. The company's mission is to provide reliable, sustainable, and cost-effective solar energy to its customers. It was established in 2018 and has grown since. It has now operations in Karachi, Lahore, Islamabad, and Peshawar with an installed base of about 3 megawatts. Mariam has an MBA from IPA, Karachi, and an MS from Birkbeck College, University of London. Welcome, Mariam, to the panel.
Thank you, Ali, and thank you for having me.
Thank you. So joining Mariam is Ms. Sophia Snen. She's the founder of Linked Things, the only metaverse of things provider in Pakistan. She's worked with Telenor, Deutsche Telekom, GSM in strategy, products, and market engagement roles. Her work took her across Asia, Africa, and Europe, and got a chance to watch market dynamics in urban situations. Her passion to find high-tech solutions for real businesses and social challenges has led to the formation of Linked Things that focuses on smart manufacturing and smart cities in emerging markets using Internet of Things and big data. She has a BE and MS from NED University and University of Michigan, respectively. Thank you for being here, Sophia.
Thank you very much. Looking forward to discussion.
With these two ladies, we have Mr. Osman Sheikh. He's a CEO of Jolta Electric. He's the founder, chairman of OZI Group. He has graduated from LUMS and he also grew up in Lahore. He enjoys talking about various things such as mobile games, electric cars, renewable energy, as well as software developing companies. As co-founder of Jolta Electric, a company under the OZI Group that aims to solve Pakistan's pollution and environmental problems by electrifying the transportation and energy sector. As a strategist, he creates business models that empower people. Many of the startups have now become successful companies after he founded and bootstrapped them. He and his team are passionately working towards electrifying the future, 1 watt at a time, through renewable energy startups. As an investor, he's passionately looking to fund electric vehicle startups, mobile apps, e-commerce, and technology startups. Thank you, Sheikh Saab, for being here. We look forward to learning about the EV policy from you.
Thank you so much.
We also have with us Mr. Noman Bashir Bhatti. He's a board member of the Green Challenge Fund. He has a rich career in the foreign service officer with diplomatic experience spanning over 18 years. That includes assignments at the Foreign Ministry and Pakistan's mission abroad in both bilateral and multilateral arenas. He specializes in sustainable development issues, particularly in energy and climate change. He has represented Pakistan at numerous forums, conferences, and negotiations, including 2013 Agenda for Sustainable Development, Addis Ababa Action Agenda on Financing for Development, the 2015 Paris Agreement. He's currently serving as Vice President of UNFFC Conference of Parties. He's also the co-chair of DCF board in 2020, co-chair of GCF's private sector advisory group. Thank you, Noman Saab, for joining us.
Thank you, Ali, and looking forward to join the panel in our discussions.
Thank you. Lastly, we have with us Mr. Tala Khan. He's Executive Director, Pakistan Environment Trust. He runs PET, a non-profit convening Pakistan's top companies to commit to net zero targets. He has 14 years of experience advising public institutions and private sectors on using advanced data analytics to address organizational issues. His previous role at McKinsey entailed leading transformation projects with leading and developing cutting-edge offerings to drive upscale transformations. So now with these introductions, I'll kick off the panel. How do we get to net zero and what are the financial and technical challenges? I'll open with Tala Khan, Executive Director of PET. So and this will be a good opening because we want to establish at the very start of what net zero is, the Net Zero Pakistan initiative. How is it relevant for Pakistan, and what are the stakeholders doing about it? So, Talha, if you could enlighten us.
So thanks so much, Ali, and it's amazing to be here. Assalamu alaikum, everyone. I'm just building on what Ali was saying at the beginning. I mean, just to add to the intro, I mean, Net Zero Pakistan is convening the 22 textile companies that Ali was talking about to commit to net zero. And that's one of the programs. In addition to that, we're working on developing the voluntary carbon market in Pakistan as well. And there are other exciting initiatives. But I would just love to, I mean, to answer Ali's question, I want to build on the last panel. I was listening to the last panel and Sajjad made a really interesting point around the value proposition, the narrative, right? Which really hit home for me, because I think there's so many challenges that we're facing in this whole green narrative in Pakistan that there was a tendency for us to lose the forest for the trees. I mean, sometimes we just are not able to look at the broader thing, right? And that narrative, being able to frame that around net zero has been quite effective in engaging the industry so far in our experience as we've been speaking to them. So let me just share that perspective with you in terms of what we've seen, and then we can talk about the Net Zero Pakistan as well. I mean, one of the questions that we generally haven't answered effectively in the country is this whole net zero narrative that is going on and the whole global ambition. Well, like, what are the implications of that in Pakistan beyond the whole 1.5 degree scenarios and the heat wave that we're facing? Like, what does it really mean for our economy, right, as the world is moving towards net zero? And to do that, I want to refer to a recent study that McKinsey did, where McKinsey looked at 70 countries globally that contribute 95% to the global GDP. And the question they were trying to answer is, okay, what is the cost of getting the world to net zero? And they mapped these countries across two scales. On one side, and let me just, if I could quickly just share my screen, I promise I'm not going to share my screen again after this, which is they mapped these countries across two scales. One of the scale was the transition exposure, which basically means what will happen to the economies of these countries as they get to net zero. And the bottom, it was the GDP per capita, which is the economic strength of these countries to be able to tackle that challenge themselves. And as you can see, I mean, there are three very clear insights. One of them is that Pakistan is on the extreme top left of this map, which is beyond the fact that we're extremely climate affected and all of that, which basically means that when the world moves towards net zero, Pakistan's economy will face the biggest heat because our supply chains will be disconnected globally. We're extremely exposed to high emitting manufacturing sector, agriculture, and as we were talking about energy beforehand, our energy is heavily reliant on fossil fuel. So compared to the rest of the world, it's very difficult for us to get out of that and make that move and transition as the world moves towards net zero. And then on the other side, we do not even have the economic strength to solve this problem ourselves. I mean, this report highlights, it talks about the global cost, but specifically if we use those numbers, this report highlights that Pakistan needs to spend roughly somewhere between $50 to $60 billion annually just to be able to meet that net zero ambition, which basically is almost a quarter of our GDP, a number that we actually cannot spend ourselves. But there is a bit of hope in there as well, which is that, you know, the whole world needs to spend around $9 trillion to get to net zero. And that money is sitting at the bottom right countries and it needs to move from the bottom right to the top left countries. So there is, there is some sort of hope in there, which is like if we're able to create the right programs and platforms, we can rally the world to mobilize that kind of capital that we need to solve that problem in India, Pakistan, and Bangladesh, right? And then I think just building on that, the question that we are all answering right now is, which initiatives can actually help us move closer to that, and how do we rally the capital around that? And that's where Net Zero Pakistan point, and then specifically to Ali, to your point, the question comes in, which is when we launched this initiative around 6 or 7 months ago, the idea was that we need to sort of get companies to commit to net zero, but then also to enable and create an ecosystem that allows them to meet that ambition. And that ecosystem has specifically 5 things that we're focusing on. There's one around capability building, which is how do we build the capability of these companies to actually measure their GHG footprint and get their sort of scope 1, 2, 3 emissions defined and then set their targets for reducing these emissions. How do we engage with the government on policy side to make climate friendly business policy? How do we effectively brand this whole narrative to put Pakistan on the map as a green focused country in terms of the initiative that we're driving, so that we don't just do stuff in isolation, but actually tell the world about it as well in the right way. There's a whole pillar around a roadmap, which is how do we develop the national roadmap for getting to net zero across different sectors. So we're talking about building as one, power is another one, agri, mobility, and you can name them, right? And there's a last pillar around catalytic finance, which is how do we develop projects and programs at which we can mobilize capital at scale. So the ambition that we set for ourselves is that we want to mobilize around $1 billion in supply chain decarbonization for Pakistan in the next 3 to 5 years. And that can only happen by developing projects that have a system-wide impact. So then when we took this narrative and a very clear framework to the industries in Pakistan, I mean, textile sector, kudos to them, was the first one to jump on board. So we very quickly got 22 or 23 of the leading textile companies jumping on board. They made that net zero commitment. I mean, we can discuss, and I think all of us know there are multiple reasons behind that as well. The kind of push that they're getting from the global brands, as well as the need to expand the export market and the regulatory policies. But they were the ones to jump on board, and now we're going beyond to other sectors as well. The bit that is helping us turbocharge this further is that beyond this commitment, having this framework, and that framework is not stringent on building our own capability, but actually partnering with global organizations to deliver that. For example, when it comes to capability building, we're partnering with the likes of CDP, which is the largest global carbon disclosure platform, as well as other institutes to help build that capability in Pakistan. When it comes to branding, we're partnering with global organizations to get access to the, I mean, Race to Zero is one of the examples where these companies end up committing to Race to Zero, and we were able to display that at the UN and COP conference as well. But this in a nutshell is the narrative. The challenge we're facing is that going beyond textile is a bit of a challenge, because as we're seeing and engaging with other companies, there are 3 drivers that get companies to commit to net zero. One of them is the end user asking for it. So if your customer is asking for it, then you will go for it, which is the case in textile. Your investors asking for it, but the investors in Pakistan are mostly family-owned businesses. So generally they don't ask for it. And then the third driver is the policy, right? If there is a policy push or a push from the government to do that, right now, considering our context, it's really difficult to drive policy level levers to force companies to make such a commitment. So far it has been a customer push, which is really coming out in the textile sector. We're hoping to go beyond that to other sectors as well, but that pace might be slightly slow. But I'll stop here, and I'll, happy to sort of answer more questions later on. I think Ali got bored and ran away.
So we understand that financial incentives need to be in place for the end consumer. What sort of help is industry getting from the government at this point in time with the policymakers?
Ali, is that for me or for anybody else?
It's a follow-on question to what you said about incentives.
No, I think the government is pretty gung-ho about the whole narrative. For starters. But the challenge that the government, I wouldn't say the challenge that the government is facing, but there needs to be a bit more engagement with the private sector. And that bridge currently is not there yet. So one of the things that we are engaging with the government on nowadays is talking about some sort of bodies through which government can get structured feedback from the private sector on the kind of policy levers they would need. That is one. The second thing that is absent from our whole discussion at this point, and not just discussion, but actually from the context, is data. So right now, nobody actually knows what are actual carbon emissions, right? I mean, even the numbers we submit are a bit up in the air. So we do need to have a very clear view on what actually are we emitting across different levels, and that data needs to be there. Because once you have that clarity on data, it might be a bit sort of top down. I'm not asking for 100% accuracy, but if you have some sort of baseline established, then it's effectively, then the government can make some policy on it as well. In the absence of any data implementing a policy, nobody has a clue what are the implications of it, right? They can put on some sort of carbon tax or some sort of emissions cap in the market, but then they have no clue what is the impact that will have on the SMEs that don't even have the capital to reduce their emissions. So it's very complex to create policy in the absence of any data or any baseline. So we're trying to get there, but we have some sort of data established, and then we work on policy building on that, rather than policy in isolation of any information, right?
So we've learned a great deal about the ARA policy, and there's a lot of focus on the power sector where renewable energy is concerned. Is there a connect between the net zero initiative and the ARA's policy? do they speak to each other, or are they completely detached, or do they need to speak to each other at all?
Sorry, Ali, forgive my lack of knowledge, but can you explain a bit more about the ARA policy, or I might be missing something?
Alternative energy and alternative renewable energy policies was introduced in 2019.
Yeah, no, I think there is. So here's the risk I see. I think the policy is fine from that angle. When it comes, I think there are two thoughts over here, right? One is that the benefit of net zero is that net zero gives you the North Star around which you can align everything else around it, right? So your green building policy, your agriculture policy, your and mobility policy that you have on the automotive and EV sector, if you frame everything around net zero, it becomes very easy to get everything in line. That is one. The second thing is it becomes very easy to communicate internationally as well. Because on energy, we're 100 years behind where the rest of the world is probably when it comes to a lot of the different initiatives, right? So when we tell them about net zero, then it's easy for them to understand what are we aiming to do from all of this. So these are just two immediate thoughts. The third thing, which is a bit of a challenge, is while we're coming with ARA policy, we're investing in coal. And we're putting up new coal power plants as well. Now, I do understand that we need to meet our current energy needs, and that's the only way we can get our energy, right? But here's a risk you will face. You'll invest in coal. It'll take you 30 or 35 years to decommission those coal power plants. And then once you're trying to decommission them, then you're already, in the next 10, 15 years, you'll already be facing carbon tax from the international markets. So you are solving your energy crisis today through coal, but then in 15 years, you'll be paying higher tariffs on your export and imported products because of the coal that you put in today. So there needs to be some sort of energy planning that needs to be in place, that if we're going to put up these coal power plants, when are we going to decommission them, and how are we going to, install renewable energy plants, and how do these phase out and phase in, right? Otherwise, you'll end up with a lot of stranded assets worth billions of dollars with no use, and then we'll have the same story going on in the next 10 years that we're doing right now with our other power plants, right?
Great, thank you. With this, I'll move on to Sophia. She's a founder of Linked Things, as I've mentioned before. Sophia will talk to you about the demand side inefficiencies that exist as a barrier in the face of achieving net zero. What sort of steps we need to achieve to break those barriers using technology and investment tools?
Thank you, Ali. I hope you guys can hear me. I'm having like a little bit of internet issues here. So I just want to highlight a few things that we have seen over the last 6 years. We work extensively on the industry side, building IoT solutions, which actually help us extract the data from various machines, motors. And similarly, we have also worked with businesses that commercial entities where a lot of cooling systems are used. So in Pakistan, I don't think so that it is major heating systems that are consuming our energy. These are mostly cooling systems that are causing, imbalance. And most of these systems we have, for example, worked with data centers. We have worked with, cold chain. We have worked with bank ATM sector, with offices, buildings. And, our cooling systems are extensively inefficient. There has been very little investment, and we all know how the market works, that once we buy an appliance, it just continues to run till it really says I cannot run now. So complete breakdown. So we have seen a lot of inefficiencies, and so I would suggest that we have some kind of study to actually identify the problem on the demand side. There have been the limited work that we have done compared to the whole scope of work in Pakistan. We have found these appliances on highly inefficient. Even if we talk about cold chain, there are thousands, 20,000, 40,000 refrigerators in the retail that are just lying there, misused. Nobody is actually monitoring their efficiencies. Similarly, air conditioning. So there is like a whole lot of problem over there. The limited studies that we have done shown that the data centers, especially like the small time 3 racks, 4 racks data centers that have been established in the industrial sector, you can utilize these small cooling controls air conditioning controls, maintaining the temperature, and these things can save up to 40% of energy. So somehow, as Talha was saying, like, data is important, and we have to also build narratives around the data. The both things that Talha talked about, that, you've got access to data. Obviously, as a small commercial entity, we have worked very limited, but I can tell you, like, at the tip of the iceberg, there is a huge problem down there. Similarly, if we look at the industrial sector, most of the industries, like, obviously run on motors, pumps, and compressors. And there are big names, textiles, as you have been talking about, but there very little investment going into the upgrade of the appliances, motors, pumps, compressors that they have bought, and they run on inefficient mechanisms, on an inefficiency levels, basically. And then the maintenance issues with those machines, because most of the time, these machines that we buy, our industries buy, are also out of warranty. So there are these kind of compound problems that, when you try to fix it, then you actually fix them by replacing slightly efficient with more inefficient parts. So these are the things that we have noticed so far. But there are solutions definitely available, as we have seen that at least on the cooling side, like, when we're talking about business side, commercial side, there are definitely ways you can actually optimize the usage and increase the efficiencies of these.
Great, thank you, Sophia. We'll turn to Usman Sheikh. He's the CEO of Jolta Electric. And like I said before, the discussion would be amiss if we didn't touch about the EV policy. We've spoken about the ARE policy at great depth in the session, in the morning sessions. So Sheikh Saab, can you share experience in the electric vehicles market in Pakistan, given that you were the first entrant? So what is the potential of the market, and how realistic is the government's vision of making this a major pillar of clean and green energy in Pakistan?
Thanks, Ali. It's a very good question. Assalamu alaikum to everyone. Bismillahirrahmanirrahim. So I will go through the journey of how we be the first entrant in the market, because I have been spent quite a time in China. So where I learned that how Chinese economy grew, and even in 2008 when the Beijing Olympics came, so they decided that in Beijing and Shenzhen, all the taxis should be electric taxis. So that was the vision of that big nations, or the developed nations have. So it's all about the will and the vision that we need to acquire in terms of the large, institutions and policymakers, that first we have to adopt up to the vision. So goes with that, in 2018, when there was no policy, we started EV company in Pakistan with the vision that we will create brand awareness, we will create the awareness of EVs and transport sector, automobile industry, that, we are burning coal, we are burning, and this is something that we have to switch one way or the other. And we have to part of the value chain ecosystem. It's not about creating or selling your electric bikes in Pakistan. It's about you should be part of the value chain in the bigger perspective, that how you can be part of the export and fulfill the demand of the world. So with this vision in mind, we started off doing R&D and did frugal innovation, that how we can use the local parts as much as we can and import less material from outside of the, import not more than 20%, so that we have our own indigenous product made in Pakistan. We started off, developing our own electric motor. So basically EV has, two basic parts. One is the motor with BMS and the controller and the battery. So we developed the motor, we had this thing in mind, but once we go to the market, before even the policy was derived, we got this information that how much is charging time, how much, is the cost. So we worked for 1 year for, developing a battery that can charge within minutes and has a life of more than 10 years. With this, we made the sample, we went to different ministries, we gave them the demo, then we pushed them to bring a policy. We made the draft policy with other stakeholders. And finally, because of the vision of the ex-Prime Minister, they finally, in 2019, they made the draft policy approved. But let me tell you, the policies are always in good shape. It's all about the implementation of the policies that comes after, and has a huge impact, because nobody is so visionary in terms of business community that being patient and investing a lot of money and see the bigger picture in mind. So with the policy, it approved in 2019, but it took 1 year for the government to pass it to the cabinet in 2020, and still 6 to 9 months for the SRO to be released in December 2020. So you see that how much patience you require in order to take this challenge. And finally, because we are pushing it, we got the EDB license in January 2021. We started our production in March 2021. And July 2021, the ex-Prime Minister inaugurated our electric bike that created a brand that actually pushed our sales in the market. And we started selling our units starting from 500 units per month, reached to 3,000 units in last 2 months. So we have sold around 10,000 units so far, and we contributed around approximately 2 million kg of CO2 emission saved. So this is our contribution to Pakistan, that we have saved this amount of CO2 emission. And as per the policy, this 1% custom duty, 0% on import sales tax, and 1% sales tax when you are selling your electric bike. I was part of the discussion early. I was listening, and we were talking about the residential buildings. We're talking about, but we have to know that how much effect of CO2 in the different sectors. So 25% is the contribution of CO2 in transport sector, and 51% is the industrial sector. So even if we focus on just industry and the transport sector, we'll able to save 76%. So we focus on transport and focus on electric bikes. So the market is so big, there are around 30 million.
Sorry, when you talk about industry, are you talking about manufacturing, or are you talking about specific?
I'm talking about the manufacturing. So 5% is of transport, and more than half is related to motorbikes, because there are 30 million motorbikes on the road. Every year, 3 million motorbikes are being sold. And we have just, started off with 10,000, because, in order to create awareness, brand awareness, making people, trust made in Pakistan product is difficult. And, we started telling everyone to be part of this ecosystem, because unless we have a dealer network, we have the vendor network, we have so many more assemblers coming and joining in this area, the demand will not be created. And there's always a chicken egg problem, because the chicken egg problem relates to we need infrastructure of charging. Unless there is charging infrastructure, people will say that how will I charge my car, how will charge my rickshaw, how will charge my electric bike. So and long queues will be in place. So government has to come up with some model swappable charging stations in order to encourage the masses to this is the area that the new entrants can do their business in this area. What we did, we never went to the old dealers who are already dealing with the motorbikes. We created new teams of dealers who started their new businesses with us, and they learned with us. And now we have more than 100 dealers. We have a team size of 100 people. We have 6 models, and we have our showroom in Lahore, Karachi, Islamabad. Even in spite of having all this investment with our own pocket, we are still able to sell not more than 10,000 electric bikes in 1 year. And what I can see is in the next 10 years, the government has aggressive target of achieving 30% of the total transport should be electric. I would realistically say that it will not be achieved because of the current situation and the current policies, the current import limitations. And once the policy is there, it took 1 year for us to actually implement those policies. We were not getting 1% custom duty. We were not getting 1% sales tax. We were getting 70% of sales tax, 5% of advance tax, it will accumulate to 24%. And we fight our case with EDP, with FBR, with custom, and finally in 1 year, we're able to, reimburse our amount. So the challenge is the effective implementation of the policy and with no delays, with minimal, one-stop solution, and that can bring ease of business for the aggressive targets we have set in. So I can see is around 7 to 10% we can achieve to electrify this, transport sector by 2030. And the bikes and with this, we can able to save around 2% of total oil import on GDP. And that also has a good impact, even if we're not able to achieve the 30% target. Rest is that, the policies should be aligned with encouraging more manufacturers rather than traders. Now the policy states that, if you import finished goods like kit, it has less duty. But if you are going to import raw materials, it has a lot of different checking points and more duties. So if you want to, develop your own motor and you want to just buy the materials, if you want to, have manufacturing of lithium battery plant, so there are, if you, import the finished lithium battery, it is cheaper. But once you import the raw material and made the battery in Pakistan, it is expensive. So until unless we have a policy that encourages manufacturing and local manufacturing, that creates local raw material for the finished goods that we are making, until unless we will not be able to, balance our export and import trade deficit. So having said that, the best advantage of this, having the electric bike is because of the rising inflation and the petrol prices, it's almost 1/6 of the price. So you are saving around 8,000 per month with this electric bike that we have made, because it charges, only 30 rupees and you can drive for 70 kilometers, respective of, having 230 or 40 rupees petrol and you also drive for 70 kilometers. So that's the difference now it has arisen because of the rising petrol prices. This is the journey, and this is I have shared that how much the government can achieve this target realistically. Thank you.
Thank you, Sheikh Saab. We'll turn to Mariam now. She was the CEO of Insta Energy, a very unique business, as it is first of its kind. It's in the sense that it is woman-led, a woman-led business in the renewable energy space, providing solutions to residential, commercial, and industrial projects. She's playing a vital role in the net zero target. So Mariam, based on your experience, what potential do you see for other women-led aspiring businesses in this space? And what are the challenges and barriers that they can potentially encounter?
Ali, I would say it's a wonderful space to be in, and I really feel privileged. A lot of people actually think that it is very hard for women to be in this business, and it's not an easy space to be, but I've had mixed experiences. I've had some people who have encouraged me a lot, supported me a lot, both in the public as well as the private sector. I have some customers, who were close to me also, who looked at me with disbelief when I started off. But there were a lot of customers also who were very encouraging and open to the idea of a woman entrepreneur being in this area. So, that was my experience, so positive and a bit of a challenge. But I would also encourage women especially, but everyone to come into this field. I've been listening to a few panels before, and I think it is very, very important for us to get educated in the area, in this area of renewable energy, as well as sustainable living and coming to, goal zero. Because the biggest challenge that I feel is that people do not really understand the impact of all these activities on the climate change. Yes, we've started talking about it, but we are really, really far behind what we are doing. You spoke about ARE policy and net zero, and if they talk to each other. In my opinion, they don't, unfortunately. ARE policy is a very good policy, but there are a lot of doubts about the applicability of it, the practicality of it. But at least we have a policy. At least there were some goalposts. But if I look at the net zero, I don't think Pakistan is working towards it. Yes, there are a few industries that have come on board, but if you look at net zero, it's not only about carbon emissions. And I think majority of the discussion that takes place about carbon emissions and not about the carbon sinks. I mean, Pakistan had a brilliant example of deforestation and reforestation and then billion tree project. And if we are fortunate to continue on projects which increase the carbon sinks also, only then we get to the net zero. So, that knowledge and that information has to come to both men and women. I encourage women to come into this field because it's not difficult. Believe you me, it's not difficult at all. It seems so, but it is. I've been a banker for 17 years, and I think it's the same thing. It's just the same thing. It's a progressive field. It's a field that has a lot of technological advancement coming in. So instead of spending our time learning about things that are going to be obsolete in the next decade even, let's learn and develop and grow the areas that are of the future and where we really make a difference. So it's wonderful to be in the RE space. I really encourage both men and women, but especially, because I'm representing the women body here. I'm part of Women in Energy, which is an association of all these women who are in the energy sector and playing their part, big or small. But as you rightly said, I think I remember it correctly. One watt at a time. I think this was said in the conversation, and it really, I found it very good because these are the little contributions that we have to make to create an impact if we have to get to net zero.
Excellent, thank you. That was very inspiring. We'll end with Numan Bashir. He's a board member of the Green Challenge Fund. So Numan, can you talk about the nature of projects that GC has approved for Pakistan? Given that it's a very big global and reputable fund, what are its priorities in terms of funding and investment with regards to Pakistan going forward? And obviously funding will play a very important role in getting to that net zero target.
Thank you, Ali, and it's very interesting to be here in the panel. I've heard very useful and insightful interventions from the other panelists. I think they have given expose of the business models and the aspirations that they are carrying. But I'll just start my thoughts with reflection on the net zero. And because I would be speaking a bit off the mark, the way you have conceptualized the discussion on the net zero, for a number of reasons. And I just like to highlight here upfront that the net zero is not an agreed international concept as yet. It has been an aspiration from the developed world that a net zero concept shall be adopted by each and every country, be it may a developed or a developing countries. In case of Pakistan, when we talk about the net zero, we had a lot of discussion about it, and I think there are a number of nuances which are involved here. Because it is not much different from when we talk about the mitigation, that all efforts which are to be done in the domain of mitigation fall under the category of the net zero aspiration. However, setting a target can have a number of consequences, and having an agreed international target certainly is going to have consequences for Pakistan's economy. Just to indicate a couple of issues that the international debate has always surrounded around who pays the cost. For example, if a climate insensitive development project is conceived, it may cost rupees 100. But if climate sensitive technologies and climate smart technologies are introduced in that, the cost can can increase significantly. So it's always a debate that who's going to pay the incremental cost. Developed countries have been very lukewarm in responding to their obligations internationally when it comes to climate finance. The $100 billion goal has not been met. The entire financial flows have been shifted from the development finance to, by and large, the climate finance. And here I must say that GCF is for instance, is the only climate fund which is dedicated to cater for or to support action in the developing countries in the domain of climate change. And for the panelists and other members who are attending this session, I would just like to highlight that GCF has a pledged amount of $18 billion, has already committed over $10 billion. The amount which has been dispersed by GCF is somewhat around $2.5 billion. There are over 196 projects which GCF has approved so far. But the GCF has not endorsed the net zero concept. It has two tracks of financing projects. One is in the context of mitigation and the other in the context of adaptation. There are 8 result areas which the GCF focuses on, 4 in the context of adaptation and 4 in the context of mitigation. In the context of mitigation, the priority sectors, I think all relevant colleagues are here. And first is the energy sector. Second is the transport sector. Third is the building sector. And the fourth one is the forestry and land use. So these are the 4 areas in which GCF actually looks forward to its investment. And it has a modality through which it can be accessed and GCF can support climate action. It chooses, I think, over 5 types of financial instruments. These include grants, grant equivalents, concessional, highly concessional lending, equities, and guarantees. And then there's a mix of these instruments when it comes to different projects. As far as Pakistan is concerned, we have, the board has approved so far 4 projects over a cost of like, the GCF investment covers over $140 million. These includes both grants and concessional lendings. Off the cuff, I can say that there's a $38 billion adaptation project in the shape of GLOF, the glacial lake outburst floods. Then the rapid bus transport system in Karachi, which is the GCF contribute $48 million, $10 million in grant, $38 million in concessional lending. Then we have one more project that is the agriculture sector. The entity accredited, the executing entity was, I think, FAO. And the last one, the recently approved project was of the GS Bank project in the energy sector, which is like $9 million in guarantees and $1 million in grants. So GCF has a diverse portfolio in the context of Pakistan. The issue I'd just like to highlight here is about that there's not much awareness in Pakistan about the GCF. As a board member from Pakistan, my responsibilities include that the GCF policy framework, its business model, its monitoring frameworks, its regulatory framework remain conducive for investments in Pakistan. And we do not want to create, we try to ensure that there's no such barrier which restrict investment or which restrict channeling of GCF financial flows to Pakistan. These all 4 projects which I just mentioned, 3 were done by international entities. Only one was done by GSBAN, which is a direct access entity, which is accredited to the other direct access entity is the NRSP from Pakistan. So anyone who has to access the fund has to channel from these 2 entities when it comes to the fund resources. One of the most significant element, and that's what we are trying to pursue. It's a very political board. It has a membership of 12 members are from the developed countries and 12 members are from the developing countries. So it's always the agreed policies are a mix of a negotiated settlement. So our priorities have been in the GCF in the context of private sector is that we need to ensure that our domestic private